Break a leg.
All right. I think that's funny because you know I'm in a cast right now. Good morning, everybody. Welcome to day 3 of the MetaStock conference. It's great to have you here. Thanks for coming. Appreciate you. I'm going to go ahead and start immediately with the legal disclaimer, and I'm going to almost recite it from memory. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. I hope you enjoyed that. I do hope, and the goal that I do have for the event, one of them, is I hope that you learned something. And so we have a lot of really good speakers today. And so far the conference has been going great. Thank you for coming. Thank you for being part of it. Raj, thank you for saying hello. As you come in, make sure you say hi. We want to see who you are and where you come from or where you're at. Anyway, if you're watching this on YouTube, make sure to like and subscribe. It helps a great deal. I appreciate it. Greg appreciates it. And, you know, all that kind of good stuff. What else? In terms of the recordings, I've got a number of questions about where the recordings are going to be. How can I view all this great content later? YouTube.com/metastock is where you can get that. We also are going to give away a number of prizes, and we've already given away a number of prizes, but we're going to give away a number of prizes as we go through the sessions the rest of the week. If you're watching us on YouTube and you have not registered yet, go to metastock.com, click on the big banner at the top that says register now for the conference, and you too could be eligible to win prizes. I think that covers mostly what I want to just say real quick before we kick off. I do want to thank our sponsors. Stocks and Commodities Magazine has been a huge sponsor of the MetaStock events. They've been sponsoring us for, gosh, I think 17 or 18 years now. And we really appreciate it. It's also a great magazine. They publish it. You can get a subscription. It's like, I think, $90 a month. I could be wrong there. But as part of that subscription, you get all of their articles they've ever created. They've been publishing them since 1982. And you can do that if you just go to traders.com. The other thing I want to do is I want to call out our sponsor, the Traders Forum. Traders Forum's been a great adventure. You can set up an account for free. This is thetradersforum.com. There you can learn about markets, talk to other traders. There's lots of educational contents. We do interviews all the time with almost everybody. Here we'll sit down and do a podcast type format interview. We've talked about everything from Canceling by Bill O'Neill to Ichimoku by Goichi Hasada. It's a great place to hang out. I get a lot of really good ideas there. It's helped me as a trader, and I want it to help you too. thetradersforum.com. So, of course, we are MetaStock. We're going to be talking about MetaStock all week long, and MetaStock is the software I use to trade. We do have specials on everything that we are talking about this week. The first thing I want to talk about, though, is our software has won the best software in its price category for 32 years in a row. If you pay for a month, we'll give you the second and third month for free. Prices start at $75. That'll get you going until December 17th at about $25 a month. So you can do anything we talk about there. If you ever have any questions, you want to talk to us, you want to get any more information, give us a call, 800-882-3040, metastock.com/sales chat. Greg, thank you for posting all the links for me. It makes my job easier. Our first guest today is Price Headley. Price is actually the very first person that I designed and helped create a product with. Price has been that would probably be 20 years ago too. Price was always somebody that I had a lot of respect for in the industry. He's definitely somebody, just to kind of give you some information or some background on him, he's in the Traders Hall of Fame. Back in the day, there was a market timer digest. I still think he does it. I don't know if Price participates anymore, but you could submit all your picks, and he was rated very quite a number of times as a Timer of the Year by Timer Digest, a great technician, a great mentality. I think the mentalities I've learned from Price, I've tried to employ professionally as well as in the markets, because he talks about really going after the big opportunities and the big ideas. And that's what all of his work has been around. So I've talked enough. Let's get Price on here. Price, let's go ahead and get you started.
Good morning, Jeff. How are you today?
I'm great. Let's see.
Well, thank you for having me. I'm thrilled to kick off day 3 of the conference here. Let's go ahead and share my screen. Let me know if it's coming in crystal clear here. We're going to talk QQQ options with the NASDAQ 100, obviously a huge leadership area.
Yeah, you're coming through just great. And I can hear you great too.
Awesome.
So I'm out of the way. It's your turn. Go.
Well, thank you, Jeff, and good morning, everybody. Thrilled to be with you. Like Jeff was alluding to, it's all about education first, and that's why these conferences are so great, with lots of fellow speakers and traders to share what we've learned. For me, 36 years and counting in trading the markets. Stocks and options is mainly my focus, but of course, you can apply these principles to pretty much any vehicle you want to trade, because the markets have their trending phases, they have their trading range phases, and it's really about picking up the right phases. Like Jeff said, I'm really looking for the big opportunities. That's my company, bigtrends.com, which I launched 26 years ago, is all about, getting you into the best movers or the potentially best movers, right? It doesn't mean every trade we make is going to win, right? We're going to have trades that don't fire after they look like they're taking off. And so part of it is knowing how to stay with true breakouts, but also how to get rid of trades that aren't doing what they're supposed to do with reasonable risk management. And so we're going to talk about both sides of the coin today and talk about the QQQ options, because as you know, the NASDAQ 100 QQQ has been such a leadership area thanks to stocks like NVIDIA, Apple, Microsoft, Meta, pairing up Facebook, and Tesla, et cetera. You can go through all kinds of different big names, but the reality is a lot of those big, what are now called the Magnificent Seven stocks, have been the key driving forces in where the performance has come from, thanks to the AI revolution, right? Artificial intelligence has been driving things. And there's a lot of people that say to me, oh, it looks like the next internet bubble. And my work is designed, that's actually how I launched Big Trends, is basically profiting from the internet bubble in the mid to late 90s with lots of opportunities, capturing them while the bubble's inflating, but also hopping out as the bubble is starting to roll over before it truly bursts, right? So it's about taking advantage of these kind of big trends and big puff ups of the bubble through, and people say, oh, I don't want to trade bubbles. You're missing opportunity if you're not trading those big inflation points. And with the reality of inflation, even vehicles like gold have been benefiting from these methods too. So we're going to walk you through it. I'm going to talk about 2 techniques I use: the Williams percent R, the percent range indicator, and the average true range, which is basically used by us to define what kind of option we want to buy, depending on how much volatility has been in that recent ATR calculation. We'll get into that. As we get into it, first, I'll remind you that the information provided in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards. Let's face it, they also have large potential risks. You've got to manage the risk on every trade that you put on. We'll talk about how we do it here with the QQQ options. Remember, the past performance of any trading system or method is not necessarily indicative of its future results. So see our terms of use on our bigtrends.com homepage for more information. So why do I love these QQQ options? A few different reasons. Like I said, first of all, they're the leadership area, right? So when the money managers want to get more exposure to the market, they're usually going more aggressively into vehicles like the QQQ, even preferred over the S&P 500 or SPY, because you get more bang for your buck, what's called beta. That's the extra kicker to the upside on the growth stocks, particularly technology. But of course, when they go down faster too, right? So we think this is a great area to trade options on. And QQQ options actually have expirations every single trading day. So it gives us maximum flexibility to choose our expiration. This strategy I'm going to teach you about today is not a widows and orphans strategy. It's a quick strike in one afternoon, out the next day, or no later than 2 days after we get in, right? So we're looking for fast moves without ever having a day trade. I'm going to show you a bunch of charts, success stories when it works, how do we get out when it doesn't. And we call this strategy our QQQ options playbook, because my philosophy when I launched Big Trends 26 years ago in 99 was that basically we were all about that we've got to educate people on why. It's not a black box. You know, once you become a subscriber, we teach you the ins and outs of the system in total detail. We give you, basically strategy sessions and in-depth insights. So you can basically customize your charts, use your MetaStock charts to basically, see exactly which techniques and what parameters you want to use. So, and then we fire out trade alerts to you in real time. Like I said, I've been trading for 36 years and counting, and been blessed that, like Jeff said, that he helped me to create our Big Trends toolkit for MetaStock, which he'll tell you more about after my presentation. That basically it's been a great tool to help me scan the markets. There's thousands of potential vehicles you could trade, and the biggest challenge we all face is information overload. You've got so much coming at you with all the vehicles you could trade, with all the noise of all the different opinions out there. Let the chart tell the tale. So our whole approach is a systematic chart-driven system, and then we apply options to it. So let's kick off today's event looking at a recent winning trade example, and then I'm going to get into more detail on the parameters of the QQQ options playbook system. So what we have here is a daily chart of the Qs. You can see it's up to date here through just the action that we had back on Monday's pop to the upside. And you can see here that our system was picking up that we should be buying calls on the Qs back on 9/11. 9/11, of course, had the 24th anniversary of that 9/11 tragedy. And it's been interesting, and I've mentioned for a number of years that there's a real patriotic bias to 9/11. You've seen the Dow was up, I think, over 500 points that day on 9/11 this year. And so it's just an interesting thing to watch those little seasonal trends. But the key is look at the follow through, right? So our system said, guess what? The percent R is down here on this blue line here. Percent R means percent range. Percent range, as the name implies, means that if you're trading at the high of the recent range, which of course where we closed was a little bit off of that high, but that day's high was the highest that the Qs have been in our look back period. So if it closed right in the high, that would be 100% reading, meaning you're at the exact top of the look back range. You say, hold on, why would I buy something at the 100 percentile at the top of the range? Well, what happens with these ranges is that these ranges turn into trends. And for me, the definition is that we get at the top, it's kind of like the 80-20 rule, the top 20% or so of that range, and you see that we keep on staying in the top 20% of that range. How do we stay there? Because we make higher highs and higher lows, right? You can see off of this look back period, just in that recent period, the market was starting to uptrend. And so we were starting to break out through our kind of upper threshold here back earlier in September. But you can see that our system says we also want to see we're getting a nice positive close relative to where we were the day before, relative to how we opened. We're looking at all these candle patterns to go with this unique kind of super strength reading on the percent R. And so we said that's a good chance to bet on follow through. So how do we bet on it? What we do is we say, okay, look, that was September 11th. Well, we had, of course, that was a Thursday. Then we had the last Friday, the 12th. Then, of course, the weekend, right? So the markets don't trade on the 13th and 14th that past weekend, right? So they trade Monday through Friday. So what we do is we count out 3 trading days from when we're getting in. And by the way, we're getting into these trades typically in about the last half hour before the QQQ options close, which they close at 4:15 New York time, Eastern time, 15 minutes after the cash market closes. That's another important distinction to know, that, hey, if you got a signal coming in at 3:50 p.m. and you're like, it doesn't give me much time till the 4 o'clock, well, it gives you almost a half hour till the 4:15 close. We'll send it through real-time email and text alert. But you can see here, we told our subscribers, buy into these 585 calls and go out 3 days till expiration. Why do we do 3 days till expiration? Meaning, here we're in the 11th, so count out the 12th, that Friday, then Monday the 15th, and Tuesday was the 16th. Yesterday was the expiration of these, right? But we were out before that. We will never hold these into a final day of expiration. You probably heard of 0 DTE as being a very popular thing. Be very careful there, right? Because 0 DTE means you're trading the final day of an option's life. You've got very little runway, to use Warren Buffett's analogy. Like, he wants to have lots of runway. Obviously, we're trading the shorter end of the spectrum here, but we still want to know we've got runway to get in and get out before that runway starts to go away on that last day of the options expiration. So we will hold them 1 or 2 trading days. In this case, we held it 2 trading days. You can see that we closed it out on Monday when we got our double target. So we paid $288. How many of you have traded options? Let me get some feedback here. Type a number in your chat box. I'd love to get you engaged. How many years have you traded options? If you've never traded an option, type a 0 in your chat box. If you trade them for 20 years, type a 20. That's just something I'll just name numbers, not your individual names. But basically, I love to know numbers of if you're new to options or not. Because if we're new to options, you may not know what this 288 implies. It implies you're paying $288 for each option contract that controls 100 shares of the Qs on each contract, right? So we've got a new trader, we've got a 5-year trader, we've got more experienced traders. And so the idea is that new or experienced, this is just a really simple, easy way to convert from a underlying QQQ trader into the QQQ options trader. We're just buying each contract for $288 on average. We may say buy it up to $3, and some people might get filled at $295, $290, $270. We take an average over the subsequent minutes after we send out an alert to say, okay, real world average entry price is $288. So what we say is, okay, look, if you're in at $288, if you double that, it goes to $576. You take your whole position out. We like to use examples that suggest another 5-year trader. Good to see. Bottom line is that in options, that what we're looking at is that, say you put $1,000 in at maximum to every single trade. So you say, okay, I'll go up to $1,000 of maximum exposure. I will never exceed that. Well, how many contracts could you get? Well, you could get 3 contracts in. If it was $300 a piece, that'd be $900, right? So in this case, we're in for about $856, something like that. Well, you can see here, 866 maybe. The idea is that we can't buy that 4th contract that would push you over 1,000. That will automatically limit your dollars at risk. And our other risk management, we've got a couple of risk management techniques. One is the price stop. If we're shooting for doubles, we don't like to take more than half of that as a loss. So we put a 50% stop loss if it's not firing up and away on the calls or to the downside on the puts that we buy. But the idea is that we'll stop it out if we lose half what we put in. So if you put up, in this case, just under $900 in, you'd be risking something in the neighborhood of about $450 typically as your stop out point. Gaps can happen. You could lose more, but you could also make more. We'll show examples where you can make more than 100% on gaps in your favor sometimes. But don't expect that. Expect, okay, 100% gain, 50% loss as your parameters for what you're trying to take out of the markets. And you say, well, gee, I hate to lose 50% on a position. Well, you don't want to put it too tight of a stop, get flushed at a 20 or 25% stop, and then see it turn around and go on to your gain. We've seen that happen a number of times. So the idea is that we find that the 50% stop is appropriate uncle point. Say it's not a classic big winner once it's given up half of what you put in, but you can still put $1,000 in, make 1,000, lose 500. That's still setting the odds in your favor if you can have a reasonable win rate over time, which we'll show you how we've done over time in a little bit. But the idea of this is that, look, that means that if you bought 3 contracts, you would have made $864 in profit before commissions. Remember, commissions have come down dramatically. They shouldn't cost you more than $1 a contract at most, meaning that you have 3 contracts in for $3 on the way in, 3 contracts out, same 3 contracts in and out, $6 round trip. You should be taking down $858 at least after commission. And actually, some brokers are not even charging closing commission costs. So it's definitely something you should investigate if you're becoming more active to make sure your broker is very reasonable on your commission costs. But the point is, we call out these alerts, give you enough time to get in, and then we say, okay, now you've got your target and your stop. Take a double when you can get it, take a 50% loss, or in 2 days, if we haven't gotten either, we'll time stop the trade out by the end of the day. On the 15th, we already got our target. Look, the Qs went from about 582.5, 583 where we got in. They hit a high of about 590.5 on Monday, right? So we've rallied as much as about 7.5 points from where we got in. So you think in percentage terms, that's like 1.5%. 1.5% leading to 100% gain. You think of the leverage of that, you're talking about a leverage ratio there of, something in the neighborhood of about 60 to 1, 65 to 1. So the idea of this is, that there's tremendous leverage with these vehicles, right? Because that each contract that you paid less than $300 for in this case, it was controlling $58,000 worth of QQQ. So you bought 3 of those contracts, you're in for basically something like 175 grand worth of QQQ that you're controlling for less than $900. That's where your leverage is, right? But of course, leverage cuts both ways. Got to manage that. Remember, we're going to have winners, we're going to have losers. I don't want you to get too hooked into just any one example. But of course, that the key principle in that is that we bought something that was breaking out, looked like it was the top of its range, but actually it kept going with higher and higher highs. So our basic philosophy on our strategy guidelines for this QQQ options playbook alert service is that we're not going to hold them more than 48 hours, meaning we get in one late afternoon, we can hold it the next 2 trading days if we don't get our stop or our profit target, and then get out that afternoon before the next day's expiration. So it's still getting out 24 hours before the options would hit their official expiration at 4 p.m. on the expiration day. So we're out before that, the day before at the latest. We got several different %R setups. So I'll show you another bullish setup that's coming off of a more oversold condition, and then also how our bearish trades work for buying put options. We always use 3 days till expiration. So think about it. If we were getting in this afternoon to a new trade, which we may or may not, but the idea is that if we got in this afternoon, you take from today, of course, on this Wednesday, the 17th, and say, we'll count out Thursday, the 18th, Friday, the 19th, of course, no weekend trading. You go to the Monday expiration then on the 22nd. So the idea of this is that I'm not saying we're going to have one, but that's how we kind of count it out each and every trade, with giving you enough time to get in and out, enough runway to have your trade take off, but also to basically cut it short if it's not going to fly, right? So we're only using daily charts here. A lot of people say, why aren't you using intraday charts? My problem with intraday charts with this particular methodology is that your noise level will go up. And so with intraday, the more intraday you get, if you get down to 5-minute and 1-minute charts and tick charts, you've got tons of noise. And some people say, oh, I love to trade noise. I don't as a trend trader. Noise has faked me out of too many situations and hasn't let me ride the true trend. We feel like that a lot of battles are fought intraday, but the war is won at the close. And that's why we also wait to send these alerts to you until when you become a subscriber, we'll put them out around 3:40, maybe even 3:45 p.m. Eastern. You say, whoa, that's getting close to the 4 o'clock cash market close. But remember, the options trade till 4:15 on the Qs. So you're getting about a half hour to get in. That's why we recommend when you get set up with the email access, when you get signed up, we also recommend we'll send you a follow-up on how you can also get the text alerts to your mobile device. So that way, for me, I don't know about you, but mobile texts get my attention even faster than emails with the bevy of emails we probably all get, right? So the point is, want to make sure that you've got a couple different delivery methods to make sure you never miss a trade. Of course, our team's always standing by at our 800 Big Trends number. If you've got questions that think you missed something, you can call us. We'll validate we had a trade, we didn't have a trade. But the idea is that this is a really defined scanning window. I don't know about you, but as I go through my trips around the sun, the idea is that, you know, I value my time more and more highly. I want to make sure I'm not just screen watching all day. I want to make sure that I've got a specific defined window where we need to decide, are we doing a trade or not? So not just for you, but for me and my research team, we can just look at a market in that last half hour, and with a daily chart, it's like, okay, do we have the end of day setup that we're looking for one of these potential either call buys for the bullish setups or put buys for that particular put setup that's very particular that we look for on the downside. So if we don't have that, guess what? We don't trade. You never want to trade for just getting some action, getting some activity. You only want to trade for results when the odds are in your favor, right? Remember, we're playing a probability game. When the odds are in our favor, we're still going to have winners and losers. So don't ever load up on a trade where you think, ooh, this is that really great juicy opportunity that looks like I should go all in on something. Never do that. Never go all in on a trade. Be very steady and consistent with your capital allocation. You have plenty of trades with this system and plenty of profit opportunities, and then manage your risk when it doesn't fire. So with the 3DT, 3 days till expiration setup with these QQQ options, obviously, as I mentioned before, we were buying something for under $300 where it's controlled $58,000 worth of QQQ stock. So the idea is that you got plenty of leverage potential here. It's about using leverage wisely. Leverage is a double-edged sword, right? It cuts both ways. It can really benefit you when you're right. It can work against you when you're wrong. So we've got to manage that risk. I'm always talking about risk management. It's how I've been in the game for 36 years and counting in options, right? You cannot. There's been a lot of smart people that have blown up because they just got too overly confident on a particular trade setup or setups. And eventually that will catch up to you if you're too overly committed. So be steady on your capital allocation. Look at our average contract entry price, right about 3 1/3 It's about 3 contracts on average going back to the beginning of 23. Sometimes we get more, sometimes we get less. And part of that depends on the price of the option that we buy, because we look at recent volatility to determine if things have been more volatile, we may buy a higher dollar option to sort of limit some of our overall time and volatility risk compared to a little bit tighter market that we can buy a cheaper one and still expect to get enough of a move to get our target. So we adjust that for recent volatility. We will exit though after those 2 full days, 48 hours in, and we'll never get a day trade with this method because we're getting in that last half-hour window. The Qs can't move up or down enough in that short of a period typically to allow us to get our target or our stop. So we're in late in the day to get out by the earliest the next morning off of the open. So, but we will get the time stop after 2 days if we don't get there with our target or our stop. Now, why should you care? You can say, oh, you're cherry picking trades. Look at overall performance of all trades that we called out on this system, going back to the beginning of 2023 through today, and on all closed trades. So the idea of this is that, remember, this is past performance. Past performance cannot guarantee future results. Future results are going to vary, but what does not vary is our commitment to following the system for our subscribers. So we always tell you when to get in and when to get out. We never leave you hanging. We're assuming in this example that, say you took a model $25,000 starter portfolio and said, okay, I'm never gonna be in more than one QQQ options trade at a time. Okay, so you don't have to worry about getting loaded up and being on the wrong side of multiple trades. You got one position at a time. That means, okay, if I took, and starting off 20% of that, $5,000 a trade, and even as I grew it, I stayed with that same fixed $5,000 maximum commitment per trade. So as the portfolio grows, your actual risk is going down. As your portfolio grows as a percentage of your portfolio, it's going down. So now we grew it to over 130,000 this example, and $106,000 gross profit. This is gross before commissions and before subscription investment. You can see that it gained that 106,000 or 424% gross return. That $25,000 model portfolio growing to 131,000 before commissions and subscription investment, and that's over about what 2 3/4 years. So call it almost 3 years. And you're saying, okay, would you be happy with that in 3 years? Remembering that, of course, we've had a generally bullish environment through that phase. So we've had our share of shakedowns as well, right? So we've had some reasonable put opportunities there too, but mostly on the call side. We're going to definitely stay aligned with where the market is telling us it wants to go on a day-by-day basis. You can have all the views you want about where the market's going a year from now or 5 years from now. That doesn't matter to us. What only matters is what's the right setup for tomorrow and the day after tomorrow. Okay, we're very short term. I believe it's actually easier to predict the shorter term than it is the longer term when you think about where the markets can go while you're waiting for it to go up or down in your longer term view. So we just want to be using the charts to do that. Now, if you're a smaller account trader, notice you may not always get all of your capital to work. We might have $1,000 going into a trade on, say, a model starter $5,000 account. And it still did pretty well, up 380%, not quite as good as the bigger one, because it's not getting always. If we buy a $5.50 option, that's $550, and you're putting in $1,000, you can't buy that second contract. Sometimes you'll get not quite as much of your overall cash to work on an individual trade at a time with the smaller portfolio. That's okay though. You see, it's still done pretty darn well. 5,000 growing to 24,000. Remember, same gross before commission, before subscription investment. Of course, as you grow your confidence and grow your capital that you allocate, sure, you're getting even more bang for your buck because we just charge a fixed subscription fee, whatever size you're trading, right? So the point of this, though, is I always want people to start small and build up your confidence over time to then build your allocations once you get comfortable with how the wins and the losses work. But you see, that's using the same fixed $1,000 a trade. So at 24,000 value or so, you'd be basically putting in less than 5% per trade using $1,000 a trade fixed cap. So remember, all these examples, past performance, not guaranteeing the future results, but it's about being consistent and consistently applying that. I always say if you use consistent capital allocation, it will help you be a more consistent trader. It will smooth out some of those emotional high-low swings, especially in options that some traders get into when they're not using a disciplined approach. So that's why a lot of people, I think 26 years later, are still coming to big trends, because we're about implementing those disciplined processes that maybe when you got into trading, you're thinking, hey, financial freedom, I'm free to do whatever I want. Well, with freedom comes responsibility, right? You've got to still be sensible about how you're managing risk on each and every trade. So now think about each day could be up or down, and also did we gap up or down? And there's a variety of combinations of patterns with that. And of course, where the percent R was that is with that. Are we in the top part of the range, the bottom part of the range? So there's all these combinations, and for us, there's 8 different categories, and 3 of those 8 become tradable patterns for us, meaning that 5 out of 8 of those patterns are not tradable. That would imply you're going to get trades about, something like just over a third of the time. Something like that's about what we've been averaging in 21 trading days, probably about 7 or 8 trades a month. So that's plenty to make the system do what it needs to do to really accomplish our goals for our subscribers, but also we educate you all the time. So the key is the percent R. Larry Williams developed it. I know Larry's a great trader and innovator in the trading industry, but I use it in a different way. I'm using it for very certain windows, both to those strong upside trends that we can keep on capturing, but also the bounce backs we'll show you in a minute too. The other thing we're using history. Now, we know history is no guarantee of the future, right? But the historical profit factor, I believe, over a 10-year look back, is going to give you a lot of different market conditions, up, down, and sideways, to say, okay, how is this done across a lot of different market environments? For long trades, which is betting on the upside, if we're going to buy calls, how would we be paid off or not? Short trades, how would we be paid off or not? Some of those, other patterns that don't work, they don't give us enough of an edge. And so we don't get enough of a meaningful edge. I don't want to trade it, because like we were saying before, let's focus on the bigger opportunities. Let's leave the smaller opportunities to other traders, right? A big part of trading success, in my view, in 3.5 decades, is knowing you've got to say no to a lot of other trades that basically don't check all the boxes. And that's where the discipline of waiting till the proper setups get confirmed is where we then fire away. So some more trade examples, just to give you some more visuals on this. So here's one where we had bounced back to the coming up above that top green line there says, okay, we're bouncing back into the super strong zone. We don't typically want to buy a dip unless it fits a very specific pattern, and I'll show you that one too. But this is still that super strong percent R reading, and you can see a big part of this is that we will bet that we're going to get the upside follow through that next trading morning. In this case, we finished about 575-ish. We bought the near the money 575 calls going out 3 trading days, right? And you can see here that in this example, this is just after Labor Day this year. Earlier this month, a couple weeks ago, that we had this situation where we're getting that entry on a late Thursday, and then the next morning we gap up, right? We go from 575, we open at like 581, and then maybe just over 580, trade to about 581. So we're up about 1% on that soon off of the open. And you see, about 1% is usually going to be typically good enough for us to get a double on these trades. We paid 370 on that Thursday afternoon. Friday morning, we rang the register at 740, right? So, we've got a 575 call. You say, hold on, at 581, a 575 call, if you're new to options, that means it's 6 points in the money. How are you able to sell it for 740? Well, remember, the next morning, you still have out to the Tuesday afternoon expiration. So you basically have almost 3 trading days. If you count that Friday, then the Monday and the Tuesday, 3 trading days left. You're going to have some time premium left. So it's not just in going from near the money or at the money into in the money. It's also about they're still getting out quickly when there's still a reasonable amount of time premium at our double target. So we take the whole double out there. That would have resulted in 2 contracts, $740 invested, making $740 before the $4 round trip commission at maximum. So couldn't quite get that third contract. That would push us over $1,000 in these examples. But again, adjust it to whatever your capital allocation would be. Here's another one from back in early August, where you see we were just coming out of that oversold region. We were just starting to break back out above our line, and we're getting that strong finish, right? It's not just getting into that overbought zone. It's saying we've got to have that strong finish. So you know how candles work, right? You got the open down here and the close up at the top on those open white bodies. Those are bullish candles. Of course, the red ones are weak closes relative to where we opened above where we close on those red candles. So the point of this is that we need that momentum, saying we're building momentum here. So we're just about 567. We're buying slightly out of the money 568 calls, paying $312 a contract. That means you could get on $1,000 3 contracts in for $936. And then the next day we gap up again, about just under 1%, but trade a percent higher intraday and get our double at 100%, right? That's implying almost 100 to 1 leverage ratio, especially when you get that follow through gap, meaning you haven't lost much time. 312 turned into 624 and we're out, right? That prior example I didn't even mention, hey, we got out and then it had the big reversal, right? You saw that on the prior example chart. But the idea here is that, okay, it kind of flattens out by the end of the day there too. So you're losing time and you're losing a little bit of directional movement off of that earlier high where we cashed out. So again, the bird in the hand for us is worth it to say, take the whole double. Don't try to sell part of these at a double and then keep riding, hoping for an even bigger runner. It's for us, it's plenty good enough to say we'll take it and we'll run back to the comfort of cash with the double in hand, right? Because you can start doing the math on, whatever your capital allocation is, even if you're only putting, say, 10% of your portfolio and you double it, that would be like a 10% gain in your overall portfolio for just one trade doubling, right? And so you say, okay, what are your portfolio goals? You can start saying, well, you don't need a lot of doubles to get a healthy monthly rate of return as long as you're controlling your risk on the other trades, right? Which we'll talk about that too. Here's another one from right before the July 4th holiday. And again, you can see, we weren't trying to catch the falling knife of that red candle here. We're saying kind of wait until it gets a positive reversal. We're getting that reversal. And of course, this is one of those super strong trend phases where percent R's in the 90th plus percentile, right? We're close to those old highs. We're finishing strong on that. That was actually a Wednesday, July 2nd. And we, of course, the market was closed on July 4th for Independence Day. So we bought out to the July 8th expiration, bought the 550 calls when we were about 551, paid 407. That would get us 2 contracts for $814. And then you see the next day, we've gone from 551 to 557. Another just over 1% rally here. Good for a 100% gain before the Independence Day holiday. We booked it heading into the long weekend, said feels good to have that $800+ in profit off a $1,000 maximum investment or $814 investment. So the double in hand, right? Bird in hand. So you see here's one going back into June. Again, same principles. But what I love about this particular example is that you can see we'd been in a stronger uptrend, and our percent R parameter is usually looking at more data than just the last week's worth of action here, okay? But you can see just looking at price action over that past 5 or 6 days, you saw we were kind of trying to undercut, but we closed back above. But you see what happens. We get the undercut the next morning, right? You get this drop down at some point during the trading day, and then it reverses back up. And on that undercut, I would put an F on that and say, if you're selling there, I'm not saying just grading it an F that you got, but you got flushed, right? That F stands for flush. I hate getting flushed on trades intra-bar that basically would have ended up being a big winner, right? Because then you're flush on the sidelines at a loss, and then you're sitting there watching it go back the direction you thought. So we don't overreact to a daily candle. That's why we wait till late in the day. Multiple reasons why we wait. One is we want to see the tone of that last hour. That first hour is where a lot of the flushes happen, and often that first hour is called amateur hour in a trading day, because the reality is that a lot of traders will put their stops off of a prior key low point of a prior day, right? So if you're putting your stop just under the prior day's low, you're really setting yourself up for a lot of flush out kind of situations. And when that happens, you're saying, okay, gee, why am I cutting off my my trade when the end of the day says that the bulls are carrying the day? By the end of the day, the pros will often wait, the institutions will often wait till the final hour to start building more exposure if they see the tone being so positive into the close, because they're betting they're going to get follow through the next day, as are we, right? So we're buying late in that day. You say, gee, wouldn't it have been nice to buy that low? That's what you've got to avoid. You've got to avoid the woulda, coulda, shoulda syndrome, right? I should have done this, I could have done that, I would have done that if I'd known what was coming, right? The idea is that we're just looking at end of day patterns and saying, okay, the tone has really improved after those prior few days where we were showing several prior red candles. You say, well, does that one bar make up for it? It does, because our percent R says, look, percent R has been kind of bumping around, but now it's finishing back in near that 90th percentile. It's saying, look, we're starting to really heat up here again. positive candle pattern going with it and saying, yes, we want to buy those calls before the end of the day. We send out an alert to buy the 530 calls here. We're about 531 and change. So we're in the money. We paid 430 for it. We're more than a point in the money. And again, the sweet spot is right off of the open. We've gone from 531 to 537, up more than 100% gain, cashed in right off that open. Think of how little time you're in the market. And that particular example, if you're buying the last half hour of the trading day and you're selling right off the open, you've been in the market for less than one trading hour, if you want to put it that way, right? From the end of the prior day to the next morning's open, where you basically might be out 1 or 2 minutes off of the 9:30 Wall Street open. And you're like, okay, well, gee, I had the overnight risk, right? That's a risk we always take with this strategy. But for that, you have no day trades and you have the potential to catch that follow through with little time gone. That trade generating $860 in profit. Now, we do have a variety of examples where they won't hit their 100%. Sometimes they'll either price stop or sometimes they'll time stop at a gain or a smaller loss, right? In this example, here's one where we said, okay, look, we were getting that positive pattern, right? We'd come back up back here off of this prior, big time low right there. We had the weak jobs data, and you're going, uh-oh, this is a terrible looking market, and people are thinking bad things right back there at the start of September. September's a seasonally weak month. Guess what? Not playing out that way. This bull market keeps roaring on. And we wait, but we wait. We're not trying to be heroes here. By the way, if you see this candle pattern here, this little gap action down and gap action back up, that bar is called an island reversal, bullish island reversal, where it shows that we gapped down, but we gapped right back up after that gap down, and that marked an important low point. But we don't trade off of that. We're trading off of the pattern of, are we strong enough to say we can expect to get follow through? And here we are getting back over that strong, kind of 80-20 rule. Top 20% of readings generate 80% of our profits, generally speaking. And you can see here, we paid at the end of that day. You see, by the way, there's their flush. You see another flush there, undercut the prior day's low intraday, and then reverse and close up near the highs, right? So don't get flushed. We wait for the end of the day. We're seeing that strength. We're got the % backing us up. We're buying the 581 calls out to September 12th, paying $305 a contract. That gets you 3 contracts in for $915. And then the next 2 days, you see the next morning we gapped up, but it did not get our target, right? We were up maybe in the neighborhood of about 65 or 70% at some point there. We even went on day 2 up to almost 585. Think about it, that's only about $4 in the money, and we've lost some time. So we're getting out after the end of day 2 in the trade. A day before the expiration on the 12th, we're out at the end of the day on the 11th. Remember, I showed the other example where we got in on the 11th for another follow-through trade that got our double. But in this one, it only got us a 42.6% gain. And again, I'm not upset about that, right? But it's just saying, okay, you gave it a chance, you took advantage of some of the follow-through, but it wasn't falling through enough. And so you just and guess what? Even at the intraday on day 1, at some point after the gap up, you would have been down a little bit. Right? That's another thing you have to prepare for, is that you could be up, then you could actually swing to break even or down, and you don't want to get whipped by like saying, oh, well, now I should get out because it's gone from positive to negative, but it's mildly negative, not negative enough to stop us out. Then we get the second day follow through and end up with a 42.6% gain. That's only a $390 profit with a time stop kicking in 2 days later on $1,000 maximum investment, 3 contracts in this case. No complaints, right? You see another example here where we got into the Q's calls back in early August 8th. You say, hold on, why are you getting into this one when it looks like it's actually closing below where it opened? I haven't showed you that before. We see that we're still above the 80th percentile. We're still actually making higher highs and higher lows, okay? So there's some other uniqueness that we look for to kind of say we're not breaking down too much here. It's a pause that refreshes. We're buying those 574 calls. We paid $367. That wouldn't quite get us 3 contracts in for 2 contracts on $1,000 maximum commitment. And you see, we move up, though, on the follow through day there, and we generate $516 of profits just a couple of trading days later. So the idea here is that, okay, it's a 70% gain, not 100%, and we're not complaining, right? But the idea is that, yes, we're thankful to go ahead and say, take it down, and move on to the next opportunity here. So the beauty of the QQQ options playbook system, like I said, about maybe 37% of the trading days, or the setups, I should say, would be working out to about 8 out of 20 or 21 days a month is where you'd expect to get new trades. That would average about a couple of trades a week. Some weeks it might be 1, some weeks it might be 3, right? But other times you can get back to back to back opportunities. In this case, I want to show you that this one gave us 2 back-to-back opportunities, but 2 very different setups. The second one on this chart is the one I've been showing you previously, but the first setup here, setup 1 here, this one is an oversold setup. And one of the things about oversold, because I'll show you bear examples too, but the idea about oversold is that you can have it go into the bottom roughly 30% of the readings. You don't want it going on percent R down into the 10%, the 5%, the 0%, really showing that we're breaking down to big time new lows. You say, hold on, isn't this a short-term new low? It's a short-term new low, but we're looking back over more data than that, and it wasn't a bigger picture percent R low. It's just the 30th percentile or 28th percentile, something like that. Then we got the stabilization. So you see the stabilization bar where we do come back above our 40% lower boundary there. And then when it comes back underneath it, we're only at about 35% and we have a lower close. So that tells us that we're in stabilization mode. It typically means that we are ready to bounce. So we actually said about, in this case, 486, we were buying the November 7th 491 call. That was before the presidential election. That was, you can see the election is going to come after that day that we got out of that trade. So we said this one, we don't want to hold it for 2 days. We basically want to be out by the election eve, that night of that election, and basically say, let's not take the gap risk in this case. We said, in this case, we got our double. We paid $401. The options were kind of juiced ahead of the election, right? So we're having to go 5 points out of the money, but that's where we look at the recent volatility and say, we should be buying about a $4 option, give or take, looking at the recent swings back and forth of how much the ATR, average true range, is on the QQQ over the last month or so. So in this case, we bought a 401, our target's 802, but you can see it ends up getting filled at 805, just over 100% double gain there, and we're out before the election. Now you see the election, we get the gap up, right? We missed that next morning's gap up, and we don't get in until the afternoon after the election official entry point, right? And you say, well, gee, you missed some of the move. That's going to happen sometimes, right? We're getting in there when the Qs are now trading here around 506. We're buying a 505 call. So now the volatility has been sucked out because the election event, like an earnings event behind us, the election event behind us, that volatility comes back in line pretty quickly by the end of that day after the election reaction. And we're saying, even with this strong finish, you don't want to play the, oh, I've missed it, so I won't take the trade. You want to play the, hey, the momentum is still strong. We think there's more follow through to come. We buy the 505 calls at 506. The next day it gets as high as 514. Guess what? We will sometimes be selling early at the double. We got 100.5%. 409 gets sold out at 820. So that would make us just over 820 bucks, like 822 bucks on that trade. But the idea is that, we're out, and if it keeps going, I think this one may have. I don't care that we're following our rules, and we will basically always follow our rules and not get greedy and hold on and hope for more. Let's face it though, we got to manage losers. As I said, we're going to take a 50% stop loss if it gets tagged any point intraday after we got in any subsequent day. We're out at a 50% loss, or it could be a hair more. You can get gaps against you. You can get some fast markets where you can get your stop gets filled a little worse than 50%. In this case, we took a 53% loss. We had bought the 508 calls. Why did we get into them? Because we're back above that that percent R threshold, and we're getting, it looks like a pretty good stabilization and finish to the upside. We get in there at about 509. We bought the 508 calls, paid 333. It's going to get us precisely 3 contracts for 999 bucks if you're committing $1,000, measuring that before commissions. And you say, look, then you're in for 333. It goes the wrong direction from the get-go and keeps dropping that day. You're getting stopped at your just under your 50% threshold at 53% lost, right? So you were targeting to make almost $1,000. We end up basically losing just over 500 bucks as a result on this trade, right? So it's going to happen from time to time. That's what you have to be willing to stomach. If that's too much for you, then you throttle down the number of contracts you trade to get it to a comfort level where you can just follow the system on each and every trade. But for those stops, also you can get trades that can gap past our 100% target for winners that can be larger than expected from time to time. This is a great example of a classic, what I would call flag pattern, right? You saw the gap up flag pull of that prior week, and you saw the flag action where we're just kind of consolidating but waving a little bit gradually higher here. And you see thus our percent R staying in the top 95 to 98 percentile range at each of these closes. And our system says we like this here near 485. We're buying the 484 calls for 391. That would get us 2 contracts in for just under 800 bucks. And then the next day, we're targeting, in this example, we double that to get your target at 782. We don't get filled at 782. It gaps up some 1.5% from 485 to about 493. It opens, and we ring the register at 955 right off the open, 144%. More importantly, you see it gave all those gains back, but intraday it was all the way back to where it had closed, finished a bit higher, but still not nearly where it was at the open, not to mention the time loss, right? So again, multiple reasons to take that bird in the hand of a double, or in this case, better, right off of that opening gap and say, book it, Dano, take the money and run. So certainly not a widows and orphans strategy. We're trading 3 days to expiration. We're holding them for no more than 2 trading days without ever having a day trade by getting in late in a given trading day when the patterns are saying the edge and the odds are in your favor. So from that perspective, you see we're going to use this unique trade management style, and also keeping the time stop in addition to the price stop and the price target, and then reminding you of how if you took every trade, looking back, remembering that you can't extrapolate forward. It could be better or worse going forward. Future results will vary. We cannot predict past performance. It will not predict future results, right? The idea, though, is that it's about staying small and steady in your capital allocations and just keep on applying that. If you want to start with a $25,000 portfolio, you can put up to 5,000 bucks a trade. That would be what we've done looking back in the last 2 3/4 years. Again, don't extrapolate, but just know there's going to be good phases. There's going to be phases where we have some stops getting triggered. You got to be able to keep pulling the trigger and not lose your conviction. That's why I always say start smaller and then scale up, because you want to get into the proper habits of execution. Really, that's what people come to us for, is to say, look, it takes you out of the ego-driven game of if you're coming up with all your trades and then you're basically judging yourself on every trade going, was I right? Was I wrong? That's a really hard spot to put yourself in, to have your ego be constantly tested and challenged, and your discipline being constantly tested and challenged of, can you stick with your system? If you trade our system with this kind of expectation that if I trade it small and just understand how winners and losers work, and that your job on your end becomes consistent execution. If you consistently execute, maybe you won't make as much on a smaller allocation when it's up, but you won't lose as much when it's down, and you get comfortable with, you're just focusing, your first grading of yourself is how well can you execute each of the signals we give you. We get them to you in real time via the real-time email and text alert. Your job becomes execution. When you say that's your job, it's a lot easier of a game trading is than trying to do not just the execution, but all the analysis, all of the coming up with the ideas, all of the, should I buy this, should I not buy this? It's like, we take care of that part for you. You just execute. You make your life a lot simpler. Then just grade yourself on your execution. As you get good at execution, then you know how winners and losers look and how the profile looks of how the portfolio can do over time for you. Then you can start scaling up your allocation. So you might start with a smaller allocation. In this example, $1,000 a trade took a $5,000 portfolio up to 24,000 gross in the past under 3 years, from just January 23 to now. And you see that's still a healthy result. Again, reminding you though that in the future, can't make guarantees. Past performance doesn't guarantee future results, but just focus on execution. I think you will really like the process of trading, following these alerts without you having to worry about your own ego getting involved. So how do you take advantage of this? We just set up a super special. I'm going to go through it real quick so I can give Jeff a little time to talk about our toolkit before he introduces our next fellow trader. But you see real-time trade alerts. We call it QQQ Options Playbook. And I think a great way to try it out is a 3-month trial. I don't really think a 1-month trial is really enough time to get a true sampling of it. In 3 months, I would expect to get you about 25 trades. So that should give you a pretty good flavor for up, down, and sideways markets in the next 3 months, covering you to the middle of December, and basically getting some really good flavor about how we're going to handle through October and how we're going to handle then the November and early December markets. And so the point being that plenty of opportunities to come. You're also going to get the system settings and rules. It's not a black box. You get to take advantage of it just like a longer term subscriber. You can set up your follow along parameters with us. But you don't have to do the work, right? We do the scanning work for you. I do weekly video training as well that every subscriber gets, and then you get a dedicated email if you've got any questions for me and my research team. That would be an $891 value, because on our website it's $297 a month times 3. But I'm going to slash it today for you from $891 to only $177. Why did I do that? Because MetaStock's been really good to me. I also was thinking, well, you think about it, over the next 90 days of access, that gets your cost down to under $2 a day, if you want to think about it that way. 90 days for $177, and you're getting the education. So we set up this special link for you. It's bigtrends.com/metastock. We'd like to keep our pages really simple. When you go to that page, you'll see it's already been taken into account. No future discounts can be applied. No promo codes can be applied. It's $177. It's as low as I can go. Think of it. I'm taking it down by about 80%. That 80-20 rule, right? You get the benefit of about 80% off, and now you get positioned to take advantage of the top 20% of opportunities per the systems that I showed you here, with how we take advantage of call buys. And of course, when we get the really bearish breakdowns, eventually we'll take advantage of put buys too. But certainly it's been a bullish environment. We're positioned to take advantage of the right kind of call trades in this bullish environment and not getting stuck kind of on buying too hard of a dip. That's where we'll start to change our views on the market. But bottom line is that you can see that's a secure page. You can get your payment info there. Make sure you get your email in if you put your payment info on that page. I personally like using PayPal. So you can see once you review our terms and conditions, how we've done business for 26 years and counting here at Big Trends, that you can click review that and then click through the PayPal, and it'll have you sign in your PayPal. You can choose your money source a few clicks later. You just locked in 90 days of value for under $2 a day. $177. Try it out. I don't believe in free trials, because free trials, you won't commit any energy to anything that you get for free, in my experience. You need to have a little skin in the game. But believe me, after that, I think you'll be willing to pay the more normal price point when you see that one trade even could have paid for that normal retail price. If you put $1,000 in, you double it, make $1,000 on one trade, that could have paid for the normal retail value. Of course, your ROI on that is even higher when you think of this 3-month trial offer for only $177. So I'm going to call it there and say, basically, let me give it back to Jeff. But go to bigtrends.com/metastock to lock in that value before it's gone. And then Jeff will walk you through also the Big Trends Toolkit for MetaStock, which is giving you a ton of extra resources on how you can find the next big trend. Thanks so much for having me, Jeff.
Hey, Price, no problem. Good to have you. We put the link in the comment. One quick question from Brad, if you don't mind.
Sure.
And this kind of answers Reed's question a little bit too. Does this work well in a bear market?
Yeah, so in a bear market, like I said with the Qs, they've been going up, right? So the daily charts are definitely more configured for the bull side right now. If we start to see the breakage like we had back in March, we were starting to get signals into March and April on the downside for a limited window, because the market was breaking to the downside and the %R was moving on down into the bottom 20% or less of readings. Like I said, if you were buying that one dip setup for a call, it's got to not break down too much. If it breaks down the bottom 20% of readings on that %R, which by the way, you'll get our customized %R. Don't use your standard %R settings that come on most platforms. They're too short for what we're looking for. We look at the bigger picture view for the bigger trends, and then we see when you get that breakage where you're getting that persistent selling, then you can start to get put opportunities. I just don't see them in the short term. And you may say, well, I'm bearish, so I don't believe in that. Well, then you're not really taking advantage of what the market is presenting you with, the opportunity right here, right now. You want to be in the now moment in your trading, and you don't want to get sucked into longer term prediction views that are basically forcing you into not taking advantage of what the market's putting in front of you for opportunities right here, right now.
All right, cool. Let me go ahead and
Thanks,
there you go. Thank you very much, Bryce.
Always a pleasure. Hope to see you soon.
All right, thank you. Go ahead. Very quickly, I'm going to go ahead and talk about the toolkit that we designed for, or with Price. I shouldn't say we made it. We did create the coding and stuff like that, but of course, Price provided all of the rules. And it's been a very, very popular add-on. We're on our third version of it, the Big Trend Toolkit version 3. Don't have a lot of time to talk about it, but I do want to let you know it includes all of these methodologies. There's kind of a ton of them. There's 17 to be exact. Experts, explorations, the ability to go in and system test these ideas, get them all put together and put in MetaStock. And so it's a great add-on. The thing that I really like about it is the expert advisor and the commentary. I do have a quick chart that I just pulled open with Roblox on it that uses, and I just wanted to kind of illustrate. Let's kind of do this. Roblox has been a great stock this year. This is one of the methodologies. It's called the Big Trend Toolkit Score. And with it, what it does is it puts together all of the indicators that he uses and does a score around it. And don't have time to go into a huge amount of detail on this, but let me go ahead and open up the commentary real quickly here. And I'm just going to come back to here. We had a little bit of a setup signal that was pointed on the bar and then a buy signal. And I just want to kind of just go through the commentary very quickly. So you can see right here when it generated this signal, this would have been back in May. It was giving you a bullish %R. 2 days ago, it was bullish on the %R. You can kind of see how it kind of goes through and kind of calculates all of those indicators that he uses. It gave us a buy signal back then. Price was very clear about what to do with that buy signal in terms of the commentary that he's looking at, and just works well. So in addition, you can do a little bit of a scanning. I did run a little bit of an exploration on his Big Trend Score system. Again, what I like about these methodologies and the big trend methodologies in general is the fact that they are designed to help you identify the biggest trends in the market. So normally this add-on is only $6.99 as a one-time cost. As part of the conference, we're going to do it for $3.99. You can do that by giving us a call at 800-882-3040. You can chat online with us at metastock.com/saleschat, or you can go to metastock.com/bigtrendsa. Great add-on, full of all of the really good systems that Price has developed over the years, and good to go. As we move on to our next feature, which we're going to do rapidly, I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has sponsored the event for a number of years. Really appreciate the work that they've done over the years in terms of putting everything, helping us market and advertise and all of that kind of stuff. Great sponsors, great partners. Enjoy working with them. If you want to get a subscription, it's about $89 a year. You do get a physical magazine if you're in the US for that. And you also get access to all of the articles that they've ever they've done, about 17,000 articles. To do that, you can go to traders.com. So, of course, we are MetaStock. All of the offers we're going to talk about today you can get at metastock.com/conf promo. Let's move on to our next speaker. Our next speaker is Daniel Sinnig. Daniel's been a friend of MetaStock for a number of years. He's developed some very, very good methodologies over the years that have been very, very popular. People really like the auto optimization that he does. Very, very much, I would, if I wanted to classify Daniel, very, very smart guy, almost a mathematical scientist. I think that's something you can keep if you want, Daniel. Let's go ahead and get you started.
Great. Yeah. Hey, guys.
All right. Hey, Daniel, you're looking good.
Yes. How's everybody doing?
Doing good.
You guys are having a nice Wednesday conference. We're halfway through hump day of the MetaStock conference. Yeah. All right. Perfect. Okay. So Jeffrey, can you guys see my screen?
I can see you, and I can see the screen, and I can hear you, which means my job here is done. I'm out. Your turn.
Perfect. Yeah. Thanks. Thanks, Jeffrey. Always nice to be here. And as Jeffrey mentioned, we have been working with MetaStock for many, many years now. It's been always a big pleasure. It's a great platform. And one thing I always point out in every presentation with MetaStock is that they have probably the best scanner in the business to find promising signals. And this is exactly what we're going to be doing today, but not just plain old vanilla scanning. We're going to do a scan, which we call a generation 3 scan, which goes far beyond of what you're used to find signals which are even more promising. trying to find the gems in the rough or the needle in the haystack. All right, now, but before we get into this, we have to build up to this. And the topic of this presentation, in fact, is AI-powered trading, smarter indicators, better decisions. What this means and where AI comes into the whole picture here, that's what we're going to discover today together. All right, now a few words about who I am. So my name is Daniel, as Jeffrey mentioned. I am with tradingindicators.com. This has been our business for the last 10 years, and we specialize, as our name suggests, in building innovative trading indicators. We've done so for all major platforms, including MetaStock, of course, but also TradingView, Thinkorswim, NinjaTrader, ModifWave, MetaTrader, and so forth. So we've seen it all. And over the years, we've built thousands of trading indicators, not just for ourselves, but also for clients all over the world. But what perhaps is interesting is that, my career in trading and, in trading technology didn't really start off that way. For the longest time, back in the day, my career objective was to become a professor in software engineering. So I went through all these levels. I did my master's, my PhD, my postdoc. I started teaching in various universities in and around Montreal, which is where we're headquartered. But you know what? During all these years, I was always fascinated as well by the world of trading and how you can make money in the markets. So I started to try it out. But unfortunately, as you start out as a beginner trader, you tend to make all kinds of mistakes, and so did I. I revenge traded. I took too much risk. I traded where market conditions were just not right. And after donating quite a bit of money to the markets, I came to the hard realization: oh boy, trading is not as straightforward as I thought, and I need help. And for me, being a software engineer, needing help meant I need better tools which will help me make better trading decisions. And this is really how the story of tradingindicators.com started. And the very first tools which I have ever written, the very first indicators, they were exclusively meant for my own purpose. But once I realized, they actually do make a difference. They actually do help me make better trading decisions. We then started to make them publicly available via our business trading indicators. All right, so this was a little backstory of who I am, but now let's get into the actual topic of this presentation today. And a quick reminder also from me that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this presentation should not be construed as trade advice. These are for educational purposes only. All right, now let's get into the topic at hand. First off, as I've mentioned before, we specialize in creating trading indicators. Well, we've seen it all, the good, the ugly, and the so-so. And, many indicators that you typically see on the price chart, they will give you what we call trade signal, like, suggestions to either go long or go short. And, we start off with this as well. But then we thought, besides just getting these vanilla signals either to go long or short, what else do traders need to actually make really sense of them and to give them something truly actionable? And we thought, wouldn't it be nice if we could qualify each signal on the chart with some additional information, which will help the trader to figure out whether this is going to be a good signal or perhaps a bad one. No, not all obvious signal is going to be a winner, that's obvious, but perhaps there's something in addition that we can do to help the trader find out whether this is a promising signal or not. And in fact, the inspiration from this came from a completely different domain, the domain of poker. Back in the day, we've seen all these televised poker shows and poker tournaments. What I always found fascinating is that I was able to see as the viewer, what are the odds of a player winning this pot or not, or losing this pot. For example, here you can see this guy here on the top. His odds of winning this pot are 80%, and the guy down here, the odds for him winning is only 20%. I was thinking, what if I knew as a trader, if I had something similar available to me as a trader, what if I knew the odds of winning my next trade? So obviously for poker, it would be very helpful to know that. But as a trader, it would be just as helpful. Just imagine, what if you knew what would the odds of winning your next trade would be? And of course, I think the conclusion would be you would only take the trades and only follow the signals where the odds would be in your favor, and you would skip the ones where the odds would not be in your favor. Wouldn't that be cool? Yeah, I think this would be really cool. So we started investigating this topic extensively back in the day, and to see what is this even possible? Is it possible to predict the odds to some degree of winning your next trade, of having a successful trade based on a trade signal? So we started investigating this because we thought this could be truly helpful to any trader to make further sense of a particular idea. Now, the first question we asked ourselves is, can this be done in the first place? Is this possible? Can we somehow, show some odds on your price chart or in the expert commentary in case of MetaStock directly to the trader? And the easy answer is yes, of course, we can show some statistics directly on the chart. That's possible, but that's not the real question. The real question really is, what do these odds actually telling me? Are these odds, these numbers that we can print on the chart, are they actually meaning something moving forward? So that's a deeper question. And we asked ourselves this question. And what we've done to get to the bottom of this is we have conducted a comprehensive case study where we tested a swing trading system, a comprehensive swing trading system, which it was trading all the major US stocks like Tesla, Apple, Microsoft, and was a true swing trading system. Every trade lasted about a week, sometimes a bit longer, sometimes a bit less, and we trade both long and short. And over the course of this test, 6,827 entry signal, both long and short, were generated. So we trade all these and we look at the performance afterwards, and we looked at the performance and we saw this. Oh boy, this did not look promising. This was a losing system. Yeah, we took 6,827 trades based off our 6,827 signal. So nobody in his right mind would trade such a system. But then we did something else. Then we applied a filter to the entire thing and would only take the trades where at the time of the trade, our projected odds were actually favorable. And as a result, we only took about 1/3 of the trades, which we call the sweet spot trades, but the performance of these sweet spot trades was overwhelmingly better than before. Contrast this performance, where we took every signal, to this performance, where we only took these sweet spot trades, where at the time of the trade, the odds were in our favor. This was not backwards looking, where we knew the result of the trade. No, we projected the odds at the time of the trade. What a difference it made. And this gave us so much motivation that we decided to integrate this odds prediction technology into all our flagship indicators. And it's been truly a game changer since then. It made a difference of day and night. Now, why is that? Well, first off, it allows you, the trader, to make truly informed trading decisions, because then, from that point on, you could only trade when the odds are stacked in your favor. Yeah, when the statistics are actually, above 50% or above whatever threshold you want to set for yourself. And if they are not, you simply stay on the sidelines. And oftentimes I say that sometimes the best trade advice is not to take a trade in the first place. Yeah. So these odds would allow you to decide that, whether to follow a signal, to trust the signal, or perhaps to stay on the sidelines. It will also allow you to only trade when market conditions were beneficial. It goes kind of in the same area. You would wait until things are, stacked in your favor, and then you would trade. And if the stocks are not based in your favor, you stay on the sidelines. And guess what? There's so many stocks, so many instruments, so many futures contracts, whatever you may trade, that you can trade, that at any given moment, there's something that you could trade. What else you could do is you could use these statistics, these numbers, to find the optimal parameters for whatever strategies you have in mind. So what do I mean by this? Imagine any indicator, it comes with parameters. Even a simple moving average crossover system comes with parameters where you can set the periods of the moving average that need to cross over. Some settings will work better than other ones. But oftentimes, you really don't know which ones are the best. It's based on a gut feeling, perhaps. But now, with these performance statistics, you actually have hard facts, which allow you to see what are the best parameters. So this was a big advantage, and we tried to follow this. We tried to adjust things to see which one would give us the best odds, the best statistics. But there was a problem, and soon we're going to look at some charts. So let me just wrap up my my introduction. There was a problem because finding these best parameters was actually quite challenging, even with these statistics. Why? Well, while it was not hard to do, it was super tedious and time consuming. And in trading, this is not something you want to do. You want to spend your energy, your mental energy and any energy on making that final trading decision, not adjusting parameters and trying out different combinations. We realized this as well. And then we pushed it one step further. We came up with a technology which we call auto optimization, which will find the best parameters automatically for you as soon as the indicator is applied to the price chart. No longer as tediously manually adjusting the parameters. It was automatically done for you. The indicator will find the best parameters so that the statistics will be the highest. This was another game changer. And in this webinar, I will show you how these two breakthrough technologies, win rate prediction and auto optimization, can dramatically boost any indicator's performance. It doesn't really matter what the indicator is. It could be a stop and reverse indicator, it could be a trend trading indicator, a divergence indicator, a breakout indicator, a confluence indicator. Any of these types of indicators will benefit from these two technologies. So this is the topic of today's presentation. Now, let's start with the first one, stop and reverse, because it's the simplest one. And one indicator always comes to my mind when I hear stop and reverse, and it's a classic indicator. It's the super trend indicator. I'm sure you've heard of it. It's been out there for many years now, decades even, and it was originally developed by a trader called Olivier Seban, a French trader. He even wrote a book about this, which is translated to English means something like "Everybody deserves to be rich." And at the time, this indicator was quite influential. It had some groundbreaking features back in the day. For example, it specialized in the early detection of trend reversals. It had these buy and sell entry signals, and it came with a trading stop, where you would lock in profits as the trade unfolds in your favor. You can see this green line, for example, for a long trade would only be tightened, and this red line for a short trade would only be shortened. Now, how does this indicator work? Well, what's called stop and reverse, meaning that you are always in a trade pretty much, either a long trade or a short trade, and you stay in this trade until you get stopped out. So for example, you get an entry signal here, a long entry signal, you enter long into your position, you know exactly where your stop is, which is important for position sizing. And then as this trade unfolds, you would stay in this trade until you get stopped out, until this trading stop is eventually hit. And guess what you do then? Then you go short, you reverse your position. Thus the name stop and reverse. You reverse your position and you go short, and then you trail your stop accordingly as well. And this will continue over and over again. Now, this was a great indicator back in the day, but of course, it suffered from these two limitations which I mentioned in the beginning. You don't really know how well these sequences are working right now in the current market conditions. Maybe market conditions are very sideways. This is a trend trading indicator here, which would not work so well in sideways markets. So you don't really know how well they're working right now. And secondly, you don't know what the best parameters would be to configure the super trend indicator. So what we did then is we supercharged super trend with these two technologies, with win rate prediction and with auto optimization. So let me show you how this looks like. And we're going to start with the vanilla version of Supertrend, the one which doesn't have these two technologies built in. So I'm going to switch over to MetaStock. There we go. All right, and okay, here we go. This is a price chart of the SPY, the S&P 500 ETF applied to the daily time frame. And what I've done here is I have applied Supertrend, the regular Supertrend, to this price chart. You can see it here, it's truly stop and reverse. Every sell signal will eventually be replaced by a buy signal, sell signal, buy signal, and so forth and so forth. And this continues. And it looks pretty decent. As you can see it here, for example, here we hit the bottom very nicely. We went long, stayed in this trade for quite some time, reversed it here for a losing short trade, then long again, and so forth. Pretty decent. And my gut feeling would tell me, all right, this seems to be working quite well, but I have no real evidence of this. Now, how much should I really trust these signals? Well, let's look at the win rate prediction feature, the first one, which I mentioned in the very beginning. And in MetaStock, what you can do is you can apply, or you can open up the expert commentary by a right click on the chart. You go to Add Expert Advisor and go to Commentary. You check this box here, and then the commentary will pop up at the bottom of your chart. You can see it here, where you can see all kinds of information about the indicator applied. And what we can see here is that with the standard settings of Super Trend, we took 33 trades. Our win rate for the long direction was 43%, and the win rate for the long direction was 43%, and for the short direction was 35%. Of course, win rates are a bit deceiving. They seem very low here, but for Super Trend and for any trend trading indicator, really, typically, once you hit a big winner, it will outpace your losers. So win rates alone are not so telling. What's more telling is the number down here, profit factor of 1.1. And you know what, profit factor of 1.1 is not the worst, but it's marginally profitable. It's just profitable. You know, 1 is your threshold. Everything above 1 is considered to be profitable. Anything below 1 is considered to be a losing trading system. Okay, so this doesn't seem too great at first, but of course, there's stuff that can be done to improve this. We could, for example, try to change the parameters that we use to customize this indicator. Right now, the default settings would be 3 for the multiplier and 20 for the period parameter. What these parameters do is not so important. Right now, we have documentation for this, but perhaps there are other settings which would work better. All right, so what we could do now, we're not going to do it, but what we could do is to manually change these parameters. Maybe try 4 for the multiplier, maybe, I don't know, 50 for the period, or whatever this may be, to see if this would improve performance. But again, this sounds tedious, and we're not going to do it right now. Instead, we are going to ask the indicator to find the best parameters for us automatically. All right, so I'm going to go to my settings here. And by default, this is enabled. I just want to try to make a case here. I'm going to go to the settings in MetaStock, and I will tell the indicator, hey, try out every combination between a multiplier of 2 and 6 and a period, the second parameter, of 20, let's say, to 100. And once done, the indicator, I'm going to close this down here. I'm going to reload my chart. The indicator will now find the best settings automatically for me once it's reloaded. I can see it here. It's just reloading for a second here. There we go. Now everything is reloaded. The signals are different on my chart because now the indicator auto-optimized for this particular price chart, for the SPY on the daily time frame. And we can see now, okay, the new settings that were used are 5 and 20. Why these two? Because the indicator deemed these settings to be optimal for the current market conditions. Look at the win rates here. Long win rate of 66%, short win rate 33. 12 trades were taken and a profit factor of 1.60, which is significantly higher than what we had before. Okay, and this works with every single symbol. So if I change symbols, for example, if I go from the SPY to, let's say, the GLD, the gold ETF, again, we have Super Trend applied to this chart of auto optimization and win rate prediction. We can see now here, you can see the signals coming in. For gold, of course, it's a very bullish signal. We can see in this case, a multiplier of 5.5 was used in a period of 20. Different settings. Why different settings? Because we are using a different symbol, and these settings have been deemed optimal for this particular symbol. And here we have a whopping profit factor of 3.49. Okay, one thing important to point out. Even though overall very profitable, 3.49, there is a big discrepancy between long trades and short trades. And now we can put this whole thing even one step further, because based on these statistics, on the win rates, what would any reasonable trader do? Well, any reasonable trader would focus on the trade direction, which is the better one. In this case, clearly the long trade direction is working better than the short ones. So what would you practically do? Well, when a sell signal comes along, you would probably skip it. I would skip it because my win rate is only 25%. That's not really good. And I would focus only on the buy signals, pushing your odds even further. All right, so this was our first indicator, which we equipped with this technology. It's called Super Trend Bullseye. And just to summarize of what we've seen so far, we're going to push it further later on. What we've seen so far is our auto optimization technology in action applied to the classic Super Trend indicator. We've seen the performance statistics and win rate prediction. We also equipped this indicator, which we call Super Trend Bullseye, which is kind of Super Trend on steroids, with additional features such as 2 different reversal modes, on close and on touch. I will not get into this, but basically it means to indicate when you want to actually reverse your position, when the trading stop is touched or when we close above or below the trading stop. There are pros and cons for each mode. This is explained in our bootcamp. And we have different trading styles, both long and short, long only and short only. Again, these can be set in the settings. All right, now let's move on because there are more indicators to cover where we also applied this technology. All right, the second one, or the second ones are our trend trading indicator, which we call 1, 2, 3 strike, our divergence indicator, and our breakout indicator. And in fact, these 3 types of indicators, they are summarized in a bundle, which we call the Power Bundle 360. We chose the name purposefully, Power Bundle 360, because we go full circle. We are covering every single market condition, trending markets, fading markets or reversing markets, and markets which go sideways. And we have one indicator for each of these conditions. For example, for trend trading, we have an indicator called 1, 2, 3 strike, which is our trend trading indicator. We'll give you an entry signal if 3 things come together. We need directionality, so price needs to go in one direction for quite some time, either up or down. We need to have an increase of volatility and an increase of volume. And if all these things come together, an entry signal is generated. That's our trend trading indicator. We're going to see it on the chart in a second. Then we have our reversal indicator called divergence cloud. You probably have heard about the concept of divergence, which is basically a discrepancy between what you see on the price chart and an underlying indicator. If these two things don't line up, if they diverge, then something often is up. And oftentimes this can be a telltale sign that, hey, perhaps an existing trend is slowing down and potentially will reverse in the opposite direction. And this indicator specializes in finding these reversal moments. Then we have one more indicator called volatility crusher, our breakout indicator, which waits patiently for price to break out and price to have a strong breakout. And in our book, a strong breakout is a breakout move where this move will continue afterwards for quite some time. And you can imagine how you as a trader could take advantage of that by simply entering in the breakout direction. All right, let's check out how these indicators work on your price chart. So I'm going to switch over to MetaStock one more time. And we're going to start our trend trading indicator, the 1, 2, 3 strike indicator. And for this, I'm going to open up GE as our next symbol. Let me just go back here. There we go. GE, General Electric, also on the daily chart. And by the way, guys, these indicators, they work on any time frame. Right now, I'm using daily charts, but they work just as well on the 5-minute time frame, on tick charts, even on Renko charts, whatever it may be. All right, so what do we see here? Well, first off, this is our trend indicator. And as such, it will give you, let me just make this a little bit bigger here, it will give you entry signals, trend entry signals, which are in line with the overarching trend. And the indicator determines trend by coloring your price bars. Now you can see it here once applied. Some bars, they are colored greenish, and some other ones are colored reddish. And that's a read that the indicator gets where it thinks the trend will go to. So for example, here we have a long entry signal and the bars are green, meaning we will trade with the trend. It's a trend trading indicator. So long entry here, a short entry signal here, a long entry here, a short entry signal here. And you can see how this works. And it's not stop and reverse. We can have 2 consecutive signals in the same direction. That's no problem. For example, here we have one long entry signal and then here another long entry signal. And this is a bit different from Super Trend Bullseye. But what's also cool is that this indicator will also give you exit suggestions, which the indicator determines based on what's going on once we're in a trade. For example, here we had a long entry signal, and then at this point here, it gives you what we call a long partial exit. Meaning the indicator thought, hey, things are slowing down a little bit. You can actually see it slowed down right afterwards. We had this bit of a pullback here. Perhaps it's time to book some partial profits. And it will do this along the way. So we have one exit here, another exit here, another one here, and the final exit, LFE, long final exit, at this point here, then we're flat. The number of partial exits that you want to see, this can be configured in the settings. So this works for the long entries, but also for the short entries with our partial exits here. For example, here we had a short entry, first partial exit, here another one as price retraced to the upside, here another one, and the final exit down here. And this indicator is equipped with both our technologies for win rate prediction and auto optimization. So we call this 1, 2, 3 strike AO. AO stands for auto optimized. And you can see which are the optimized settings being used for this particular chart, GE on the daily time frame. What are our win rates as well for the long and short entry signals? And you can see it here. Yeah, they are quite positive, which is quite stunning for a trend trading indicator, because oftentimes for trend trading, it's not so easy to catch like a long-lasting trend. So having win rates of 87% to the long side and 62% to the short side, that's a very good read. And this was possible because of our auto optimization technology. Let's change it up. Let's go to Tesla. Tesla. Also here, we have applied our 1 to 3 strike indicator, and it works just the same way. The indicator will give you these short entry signals of the partial exits, the long entries, and so forth and so forth. And what's interesting, for example, is that for Tesla, we had a long entry back here in April, end of April this year. Long entry worked out great. One partial exit here, another one here, and then interestingly, another partial exit right now today. We can actually scan for this as well. That's something we're going to cover a bit later on. So one partial exit right now, indicating, okay, potentially Tesla will retrace a little bit, maybe book some profits here. Stay in the position, don't close it out entirely, but book some profits today in Tesla as a consequence of this entry signal here back in April 2020, or this year, April this year. And if we look at our win rate statistics, if I open up the expert commentary here, we can see, okay, 77% and to the long side and 64% to the short side win rate. And we caught, as you can see it here, some of these moves very nicely. But something to be pointed out is that this is a trend indicator, meaning it is a bit sluggish to react. It requires a trend to be established first before you can see a signal. And that's kind of a drawback of every trend indicator. You need to wait first before it actually sees a trend, which could delay your entry by a little bit. But guess what? We have an indicator which actually addresses this shortcoming. It's called our divergence indicator, which is designed to enter into a trade or give you a signal when there are signs of an early reversal. You can see once I open up the next price chart how this will work. So this indicator is called divergence cloud. And the first symbol I'm going to open it up on is USO, the United States Oil Fund. It's kind of a sideways symbol overall. You can see it here applied to the chart, but I think this could be a good example. So if I go back a little bit, you can see this particular symbol has been range bound and a big long range all the way up here. You can see the upper range and then the lower range was perhaps down here. That's been alternating between these ranges, but it's very tradable. This is a classic sideways market, but it's tradable if you get the right signals. And this indicator is based on divergence, giving you short entry signals or long entry signals when it senses either bearish divergence, this little reddish ribbon down here, or bullish divergence. You get these signals along the way. So short entry, short, long, and so forth and so forth. And all these would be tradable even in a sideways symbol like this one, the USO, the United States Oil Fund, on the daily time frame. And of course, we have equipped this indicator also with our auto optimization technology. So parameters are auto optimized, and our win rate prediction, which is shown directly here, indicating to you how much you should trust a signal when it comes up. For example, here we did have a short entry signal at this a couple of bars ago. We're kind of in the same range still, indicating that we may see another move downwards towards the lower end in this particular symbol with a win rate prediction of around 70%. You as a trader, you can imagine how you can make sense of that. All right, one more example for this indicator is VST, Vista. Let's have a look here. Also here we have equipped, or we've loaded our indicator on this price chart. And once again, you can see it will show you these short entry signal with partial exit suggestions, just like 1, 2, 3 strike, and the long entry signals directly on your price chart, equipped with our win rate prediction down here. In this case, we are in a long trade right now. Oops, let's move this up a little bit. Where does it go? There we go. Okay, we can see here 82% in the long direction. As the long signals have been working out quite nicely, and 58% in the short direction. And this was possible by using optimized parameters. All right, we do have one more indicator, and then we're gonna summarize a little bit. The third one is our breakout indicator. It's called Volatility Crusher. And for this one, I'm gonna open up another symbol, which is going to be Facebook, or Meta, as it's called now. So let me just quickly find it. There we go. Meta loaded up on the daily time frame, and in this case, we have applied our breakout indicator to it. And how does this one work? Well, it looks for a breakout move. And the idea is that once such a move happens, like a big breakout move, price will continue in the breakout direction for quite some time. Sometimes this move is limited to the upside. For example, here we had a breakout move. We had a bit of an upside move, but then we got stopped out. That's possible. Of course, there's no guarantees. But oftentimes, if you see some of these bigger bars, these breakout moves, oftentimes price will continue in the breakout direction for quite some time, and you will hit your targets. And this indicator is designed to come with 2 targets. We'll just go to the right-hand side a little bit. It's a bit hard to see here, but there are 2 targets which come with every signal. Target 1 is a bit closer, and then you would close out the entire trade if your second target is hit. And also this indicator is applied supplied with our auto optimization technology and win rate prediction. And oftentimes the win rates for these signals are super, super high because we're not aiming for very much. When we see a breakout move, we just want to catch a little bit extra, assuming the breakout move will continue in the breakout direction, and we're going to close it out. So our targets are fairly close by, thus explaining these very high win rates when these breakout moves or breakout signals occur. All right, one more example, Google. All right, let's open up Google. Where is it? There we go. Also here, we have applied our volatility crusher indicator to it. I can see it here, okay. We get signals in the short direction, but also in the long direction. And once again, oftentimes when we get a big breakout signal, price will continue in the breakout direction for a bit longer, and you can take advantage of this as a trader. And also here, we have applied our auto optimization and win rate prediction technology, showing you how successful these signals have been either in the long direction or the short direction. All right, let me sum up real quick. What have we seen so far? Well, we've seen our 3 power bundle indicators, each equipped with clear entry and exit signals. Even though we only looked at daily timeframes, I can guarantee you they will run on every single time frame and every single asset class. It doesn't really matter what you trade. Whether you're a day trader or perhaps more of a swing trader, you can use these indicators. They will come with our real-time statistics showing you directly on the price chart how well the indicator is currently working, how much you can trust the signals right now. And we've equipped them with our auto optimization technology. All right, but there's one more thing. So there's one more type of indicator which we can try out. And this indicator type is called a confluence-based indicator. So what is confluence? Well, confluence is a technical term. It's kind of a fancy term for when the good stars are aligning, when things are coming together. Or in the world of trading, when multiple indicators are forecasting the same price move. So how does this work? Here's an intuitive example. Let's look at this chart here. What do we see here? What we see is like a descending trend line on the chart. We see this blue line here. This is an SMA 200. We see a price retrace a little bit into this fib zone, and we see we are overbought. So if you put all these things together, what do we see? Well, we have a descending trend line. What does that mean? Well, trend is upwards, it's bearish. Number one. Number two, price is approaching to some degree this bluish line here, the 200 SMA, which could act as a dynamic resistance level. We're also retracing towards a 61.8 fib level, a common retracement within a bearish move. And our stochastics indicator here is overbought, meaning if you put all these together, this is all telling us, hey, this bearish trend, this bearish move is likely to continue. They're all pointing into the bearish direction. So multiple indicators are forecasting the same upcoming price move, which is the bearish move in this case. So this is a very powerful concept, and we have created an indicator, a confluence-based indicator, which looks for confluence between our power bundle indicators. So if multiple of our 3 indicators are lining up and forecasting the same price move, then we get something called a super signal. So we have different degrees of lining up. We have the bronze degree, a silver degree, gold, and platinum. And the higher we get, the more rare the signal will be, but oftentimes the more powerful it will be as well. So how does this work? Let's check it out. So once again, back to our price chart. So I'm going to go back to MetaStock, and the first one I'm going to be opening up is Caterpillar, CAT. All right. Opening it up, we can see, this is the wrong one. 1 second. That's the run indicator on it. Okay, there we go. So here we have our super signals on the chart, and what you can see here are a couple of different signals. We have a bronze long signal here a short signal, here another short signal, and here we had a gold signal. And these are based on confluence of our 3 power bundle indicators. And as I mentioned before, oftentimes, the higher the signal gets, like gold or even platinum, which is super, super rare, the bigger the subsequent move will be. And the beautiful thing is we can actually scan for these ones. So for example, here we could have scanned that, hey, for Caterpillar, we currently do have a bronze long signal on the very current price bar here on the daily time frame, which could have been an interesting long entry idea. Another example, Apple. Also here we have applied our super signals indicators to the chart. We can see here that, with our bronze signals and bronze, and here recently in August, we did have a gold entry signal, which would have been a beautiful trade to the upside. As I mentioned before, oftentimes, the higher you get, the more rare the signal get. If you have a gold signal or even a platinum signal, the bigger the subsequent move will be. All right, so this is our super signal indicators, and also these ones have been equipped once again with our auto optimization technology and our win rate prediction. Once again, allowing you to forecast to make truly informed trading decisions, knowing what are the projected odds of a signal working out. But there is one more piece. So of course I showed you some examples here and there, and you probably would think, oh, Daniel handpicked these charts here. Well, not really, because I have used the powerful MetaStock scanner to find out which symbols currently have signals. And not just this, I've used the scanner to also find these symbols which currently have signals, which are the most promising one, which are the most likely ones to result in a successful trade. How did I do this? Well, first off, I used the MetaStock scanner, and then I ran something called a Generation 3 scan, which goes far beyond a regular scan. A regular scan, which I would call Generation 1, scans for plain old signals. Whether a symbol currently has an entry signal, long or short. That's it. But we can push this further. A Generation 2 scan would scan for signals which are proven to be profitable. We can see directly in the scan results what are the estimated win rates and profit factor of a particular signal. That's a huge helper, because now I can focus on the ones with the biggest win rates. there's one more step we can do. In a generation rescan, we're not only going to see the win rates directly in our scan results, but we ask the scanner also to optimize individually for every symbol. Instead of running the same parameters for every symbol we're going to go through, the scanner will use optimized parameters on a per symbol basis, pushing the scanning process to its limits. So how does this work? Well, I ran a scan before I started this show. In MetaStock, it took 33 minutes to complete a scan over the S&P 500 stocks, the 500 stocks in there, and I run the scan based on our super trend bullseye indicator, our 3 power bundle indicators, 1 to 3 strike, divergence, cloud, and volatility crusher, and our super signals indicator. And here are some of the results I found. For example, for our divergence cloud indicator, I found a couple of interesting hits. First off, these were the results that came up. We can see we have a long entry signal on this symbol here. We have also a long entry signal on Eli Lilly, for example, and one here and one here and one here. Everywhere where it says 1, that's a long entry signal. Everything where it says 1 in the short column here, this is a short entry signal. Okay, so far so good. But what we can also see here is what are the projected win rates for every signal we're getting. So for example here, for our long trades, see this number 1 here, the projected win rate for this particular signal is at 82% for Vista Corporation, followed by Eli Lilly at 81%. So I'm going to use these statistics now to rank my signals from best to not so good, allowing me to focus on the ones which currently do have the best signals. So we already looked at Vista, but let's look at Eli Lilly. Now, this was the first one we saw here. Let's look at Eli Lilly. I'm going to open it up here. Eli Lilly on your chart, the second one. And we can see, once this opens up, yeah, we do indeed have, just drag this away here. We do indeed have a long entry signal on the very last bar based on our divergence cloud indicator. I can scan for this. And I can see also here, okay, the win rate for my long entry signals is at 81%. So this is a signal which I personally I'm inclined to trust it because it has a really good win rate. Yeah. And of course, you can always back this up with additional manual technical analysis, but that's a trade, that's a signal which I am inclined to follow because first of all, I was picked up by the scanner. Secondly, we are using optimal parameters for this particular symbol at hand and time frame, and my win rates across all the bars on my chart is at 81%, meaning 81% of my long trades resulted in a successful trade. That's a high number. I was able to find this trade using the MetaStock scanner. Now, so I hope you can see how this works. We can run these scans for all the different indicators that we went through. For our super signal indicators, we can scan for gold signals in there. I didn't find anyone today because market conditions weren't right for those, but sometimes you find gold signals on a given stock. And of course, I could have expanded my stock universe from just the S&P 500s to a bigger universe, maybe all the New York Stock Exchange symbols and so forth. The scan would have taken a bit longer, but if you run this overnight, for example, if you have all the time when the market closes, you would have found some gold and platinum signals based on our super signal indicators, giving you very interesting concrete trade ideas, which are further qualified with our win rate prediction directly in the price and in the scan results, allowing you to rank your signals from best to not so good. All right, so I'm gonna go back to my slides one more time, and of course I'm always open also for symbol requests if you have any, but let me quickly go back to my slides to summarize. So what do we see so far? Well, first off, if you're wondering, hey, are these indicators something that I should consider? Well, it depends. Depends on who you are. But if you are a little bit, it doesn't really depend who you are. I want to say it doesn't really matter what kind of trader you are, whether you are a day trader or a scalper or a swing trader or a long-term investor. These indicators, they will work on any time frame and chart type. Yeah, it's not just a daily time frame, which I used in my examples here. They will also work on the lower time frames as well. It also doesn't really matter what you trade, whether you trade stocks or FX or futures or cryptos, no problem. These indicators will work with any asset class and any symbol. And if you're a little bit like me, I'm an engineer by training, and I believe that good tools can make my life easier. I also believe that good trading tools can make my trading life easier. Then these indicators are definitely something you may want to consider, because they will do all the heavy lifting for you. They will find the best parameters for you. They will predict the success rate of having a successful trade automatically for you, allowing you to make a truly informed trading decision. And you can scan for signals using the powerful MetaStock scanner. So basically, before this presentation, what I did, I clicked start on the scanner, took 30 minutes, I went for a coffee, I came back, I ranked my signals by their quality, and I focused on the top 2 ones. This is how I found the most interesting symbols to be considered for today and to show you. This is something that I call something that simplifies my life a lot, because I can just move on with my day while my indicators and while the MetaStock scanner will do all the heavy lifting. Now, as a big thank you of listening to me talk throughout, I know I've covered a lot of topics. We have put together a bundle special for today. Now, individually, the indicators which I've shown you, the power bundle indicator, the super signals indicator, and the super trend bullseye indicator, they have a value of $3,289. They all come with auto optimization and win rate prediction, and we even have a bonus offer in there. Normally, we would offer these as a bundle for $1,997, which is already a very nice discount. But as a big thank you for being here today and for attending the MetaStock September conference, we have decided to slash down the price even further by exactly 50%. And for a limited time, we are offering a mega special for all these indicators, which will get them to you for life. There's not a single payment needed afterwards, for only $997 for all these indicators. This is something we typically don't offer. We're going to do it today. And if you want to take advantage of this super special offer, all you need to do is to go to metastock.com/TI bundle. TI stands for trading indicators. So metastock.com/TI bundle. And Jeffrey, perhaps you can also put this link into the chat.
Already done.
Thanks, Jeffrey. And just to summarize, you will get our power bundle indicators consisting of 1 to 3 strike and divergence, cloud, and volatility crusher. You will get our super signals indicator, which looks for confluence between a 1 to 3 strike, divergence, cloud, and volatility crusher, giving you either a gold signal or a platinum signal or a silver signal and so forth. And you will get our super trend bullseye indicator. All of these are equipped with auto optimization and performance statistics. And on top of all this, you will also get our trend radar indicator, something I haven't covered yet. It's going to be a bonus offer. Of course, we have trading material for all of this. So trend radar basically shows this little heat map directly underneath your price chart, allowing you to get a quick read on what the current market conditions are. Let me just give you a quick taste of what this indicator can do, which is going to be added as a bonus. So I'm going to go back to MetaStock. There we go. I'm going to open up gold. So gold, GLD on the daily time frame. Let me drag this down a little bit. Has been in a great uptrend. Gold has been flying up for a long time now. Come on, let me just drag this down. There we go. You can see it here. So gold has been flying up for a long time. Great uptrend. But as a trend trader, if you want to get into a gold trade, there are good times to get into it, and there are not so good times. And ideally, what you want to do, if you are a trend trader, you want to enter into a trade when things are pulling back a little bit, like coming down a little bit, getting you a better entry price with less risk on the table. How can we find these pullbacks? This is where trend radar, for example, could come in. Look at these little red patches here, which are coming in every once in a while. These would have been fantastic long entry opportunities to enter into gold. You don't want to enter where it's right now. It's all green. It's super extended, super expensive right now. You want to patiently wait for such a pullback. And guess what? Of course, with MetaStock, we can scan for these pullbacks, allowing you to find trade or stocks which currently are in such a pullback scenario, potentially giving you a very interesting trend trading entry. So we're going to add this indicator to the mix as well. It's called our trend radar indicator. So all available at metastock.com/TI bundle. Now for a limited time, only for $9.97, which I believe is a really good deal for something which individually would be valued at $3,289. All right. Now, Jeffrey, are there any questions that came in while I was talking?
Sir, Derek wanted to know if you have different prices for generation 1, 2, and 3, or is this price for all 3 of them?
Oh, that's we don't even have the lower forms of scanning. That was just something to ease you into the topic. You will get generation 3 right off the bat.
And it includes all 3 of the add-ons too. Great product, great offer.
Yeah. Any other questions? Yeah.
Yeah. Do these, would you say that this works better for swing trading or for day trading? What are your thoughts there?
It works for both, first off, and what's the really cool thing about our performance stats or win rate prediction is you will see, right, based on the statistics, whether it's currently working or not. That's the power of this. So, there might be some swing trading symbols out there where currently the signals are not working well. But the beauty about this is that you will know by means of these statistics whether it's working or not, allowing you to make a qualified decision of whether you should follow this signal or not. If it's not looking good, if the stats are not in your favor, simply stay on the sidelines. That's the same for day trading. Some symbols you will get really good stats and prediction. That's great. For some others, it will not. But once again, these stats will tell you whether it's working or not.
All right, very cool. And does it work on any markets? Obviously, with MetaStock, there's 300 exchanges you can get or so, somewhere in there. So can you apply it in any market?
Yeah, any market. I covered this before. It doesn't really matter what you trade, whether you trade the US stocks or German stocks, French stocks, Australian stocks, whether you trade FX or futures or perhaps in the crypto space. Yeah, they work with anything that has price and volume data.
All right. The link for that is metastock.com/TI bundle. Go ahead and get that. It's been a very, very popular package and we probably won't be around for long. You had to get it today. metastock.com/TI bundle. Yeah. Daniel, thank you very much.
Great. Thanks, guys. Have a great conference, everyone. Bye-bye.
All right. I'm going to do this. Okay. All right. Let's go ahead and go here. All right. Again, normally all 3 of those packages would be $19.97. Actually, far more than that. Today, as part of the seminar special, only valid until September 26, $9.97. Take advantage of that. Go to metastock.com/TI bundle, metastock.com/sales chat, or give us a call at 800-882-3040. While we're talking about it, I want to remind you that all of the one-time products that we sell come with a money-back guarantee. So if you go up here and you decide you want to try this, great, you're going to really like it. But if you don't, you can get a full refund within 30 days. So I'd recommend you take a look at it. I know as traders, you like to look at stuff that has high risk or high reward and low risk. If this doesn't work for you, you're going to get a complete refund. If it does work well for you, you're going to keep using it over and over and over and over again. So metastock.com/TI bundle or 800-882-3040. Thank you for your question. Derek says he has a little bit of an older version, or this is actually 3 complete different products. If you own any of those products already, Derek, thank you. Or anybody else that might be listening and you want to get the other 2, there's the ability to go ahead and do that. So Derek, in that particular case, give us a phone call at 800-882-3040 or metastock.com/sales chat, and we can kind of figure out what that looks like for you. If it is like you own Super Trend Bullseye and there's a new version of that, there's no cost for that, but this is a combination of all 3 products. And if you have 1 or 2 of them already, you can get a really, really good discount on picking up the rest of the package. So Derek, thanks for that question. 800-882-3040, metastock.com/sales chat. Okay. Want to invite you to join our trading community at thetradersforum.com. There you can get live chat about the markets. You can learn about the markets. We do sessions weekly where we talk about different technical indicators, different candle patterns, different ways of looking at the market. Last week we did CanSlim with Bill O'Neill's method. The week before that we did Ichimoku. The idea here is just to kind of educate, stay current, look at the markets, and also as part of the community membership, you can chat with other traders, you can share ideas with other traders. There's a lot of really good traders that are out there. So you can join the Traders Forum for free at thetradersforum.com. I look forward to seeing you there. Mr. Lewis.
Mr. Gibby, your camera is not on. I don't know if you knew that.
Oh, I forgot to hit that one.
Yeah.
There we go. Here's a, I can tell you're standing up. Because, all right.
What's that?
I can tell you're standing up because we're
yeah, well,
the
old back. It's not what it used to be. And my watch said, hey, you should probably stand up once in a while. So I usually listen to what my watch tells me to do.
There you go. Let's give away a book. So
Let's
the book we're going to give away, High Profit Candlestick Patterns by Steve Bigelow. Steve was a great technician. This talks about candle patterns that he likes, and it's a really, really good book. It's hardcover. I thought there was a price on it somewhere, but we're going to give it away to you. I'm going to personally, maybe not this copy, but a different copy. I'm going to walk it to the post office if you're lucky enough to win. So, and by walk, I mean drive. Greg, what I need from you is a number between 2 and 4,913.
4,913. Okay, according to the Google random number generator, that would be 1,519. 1519.
Okay. The winner for that will be A. Smith, Mr. A. Smith, with a Gmail address. So I'll make a note of that, and we'll go ahead and get that up there and running for him. Greg, thanks for the assist. Oh, maybe you should tell people how they can be registered to win a prize.
Oh, absolutely. The easiest way, so if you're in GoToWebinar, you don't need to do anything. Here's our to register. If you're watching us on YouTube and you haven't registered and you want to be eligible to win the prizes, just go to metastock.com. There's a banner on the top. You click there, it takes 2 seconds, and you're good to go. You don't need to do it more than once. That won't help your chances of winning. And also, it's pinned to the top of the chat in YouTube if you want to.
Do you, are we going to give away more prizes, though?
Oh, so many prizes. I happen to know there's a big red bag with white trim, much like St. Nick, just busting at the seams right behind you, waiting to be given away to good boys and girls that registered for this event.
Well, next time we're definitely going to do that for November. We're gonna print out all the prizes. We have a little bag that we'll reach in and grab it out of.
Oh yeah.
Dude, yeah.
Look, you're already talking about who's already talking about Christmas.
All right. Thank you very much, Greg.
You're welcome. I'm here for you when you need me.
Any of the offers that we were offering today for MetaStock or the add-ons and that kind of stuff, you can find at metastock.com/conf-promo. If you have any questions, give us a call, 800-882-3040 or metastock.com/sales-chat. So MetaStock's such a great product. I'm running a scan right now to see what's out there, see what's going on in the markets. I think it'll be helpful for you. And I think that's why it's been rated #1 in this price category for 32 years straight. Give it a go. Our next presenter is a friend of mine, as all of these guys are, but Steve Primo started trading, I believe it was in the 70s. He started trading and did work for the Pacific Stock Exchange. Today he's going to talk about a methodology he's been using for decades. And we're going to go ahead and get him started. Steve, how are you doing?
Hi, Jeff. Doing great.
All right. Let me make you the presenter. I can hear you.
There we go. Can you see it okay?
I'll let you know. It usually takes a couple seconds. There we go. 4 questions you must ask yourself before each trade. That's my signal to get out of the way, Steve. Your turn. Go.
Okay. All right. Thanks, Jeff. And thanks to everyone today for attending the September Online Traders Conference. This promises to be a great educational presentation because today I want to talk to you about 4 questions that you must ask yourself before each trade in order to become a consistent trader. Now, it doesn't matter what strategy you trade. It can be one of mine, can be one of yours, someone else's that you're seeing speak today. It doesn't matter what market you trade or what time frame. But I truly believe these 4 questions will increase your odds for consistency tremendously and take your trading to the next level. For example, I'd like you to take a look at this chart right here. Here's an older chart of spiders, just happened earlier in this year. As we're looking at the spiders, that's the ETF that represents the S&P 500. Kind of looks like we're just kind of going sideways, but let's say you listen to somebody on TV and they said, well, there's major support right here, so we think the market's going to hold and you should be a buyer, okay? Well, you get excited and you say to yourself, okay, well, I'm going to buy. Well, with these 4 questions, you would have known right off the bat that you would not have been a buyer at all. Let's say you decided to sell at the exact same bar. You would have known where to place your stop, asking yourself the next question. And the next question would have told you where to exit this trade with a profit, which would have been right here. And in less than a week, you could have potentially captured over 59 points before the price shot back up. So this is what we're going to be talking about today, the 4 questions you must ask yourself before each trade. So welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. As Jeff said, yes, I've been trading for nearly 5 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. It doesn't mean you're any more special than anyone else, but in the old days, if you wanted to trade, this shows you how antiquated the system used to be long before the advent of electronic trading. Let's say you wanted to buy 100 shares of IBM, which was one of the stocks I made a market in. Well, you would call up your stockbroker on the phone. He would take your order over the phone and put you on hold, and he would then call the floor broker on the exchange floor and say, I have a customer here who wants to buy 100 shares of IBM. He would take down the order, put you on hold, walk over to the trader who specialized in making a market in IBM, which was me, and I would sell him 100 shares, or if he wanted to sell 100, I would have to buy from him 100 shares because that was my job, to make a market in roughly about 60 stocks. And then it would be reported back to you. This was before electronic trading. So I traded through the crash of '87 and the bull market that followed. I made markets in roughly about 60 stocks. Roughly in the mid 90s, I left the floor and decided to manage money and also to trade my own account. And about 15 years ago, I decided to actually delve into the career of teaching how to trade. So I teamed up with Pro Trader Strategies with one goal in mind, and simply to share all of the tips and techniques that I've accumulated with over the 48 years I've been trading, and share them with all my students around the world. I'm happy to say we have students in over 115 countries and in every state in the United States. So you'll see that attention to detail in trying to educate you in today's educational class. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results by asking these 4 specific questions, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you'd like to get more education on a daily basis, please feel free to follow us on X, formerly known as Twitter. You may want to copy down our handle right there at SPCLSTTRADG. Every day I post between 5 or 7 different snapshots, sometimes of signals that our methods or techniques have generated. Also showing some of our indicators that we apply, our proprietary tools that I've picked up in my last 5 decades of trading, and little bits of financial wisdom as well. So there's lots of free education on a daily basis. So please feel free to follow us on X. Now, as I stated earlier, we are first and foremost an educational company. Our goal is not to force feed you signals. We don't have a chat room or a trading room where we tell you what to buy or what to sell. We don't have a signal service, because our philosophy is a good mentor does not trade for you. He teaches you how to trade. So that's the same way I was taught some 48 years ago by my mentors, who are specialists themselves on the trading floor. And that is what I believe has sustained me now, going on 50 years. So hopefully using the same technique, the same approach of teaching you how to trade will sustain your trading as well. All right, with that stated, let's begin today's educational class. And I want to start out by something that my mentors taught me, and they said, Steve, trading is really simple. It's the trader who makes it more difficult than it has to be. I mean, think of it. Do you have tons of indicators? Are you listening to far too many trading gurus or too many trading systems that you're following, or maybe too many markets, too many time frames? I know when I first started trading, I was, because I thought that's the way you're supposed to trade, right? The more complicated something is, I was taught the more valid it will be. But it's funny, over the years, I've learned that it's actually the opposite. The more complicated something is actually taking you away from your success. It's the simple things that actually work. It's the simple things that will sustain you for not just a good couple of months or maybe a good couple of years, but a good couple of decades. So trading is really simple, but look at your own trading. It's the trader who makes it more difficult than it has to be. Now, these 4 questions I'm going to share with you today are extremely simple, but with the examples I'm going to display, you'll see how powerful they can be. Now, in order to be consistent, you must always ask yourself these 4 questions prior to even entering into the trade. And as I stated earlier, it makes no difference if you trade currency pairs, if you're an intraday trader on futures, if you trade crypto. It makes no difference if you are an investor. You know, it really makes no difference, but you should always ask yourself these 4 questions to increase your odds for consistency. Question number 1, am I on the right side of the market? Sounds too simple, right? Because everyone, when they first trade, thinks, well, yeah, you automatically have to be on the right side of the market, right? But if that were true, then why has it been estimated that most traders fail? Upwards of 85% of all traders. It's because you're not on the right side of the market. In other words, you're doing the opposite of what the market wants to do. If you're buying and the market goes down, or if you're selling, going short, and the market goes up, you're out of sync with whatever market, whatever time frame you're trading. You're not on the right side. We always want to be on the right side of the market. And by right side, another term for that would simply be the overall trend. We always want to be in sync with the overall trend. If the overall trend is up, we will only be a buyer. If the overall trend is down, we will only be a seller. So we don't care how great a sell signal is or how great a buy signal is. If that buy signal is in an overall downtrend, we will not take it. Why? Because the odds are not in our favor. Let me show you what I mean here. Let's look at this chart of Tesla going back earlier this year. Let's say you're interested in purchasing Tesla, but you go to that chat room, or maybe somebody on TV says, well, there's major resistance here. This is where all the banks are selling, so you don't really want to buy this. And it's kind of in this range here. Every time it goes up, it comes straight down, and then it goes right back up, and it looks like it's getting ready to go down again. And if you have a little short-term uptrend line here, you see we've broken that, just the way we broke it here before. So most likely we're going to come down and test these lows. So you say to yourself, okay, I'm on the right side of the market. The market's telling me it wants to go lower. So you decide to sell, okay? This is the way most traders make their decisions, either based on what they have found out through their own research or what someone is saying in a trading room. And this is, once again, why we feel most traders fail. Because remember, the first question you have to answer is, am I on the right side of the market? And the easiest, simplest, and most powerful way to know if you are on the right side of the market is to apply the 50-period moving average. That's it. You can do that right now, regardless of what software you're using, regardless of what time frame. Just add a 50-period moving average. And then once you've added it, ask yourself, where is price in relation to the 50 SMA, simple moving average? Now, originally, price was below. So that's telling us the overall trend was down. But now we have 1, 2, 3, 4, 5, 6, 7, 8, more than enough bars closing above, which will tell us that the overall trend is up. So if the overall trend is up, are we going to be a seller? Absolutely not. We're not ever going to sell out of sync with the overall trend. We will only be a buyer. Now, if you don't believe how powerful this tool is, go back and look at your last 10, 20 trades. I can almost guarantee you that the reason you had losses was because you were buying below the 50 and you were selling. By selling, I mean going short. I don't mean exiting a position. I mean selling to go short, buying puts, let's say, while price was above the 50. You will have a greater chance of being a consistent trader if you just apply this simple rule. And you can do it right now. It doesn't cost you anything. It's not some convoluted indicator that costs thousands of dollars. You have free access to it right now. Okay, so let's say you change your mind. You go, wow, I'm not going to sell here after all. Price is above the 50. And you think, okay, well, where could I buy? And you say, well, you know, I'm a technician and it looks like there is some type of, you know, resistance right here, double top. So I'll buy if we close above there or break out above. Okay, that's a solid plan and you're in sync with the overall trend. This leads us now to question number 2. And that is, where do I place my initial stop? Now, most traders, mostly beginning traders, say, well, I thought I would, the second question would be, where do I get out with a profit? No, we want to figure out where we're going to get out if we're wrong, because we may be wrong. Even though we're in sync with the overall trend, we still may be wrong. Now, in our courses, all of our courses, we offer our students upwards of 6 or 7 different stop placement levels. If you have more risk parameters or if you have least risk parameters, it makes no difference. If you have a large account size or a small account size, it makes no difference. You can pick and choose whichever one feels the most comfortable for you. So let's just use a standard generic stop placement, meaning that if price were to stop here and go up, we would go back in time and see what the most recent low was, and that would be right here. You see, that would be a pivot low where you have a 3-bar pattern. You have a low followed by a lower low and then a higher low, kind of this V approach. So very basic, very standard stop placement. We would place our stop right here. So we haven't even entered into the trade yet. We already know where we're going to be entering, and we already know where we'll be exiting if we happen to be wrong. This leads us now to step number 3, question number 3, which is, now I can ask, what is my profit target? And the reason why we wait until question number 3 to find out where we're going to get out with a profit is because it's determined by where we placed our stop. Let me show you what I mean here. Let's say we were to enter right here. Price did go back up and closed or just traded above there. And all of a sudden turned around and we got stopped out. How many points, not how many dollars, because everyone has a different account size or everyone has a different position size, but how many points would you be willing to risk? How many points would you lose? And in this case, it would be 24 points. So you have to ask yourself, well, can I afford to risk 24 points? Can I buy 100 shares at a 24-point risk? Maybe an odd lot, 50 shares? Maybe it's too much for you, so you don't take the trade. This is where we say we put the power in your hands. You're in charge of your trade. But if that's completely acceptable, even if you only buy an odd lot, okay, so you're going to risk 24 points. What you want to do now is double that amount. So you want to make it 48 points and add 48 points to where you'd be entering. You see how that works? And the level, excuse me, at which it ends would be right here, and that is your exit point, 48 points higher above your buy point. And that's where you're exiting. So basically, you are making twice, you're profiting twice what your risk is. That's called a good risk-reward ratio, 2 to 1. You're making twice what you're risking. If you do that over time and your method is just a little bit over 50, 51% consistent, you will be a profitable trader, making double what you risk. Now, this leads us to the 4th and final question, and that is, how do I protect my profits? And in my opinion, this is the most important question to ask because we've all been in a trade before. We can't escape it at times. We've all been in a trade where on paper, it looks great. Things are going in our direction, right? We're making money. We feel real good about ourselves. We're sleeping really well at night. We can't wait to tell our friends or our significant other how much we made. And then you wake up the next day, or maybe during the day, some news comes out or some event happens, and that really nice paper profit now turns into a loss. It's the worst feeling in the world because at one point, even though you hadn't gotten out yet, you had a profit. Sometimes traders say it's almost easier to know we enter into a trade, and the minute I enter it, it turned into a loss. I can accept that much better than knowing that I had a profit. I had the cash in my hand, but I hadn't exited yet, and it turned into a loss. So how do I protect that? Well, we do that by applying one of our suggested rules that we tell our students, especially in the beginning. We call this the 50% rule. So what does that mean? Well, when price, once you enter into the trade, when it gets halfway the distance to your exit point at the 50% level, that's where we'll cancel our stop and move it to where we entered. This means we have no risk at all, because if all of a sudden price was up here at the 50% level or higher, and then it turns around, well, at the worst, we'll just break even. Okay, so we're basically playing with the house money. This is how you protect your profit. It may still sting a little bit because you did have a profit, but at least you didn't lose anything, and you come back to trade another day, as opposed to saying, gosh, I was making $1,000 or $2,000, now I have a $2,000 loss. Okay, so let's see how the trade unfolded. Well, it did trade above our buy level, so now we are long. So we knew all of these things, where our entry would be, where our stop placement would be, where our exit would be, and where our half point 50% level would be, even before we entered the trade. This is the way professionals trade. They don't just come up one day and say, okay, I just woke up a half hour ago. I kind of feel good about the market today. I feel lucky. I'm going to bet the farm on this stock. Okay, that's gambling. Feel free to trade that way, but remember, what are these statistics again? 85% of all traders fail. If you have a solid plan like this, you'll at least give yourself a chance to be a consistent trader. All right, so we've put everything in place and we've come up to the 50% level. So what do we do now? After 2 days, we hit that level. We move the stop, we cancel our stop here and move it to our entry price. And as we said, we are now just playing with house money. And here's the easy part, because now the only thing left to do is to watch the trade unfold. I often say, whenever I give this presentation to my students, I've often said, if you are trading correctly, it's extremely boring, because it's very much like fishing. You simply go out in the boat or out in the pier or on the dock, you simply cast your line and wait. And you may wait a couple of minutes, maybe you'll wait a couple of hours, but that's all you do. You sit and wait. Trading is no different. We had our plan in place even before we entered into the trade. But we have everything set up. We know our exit, our entry, our stop placement, our 50% level, and now we just wait. We just wait to see what happens. So we're at the 50% level. Let's watch the trade unfold. Well, now we're really going in our direction, and just another day later, we profited with a 48-point gain. See how simple that was? We didn't have to have some really convoluted system where we have no idea what it's based off of. We just know that, wow, it cost me $10,000, so it must be right? No, very simple. We waited for price to be above the 50-period moving average to tell us if we were a buyer. We just looked for that little breakout above the double top, and then we put our parameters in place. It was that simple. Now, what happened after that? We kind of went sideways for the next week or two, but this happens oftentimes. We'll pause and then go higher. So we're not going to tell you that price will automatically stop at that level, but we've seen, not through systematic research, because we're not a systematic company, we're simply an educational company, but we've just seen through watching over the years that oftentimes price will turn around. And this is where, if you hang on too long and you don't exit, you'll give away everything you had on paper. So especially if you're going to be using these 4 questions within your trading style, please get out and see how it, and how it affects your trading. Let's look at another example. Okay, now you know the process. Let's try it again, and let's go through the questions. Here's question number 1. Am I on the right side of the market? All right. So now we're looking at that chart we looked at previously. We're looking at the spiders, the ETF that represents the S&P 500. Once again, let's say that guy on TV that you like to listen to said, hey, this is major support. It hits all the fundamental support as well as the technical support. So you have to be a buyer here. The market's going to scream to the upside, make brand new highs. So you say to yourself, gosh, this guy's never wrong. He's been in the industry for 20 years, so he must be right? So in fact, you have like a bullish engulfing pattern there. So you decide to buy. But remember, the first question is, am I on the right side of the market? The right side of the market isn't what some guy on TV says or what some convoluted system says. The right side of the market is what the market says. And our translator is the 50-period moving average. So we plot the 50-period moving average and we ask ourselves, where is price in relation to the 50-period simple moving average? Well, obviously it's below. So what is that telling you? Should you be a buyer? Absolutely not. Why? because the overall trend is down, and the odds will be in your favor over time that you will not succeed in buying below the 50 or going short above the 50. Think of it like the slot machines in Vegas, okay? Now, sure, every once in a while, if you stay at the slot machines, every once in a while, you'll get a winner. And all the bells and whistles will go off and the clanging will happen. And you'll say to yourself, gosh, you know, it'll give you this sense of security that you're doing well. But if you hang out over time at that same slot machine or at the slot, any of them, you'll eventually give it all back. They're designed to do that. It's no different if you buy below the 50. Sure, every once in a while, there will be a great buy signal below the 50. You'll say to yourself, gosh, I wanted to take that, but this guy, Steve Primo, said you don't buy below the 50. Every once in a while, there'll be a great one, but take it from someone who used to trade that way. If you do that over time, you'll give it all back. I used to have some great trades where I would buy below the 50, and I feel like, wow, I finally got my trading together. And then by the next week or next month, I'd be in the losing column once again because it wasn't working. It only worked that one time. But remember, we're looking for the odds to be in our favor. And this is a numbers game. It's not about every single trade being a winner. It's a numbers game. 2 steps forward, 1 step back. So the odds are in our favor if we are not a buyer right here. Why? Because we want to be on the right side of the market. Another way to say that is we want to be in sync with the overall trend. And by just applying this simple indicator, which you all have access to, the 50-period moving average, it is telling us through the market that the overall trend is down. If it's down, that means we only want to be a seller. So let's say you saw this presentation, you say, okay, I'm not going to buy. All right, I'll listen to this guy. I'll see if he's right. All right, so I want to be a seller. So what should I do here? Well, if there was so-called support there, and if we break that, well, then I want to be a seller. So if we trade below this, I will sell. Okay, all right. At least you're in sync with the overall trend. And it's a standard plan. I'm not going to say it's a great plan, but sure, why not? Okay. This leads us to question number 2. Where do I place my initial stop? Once again, we have upwards of 6 or 7 different stop placements in all of our courses. Let's just use that standard generic one where we go back. If price were to come down and we were to go short here, or maybe buy the puts, if we went back in time, where was the most recent high? Well, it would be right here, okay? This is called a pivot high, a 3-bar high. You have a higher high, followed by a higher high, and then a lower high. So this is where you'd place your stop, because if we break that, most likely the trend is going to go higher. So we have our stop right here in place. Okay, that's a solid plan. We haven't done anything yet, but now we know where to enter and we know where to place our stop. This leads us to question number 3, which is, what is my profit target? Remember, we determine in this case what our profit is based off what our stop is. Now, this is just one style. We have numerous different styles for exiting in our courses. This is just one very basic style. So if we were to sell here and go short, and all of a sudden price turned around and went right back up above the 50-period moving average, how many points, not how many dollars will we lose, but how many points would we be losing? Well, we measure the distance and it would be 29.55 points. All right. So now all you want to do, since you're going short, since you're betting for the spiders to go down, is you double that. 29.55 times 2 comes out to 59.10, and you would subtract that from your entry. Okay, subtract 59.10 from your entry down here, and this gives you this level where your exit would be right here. So this is where you're going to place your order to cover. Or let's say you had puts, that's where you exit when price gets there. Okay, very simple. So we have all 3 things in place. We haven't even entered the trade yet. Remember, this is how professional traders trade. They don't wake up during the day and say, well, you know, I saw that guy on TV yesterday, he really liked this, or that guy in the trading room, so I guess I'll do the same thing. 85% of all traders fail because you're taking yourself out of the game. You're not making your own trading decisions. Apply these 4 questions and you're putting yourself back in the game. So this leads us to question number 4, and that is, once again, the most important question in my opinion: how do I protect my profits? In other words, what if price went down and you're feeling really good about yourself, you got a paper profit, and all of a sudden some event happened, price went straight up, And that nice paper profit turned into a valid loss. You got stopped out. So how do I protect that? Once again, we apply what we call the 50% rule. You simply measure the distance from where you'd enter to go short to where you would exit. This is our exit point. And you find the halfway point, which is the 50% level. If price gets down to anywhere near or below that level, it's up to you to decide. But if it gets right around this level, what we want to do is cancel this stop and move it to where we got short. That's it. We're protecting ourselves, because if price all of a sudden goes straight up, well, we don't lose anything. We break even. Okay? So let's watch the trade unfold. Well, we got short. It opened just a little bit below the sell line, so we're short right here. And a day later, it's hitting our 50% level, so we automatically now are not risking anything because we canceled our stop and we're moving it to the entry price. Now, as I said earlier, we are playing with house money. We're not risking anything. Once again, this is how professional traders trade. They're always protecting themselves because they know that anything can happen. And that's the one thing you are in charge of, your risk. So this comes to the final stage, which is the only thing left to do is to watch the trade unfold. Now, I know a lot of traders like to have 2, 3, 4, 5 monitors in front of them, tons of indicators, tons of markets they're watching, phones ringing off the hook, 3 or 4 TVs blasting. If you're trading that way, you're making it far too complicated than it has to be. Once again, I know this from pure experience because that's the way I used to trade. And guess what? It couldn't make me a dime. For my first 2 years trading on the floor, I couldn't make a dime. I was just basically trading water or worse. It wasn't until what my mentors called stripping away this useless noise and just simplified things that my trading started to become consistent. So at this point, trading should be very boring, should be very simple. Bells and whistles shouldn't be going off like the slot machines. Phones should be ringing. 10 indicators should be blasting. No, you should just simply sit back and watch, just like you're fishing. So let's watch the trade unfold. The next day, we hit our profit level, and we have a profit of 59.10 cents. Not a bad little move, especially when it went all the way back up. You see how volatile things can be and how you always want to protect yourself. So let's review what we taught you today. Here are the 4 steps to consistency. These are the 4 questions you must always ask. And the first one is, am I on the right side of the market? The simplest and most powerful way I know of being on the right side of the market is to just apply the 50-period simple moving average. It makes no difference what time frame, it makes no difference what market. But once you apply that 50-period simple moving average, you ask yourself, where is price in relation to that? If price is above, the overall trend is up. And the way to be on the right side is to only look for buy setups. You will be on the right side of the market if you're only looking for buy setups when price is above the 50. Conversely, if price is below, then you'll only have a seller's perspective. Why? Because that's how you'll be on the right side of the market or in sync with the overall trend. Question number 2 is, where do I place my initial stop? Well, you can use any stop placement that you'd like, doesn't matter, or you can use the generic one that we just shared with you today, which is the most recent high or the most recent low. We teach a number of different stops for different stop placement parameters. If someone has a larger account, or if someone can't sleep with a large loss, if they like small losses, we have a number of them. But this is just one simple one you can apply. Next, what is my profit target? And in this example, we determined that based off how much points we were risking. So this is just one way. Once again, we have upwards of 6 or 7 different exit or profit target points. This is just one very standard way. And then lastly, how do I protect my profits? In the beginning, especially in the beginning, always use the 50% level. I use that to this day. I trade intraday E-mini futures and I use the 50% level. If I get halfway to where my profit target is, even on a small 5-minute chart, I'd move my stop to unchanged because I know that anything can happen. I would much rather get stopped out breaking even than I would knowing that I had made 3 or 4 or 5 points and then all of a sudden on paper it turned into a large loss. So always protect your profits by using the 50% rule. Remember, as my traders taught me, trading is really simple. If you're going to trade like a professional, you should keep it as simple as possible. It's the trader who makes it more difficult than it has to be. Remember, over 50 years, it's taken me that long to learn that it's the simple things that have a higher level of consistency, not the complicated ones. Now, would you like to trade a strategy that incorporates all 4 of these questions that I just taught you? Because we know we have a lot of people watching today that say, hey, Steve, this is all great, but I don't trust my strategy. I've been trading it for the past couple of months. It is terrible. Or maybe you haven't been trading long enough. And you say to yourself, I don't have a strategy yet. I'm just really learning how to do this, and I don't have a valid strategy I can trust yet. Well, here's today's special offer for all of you attending the September Online Traders Conference. We're going to offer you what we call our premier pullback method. This is stock strategy number 1. Now, pay no attention to what it says stock strategy, because when I first started teaching this method years ago, it was mainly for the stock market. But our students around the world told us that it works just as well on the currency pair, just as well on crypto, and just as well on E-mini futures. So this can be applied to any market and as well any time frame. Now, if you're not familiar with what a pullback method is, let me share with you what a pullback definition is. A pullback is simply a sell-off in an overall uptrend. So if the market is in an overall uptrend, we're looking for a sell-off to find some really lower priced buy setups. Now, a pullback can also be a rally in an overall downtrend. So if the trend is going down, we're looking for a little bounce as a selling opportunity at a higher level. This is a pullback method definition. Now let me share with you some recent strategy number 1 signals. Okay, let's look at Google right here. This is coming into last month, August. Okay, as we can see here, it looks like it's going higher, right? Someone could say, okay, we're in a nice uptrend, but maybe you went to that trading room and that guy on TV said, this stock is overbought. You really want to sell it. If you're long, take your profit. And if you're a more aggressive trader, maybe it's time to go short or buy some puts. And for the next 3 or 4 days, it looks like this person was right, okay? But is it really right to go short or right to sell your position? What's the first thing we do? We apply the 50-period moving average. And what does it tell us? It's telling us the overall trend is down. Now, sure, you can always sell above the 50 to exit with a profit or just to get out of a trade. But in order to apply it correctly, you're never going to sell to go short. And what do we have here? This may appear to be the beginning of a downtrend, but remember, if all the requirements are met, if all the qualifications are met, this is actually a pullback. And strategy number 1 calculated that this was actually a pullback and generated a buy signal right here. And look what happened coming into last week. The stock shot up 50 points, okay? Let's look at this example now in Adobe. Okay, we're in an uptrend, a classic uptrend example, higher highs, higher lows. But are we really in an uptrend? This is how most traders fail. We apply our first rule here of applying the 50-period moving average, and we see that, well, sure, we have been rising in price, but we are below the 50, so the overall trend is down, and this is actually telling us this is a selling opportunity. Now, a pullback is a bounce or a rally in an overall downtrend. So this meets all the requirements, and we have not 1, but 2 sell signals that strategy number 1 generated. And look what happened after that. The stock fell 40 points. So what happened to the uptrend? You see how the odds are in your favor if you are in sync with the overall trend. Let's look at this example in Tesla. This was just coming into last Monday, I believe. Now, we are above the 50-period moving average, but for the last 1, 2, 3, 4, we've been closing lower, okay? So does that mean that this is going to be going lower in an overall downtrend? Well, we don't know yet. Let's see what strategy number 1 said. Nope. On the 2nd of August, it generated a buy signal using strategy number 1, and coming into Monday, the stock was a full 100 points higher. Let's look at Lulu, completely different market in terms of overall trend. It's been rising. It looks like it's making a little consolidation, a pennant here before it goes higher, right? But price is below, so we're not even consider buying. And we have here something very unique, what we call cluster patterns. This is when you get a cluster of sell signals. This is strategy one, not just telling you to go short or to sell. It's screaming to go short or to go sell because it's giving you a number of sell signals and nothing yet has happened. And look what happened after that. The stock fell 40 points coming into last week. Now, obviously, it fell here based on some news event or some announcement. But isn't it funny how strategy number one knew weeks in advance to exit or to go short? Now, strategy number one is not based on any fundamental news, not based on any earnings or any announcements or any economic indicators. It's based on market behavior. And it's been my experience that market behavior will often signal what side of the market to be on before an announcement comes out, as we see right here. Let's look at this example now in the Canadian dollar because it can be applied to any market, any time frame. Price is above the 50-period moving average. These daily bars have been selling off for about a good week, but right here at the very low, strategy number one generated 2 buy signals, and in the next week or so was up 165 pips, roughly close to $1,700 per unit. Let's look at another cluster of sell signals, this one in ROP, all right? Same exact example where we have price below the 50, but it is rallying, where most people think, well, gosh, Steve, it's going up, you gotta be a buyer, right? No, this is a selling opportunity because this cluster here is screaming that it's gonna go lower, and look what happened. Coming into August, it fell 50 points. Now it hit some type of a low and started to bounce again. And so a lot of students will say, okay, Steve, now we buy, right? Well, where is price in relation to the 50-period moving average? It's still below. And according to strategy number one rules, all the qualifications were met. And what do we have? We have another sell signal. Remember, pullbacks on an overall downtrend look for bounces as selling opportunities. And price fell another 35 points. Lastly, let's look at APP. Okay, let's go through the whole process. Now, this is going back to July, a couple of months ago. As we can see here, we have a really nice up move in place. But what happened here? It looks like we broke down below that short-term uptrend. And on top of that, if you're a candlestick trader, well, you have an evening star pattern. So that's a significantly negative pattern telling you that most likely the trend's going to change. You're going to have a strong trend to the downside. And lo and behold, for the next 4 or 5 days, it did go lower. So we now automatically assume, well, Steve, this is a downtrend, right? Nope, this is not a downtrend. This is a pullback. Now, why is it a pullback? Well, if we apply the 50-period moving average, we see that price has always been above the 50. And even though we have sold off, this is a buying opportunity, not a selling opportunity. And according to the rules and requirements of strategy number one, it generated not just 1, but 2 buy signals right here towards the lows. And coming into last week, you could have potentially captured 180 points. Do you see how simple this is? This was all done without the advent of looking at earnings, not worrying about economic news or what's going on with interest rates or not looking. It's all based on market behavior. Remember, keep your trading simple and you will get on that road to consistency far more sooner than when you overcomplicate things. Take charge of your trading for the very first time with strategy number one. Now we have a great discounted offer. Normally, our premier pullback strategy sells for close to $700. But for a limited time only, our association with MetaStock and the September Online Traders Conference, we're dropping it down to only $37. Think of that, $37. As I often say, you can't even go out to lunch for 2. You probably can't even go out to lunch for 1 with 1 person for less than $40 or $50. But for $37, you'll get one of our premier pullback methods that's yours to keep. But please remember, this is for a limited time only, probably maybe for the next couple of days, and then it goes back up to that nearly $700 value. You can apply strategy number one to any market, any time frame. We'll give you instant course access, detailed video instruction, all the entries, all the exits and stops, okay? And complete strategy rules. So contact for more information. Here's the link below. I think they're going to also post this on the chat box. Here's the link below that will take you to the info page. Also, you can sign up there if you'd like. It's the Pro Trader Strategies Pullback Trader Strategy #1 course offer, okay? Now, you can get strategy #1 through Pro Trader Strategies. You can also get it through MetaStock as well. So either way you want to go, this is a great, great offer. And I'm going to leave this information up here. I believe we have about 10 or so minutes left to go. If there are any questions concerning what I went over today, about the 4 questions you feel, or I feel I should say, are the ones you must ask yourself before each and every trade, or anything concerning strategy #1, now's the time to ask. I don't know if, Jeff, you want to take the questions, or I can take them. It doesn't matter. Let me just see here. I'll open up the question and answer box.
Hey, Steve, I'm not sure why Jeff isn't responding.
Oh, okay. Is that you, Greg?
I don't know. Yeah, this is Greg. I'm sorry. Yeah, this is the guy behind the curtain.
Yeah.
Let's see.
Yeah,
I don't see any questions.
No question? Well, maybe.
No, you did have one question. Excuse
Okay.
me. One said, could you list the 4 questions here?
Okay.
I'm not sure what you're referring to.
If you don't mind me backpedaling, okay? Because I
Not at all.
I'll backpedal through the presentation.
You have plenty of time, Steve.
Yeah.
Also, I should mention that I don't have that link, and I don't know where what's happened to Jeff. But if you want to, if you're able to paste that link yourself into the chat, that would be helpful.
Okay, I'll do that. I think I may have someone at Pro Trader Strategy may be able to do that. I don't believe it's a live link. That's why I don't have the accessibility to do that.
Oh, I see. Okay.
Yeah.
Again, I'm so sorry to interrupt you.
I gave it to Jeff yesterday. Maybe if you can contact him, he has it. I sent it to him yesterday.
Okay. But I'll make sure we get it up there before the end of the presentation, and
yeah.
I'll call Jeff right now. I'll let you.
Yeah, because you really don't want that great offer, all the people out there, because $37, we've discounted it tremendously, down from nearly $700. But for the person who asked about the 4 steps to consistency, the 4 questions you must ask, here they are right here. All right, if you wanted to copy that down. I believe this presentation, as all the presentations today, are being recorded. But if you wanted to get them right now, I don't want to wait for the recording, you can copy them down. Remember, the first one is, am I on the right side of the market? Another way of saying that is, am I in sync with the overall trend? Because we always want to be in sync with the overall trend. If the overall trend is up, we will only be a buyer. We will only have a buyer's perspective. We will only look for buy signals. If the overall trend is down, we will only be a seller. We will only have a seller's perspective, and we will only look for sell signals. We will never do the opposite, okay? Because as I said earlier, it's a numbers game. And the easiest, the simplest way, but most powerful way to find out what the right side of the market is, the overall trend, is just to apply the 50-period moving average, okay? It doesn't cost anything. You can do it right now. And as I said earlier in the presentation, if you don't believe how powerful this simple tool is that you have access to right now, go back and look at your last 10 or 20 trades, and I can almost guarantee you that the reason why you had some losses was because you were buying below the 50-period moving average and taking sell orders or sell short orders, buying puts above the 50-period moving average, okay? Now, today we just used for question number 2 a very generic stop placement, meaning looking at the most recent high or the most recent low. All right, so if you're long, all you want to do is go back and look at what the most recent low was. That would be your stop placement. If you're going short, buying puts, go back and look at the most recent high, and that would be your stop placement to the upside, okay? The reason why that's so important is because we want to measure the distance from where we'd be entering to our stop placement. How many points would that be? How many points would we be losing? That's how we determine our profit target. So if we be losing, let's say 10 points, we simply want to double that. And if we're long, well, we would exit 20 points higher. If we would short, we would exit and cover our short 20 points lower. We always want to make at least double what the amount of points we're risking. And then lastly, since we know where that exit point is going to be, even prior to entering the trade, always protect your profit, meaning if we get halfway there, move your stop to unchanged, where you entered. Never keep your stop where it was originally if price is going in your direction. So that's the very basic answer to these 4 simple questions, okay? If you don't mind, I'm going to go real quickly back to the link, so maybe you can copy it down for yourself. Going through all these examples here.
Steve, we got the link.
Oh, great.
we went ahead and got it on the chat. You do have an additional question on
Sure.
YouTube if you'd like to answer that.
Yeah, I can't see the questions here. Is there any way you could read it
Yeah,
to me?
you can't see the questions on YouTube, but I can tell you what it is if you'd like me to ask it.
Yeah.
Gavin Trader asks, does this work for derivative markets, for example, Nifty 50 in India?
It works, yes. It does not matter. As I said, we have students in over 115 countries, and all of our techniques and methods can be applied to all markets and all time frames. And the beauty of all of our methods is that there's no reason to, I've seen a lot of so-called traders and educators talk about their fantastic strategy or system, but it only works for a specific market and a specific time frame. If you want to trade another market, you have to purchase another one with a little bit of altered rules. I don't believe in that. I feel that if something works in one market, it should be able to be transferred over onto another market or time frame. So all of our techniques and methods can easily be transferred, whether you're trading currency pairs, crypto, Nifty 50, it makes absolutely no difference because they're all based on market behavior. So when the requirements are met, they don't realize what market, the requirements don't know if they're based looking on crypto or if they're looking at a 5-minute chart of the E-mini futures. They just are looking at market behavior, which is in all markets and all time frames. So it makes absolutely no difference at all.
Hey, Jeff, if you're,
one more question.
Jeff.
Just one more question I always get, and if someone was possibly thinking about it, I know there are a lot of traders who haven't been trading long enough, and they'll always say, gosh, your stuff is great, but it seems advanced for me, or even though you say it's simple, I haven't been trading long enough. I don't really understand a lot of this stuff. Trust me, we have tons of students who have been trading no more than a few days, even a few weeks. So we will be there right with you, alongside with you. And every time someone becomes a student of mine, you get my personal email address. So if you ever want to contact me before the opening, after the close, during the weekends, during market hours, you can always send me an email, ask me to check your work or answer any question. I will get back to you as soon as possible. So as I often say, it's the next best thing to having me right there sitting next to you. So never feel as if you're left alone out there in the woods and you have no idea what to do. We'll be there right alongside with you. So anytime you have a question, and it comes directly to me, it doesn't go to a salesperson, doesn't go to an intern or an assistant. All of your emails will only be seen by yours truly, okay?
Steve wants to know, could you trail the stop on the previous candle high lows rather than stay at break even?
Yeah, the trailing stops are just another technique, and we teach you how to do that as well. So that's just another, remember, we have upwards of 6 or 7 different stop placements in our courses, and so we'll teach you how to apply a trailing stop as well. We have a technique for that.
Okay, I believe we are all caught up on the question, Steve. Sorry, I was actually helping get the next guest logged in, so I wasn't available.
Oh, no, that's fine. I finished a little earlier, so we were just trying to figure out, but there's the link right there. They posted it, and it's a great offer. You can trade strategy 1 through MetaStock or through us at Pro Trader Strategies. Whatever you do, it's a great offer, but it's for a limited time only, $37. So take advantage of it as soon as possible.
All right. Thank you, Steve. I also want to talk a little bit about the add-on that we have for you. So
sure.
I appreciate your time. Thanks for coming in. Thanks for spending some time with us. And we'll see you again real soon.
Okay, thank you. And thank you to everyone attending today.
Thank you, Steve. And thank you, Steve, for the question. That the other Steve, not. All right. Thanks a bunch, Steve. All right, let me go ahead and kind of grab this real quick. And I'll go ahead and show my screen. And this time I'm going to remember to turn on my camera for Greg. All right. So I'm going to go ahead and show the screen.
Thank you, Jeff, very much. I would, while you're talking about his add-on, there are some additional questions, and I wonder if you know the answer to them.
Let's see. What questions did we miss?
He said, can you use the pullback strategy on indices and FX pairs? I believe the answer to that is yes.
Yeah, you can use it on any market. In fact,
then Richard also wants to know, is a pullback strategy using fibs? I'm assuming he means Fibonacci's, not fibs as in lies. I don't know the answer to that.
Yeah, I don't believe so. I do not believe so based on my knowledge of his rules.
And Pam wants to know why he used points instead of dollars. I don't know why he would.
I would blame that on personal preference, Greg.
Yeah. All right, that's it.
I thought you guys were caught up on questions, but my bad. If we do have questions and you want to get in touch with us, we can give you answers. MetaStock.com/sales chat. If we don't have an answer, we'll find it for you. So there you go. Let's go ahead and kind of jump into the strategy number 4. This is an add-on that we developed with Steve Primo, a strategy that he's been running since he worked on the Pacific Stock Exchange, so 4 decades. It does include an exploration, an expert advisor, and a layout. And it does include quite a number of different training modules. So you can see them right here. There's 12 actual lessons that are included with this. It's been one of his most popular strategy that he's used over the years. Very well designed into MetaStock. It'll give you expert advice, commentary, the ability to scan for his setups. Normally, that's a $599 value or retail value. But the webinar, we're going to discount it down to $499. So not only do you get the add-on, you get all of the education that comes as part of that. And we also will back it with a money-back guarantee. So if you try it out and it's helpful for you, you can go through all the training. If it works well for you, you keep it. Otherwise, it's a very high, low-risk scenario. High reward, low risk, because you can totally get a refund. Everything that we sell as a one-time cost has a money-back guarantee. So you can take advantage of this a number of ways. You can give us a call, 800-882-3040. You go to metastock.com/specialist trading A. And you also, if you have any questions on it at all, metastock.com/sales chat. So there we go. Greg, are you still around? Oh, before I bring Greg on here, I do want to say thank you to one of our sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been supporting the Online Trader Summit since we started doing it, and the Traders Conferences and all of the events that we do. Great sponsor of ours. They've been publishing magazines since 1982. A subscription to them will not only get you access to a magazine that's delivered to your mailbox every month if you're here in the US, or a digital version if you're international. It will also give you access to all 17,000 articles. You can go to www.traders.com to get that. All right, Greg, are you around?
Yep, I'm here, just trying to wrap. So I wasn't quick enough with the keyboard to put in Steve's offer, Specialist Trading A. I will put that in just as soon as I'm done here.
Correct. Yeah. And you can also do.
You're throwing out a lot of web addresses there, Jeff, and I was just trying to keep up.
Try to keep you busy. Try and keep you busy.
Keeps me on my toes.
All right. Speaking of keeping you busy, let's give away a prize. You ready?
Yeah, let's do that.
Last time we gave away one of Steve's books. We're going to give away a different one of his books right now. We're going to give away Candlestick Profits: Eliminating Emotions. We're going to give it to the next lucky winner. Greg, I'm watching on YouTube. Maybe I just stumbled across the stream. How do I make sure that I can get a prize?
Oh, that's easy. Well, I'm not saying how to make sure you'll get a prize, but how to make sure you'll be eligible to get a prize. I will tell you right now.
Oh, yeah.
If you're on GoToWebinar, you've already registered. You don't need to do anything. You don't need to register again. Additional registrations do not help your chances of winning. If you're on YouTube, all you need to do is go to the link that I pinned at the top of the chat, or if you want to go to metastock.com, there's a banner at the top. Just click on that. It takes us 2 seconds to register, and you are good to go.
Awesome. Let's give away a book. Shall we?
Let's do that.
Shall we?
Yes.
Okay, so what I need from you is I just need to get a number between 2 and 4,913.
Okay. Ooh, this is a high one. According to Google Random Number Generator, that number is 4,346. 4346.
All right. Dev P, USA again. We're not getting a lot of international winners today. That's unusual.
Less on postage.
Dev P in the USA, you just won this book. Maybe not this exact copy, but one that's very similar to this. Greg, thanks for these.
What might be a good thing to mention, Jeff, is I have noticed that at least once a day, rather than selecting a random number off the Google Random Number Generator, you will actually look at comments that people have made and choose them randomly from that. So bear that in mind, folks, while you're wondering if you should ask a question or enter a comment. We welcome all of those as long as they're respectful and nice.
Yes, and not only do we give away one prize based on feedback, we really appreciate the feedback. It helps with everything, right? It helps with the kind of the retention, that kind of stuff.
Another sure way to
ask questions.
Another sure way to improve your market success is to like or subscribe. I've heard that really helps people's portfolio.
But the prize that we give away for user interaction or for audience interaction is always the best prize of the day. It's the MetaStock Grand Prize. So just keep that in mind and ask questions if you have them. All right, thank you very much, Greg. I want to remind you all of the specials that we're talking about today, including the MetaStock subscription, you can get at metastock.com/comp promo. You can give us a call, 800-882-3040 if you have any questions, metastock.com/sales-chat. For MetaStock's been rated #1 in its price category for 32 years in a row. It can help you scan the markets, test trading ideas. We're going to talk about the Forecaster next, a patented thing that's very unique to MetaStock. What we're going to do as a conference promotion, pricing for MetaStock DC, our delayed chart version, which will give you a daily chart. It updates all day long with like a 15 to 20 minute delay, depending on what you're looking at, is only $75 a month. Our real-time version starts at about $210 a month. If you pay for a month, we'll give you the second and the third month for free. No, just for free. If you decide that it's not helpful for you, again, it's been rated #1 32 years in a row. If you decide it's not helpful, you can cancel, and there's no commitment to keep going. Right now, if you set it up today, that'll run until December 17th. And the cost for that, if you do the DC version, will be about $25 per month. So give it a go. There's a reason that it's been rated #1 in its price category 32 years in a row. Daniel was talking a little bit earlier, and he said it's one of the best products for him, that he loves its ability to identify trades. I have to agree with that sentiment. Scanning is one of those things that even after, I don't know how long I've been using MetaStock, probably about 27 years now, I use it every single day, sometimes a couple times a day. So to do that, give us a call. If you have questions, 800-882-3040, metastock.com/sales-chat, or metastock.com/conf promo. So there you go. Thanks for being here, everybody. Hope you're learning something, all of that kind of good stuff. Our next guest is actually the owner of MetaStock. His name is Scott Brown. He is he's awesome. He's going to talk a lot about the Forecaster today. Very nice guy, very smart. He always does a great job. You're going to enjoy it. Buckle in. You're going to need to. Scott, let's go ahead and get you started. I'm going to go ahead and send you a request to share your screen. And I'm going to send you a request to turn on your microphone.
Jeff, you also forgot how handsome I am.
Yeah, that goes without saying. People can see.
I'm just kidding.
Speaking of which, I just sent you a webcam request too. So.
Okay. But now the problem is people can see me. They're like, ooh, maybe not. Maybe not.
Definitely. So anyway, I can see you. I can hear you. I'm going to go ahead and get out of the way. It's your turn.
Thank you, Jeffrey. You're awesome.
Sure.
I'm going to lower this little glare down here at the bottom. Want to definitely take a minute and just say thank you to Jeff and Greg. Those two are absolutely amazing. Putting on a conference of this magnitude, it takes so much work. And Jeff and Greg always do a supreme job. They're the best. We love them. We appreciate them. And make sure you say thanks, because, you know, when you put on a conference like this of, 40 speakers, and it takes a lot of work to organize that. And this is free. And so if you like this, make sure you like and you subscribe to our content, because you're going to get a lot more of these types of interactions with MetaStock that will help you out. Jeff is just absolutely amazing, and so is Greg. So thank you. There's a glare there that's coming through. Hold on. Let me do it this way. Oh, geez. Let's see if that does it better. Well, there we go. Let's go ahead and launch into our powerful trade identification. We're going to talk about the forecaster. The forecaster is such an incredible tool that we have inside of MetaStock. It's patented. No one else can do this. What I'm about to show you. One of our best programmers, a gentleman named Ken Hunt, really came through and created a product that is so amazing that we put it inside of MetaStock. I'm going to give you a brief history of it. Ken has worked for us for 35 plus years. And we were once part of a larger corporation. And as you know, when you're in large corporations, it gets really hard to innovate and be dynamic, right? And so what he did is he said, you know what? I'm going to leave for a while because I know I can do more than just build a chart. So what we did is he left for a while and he started building what we know today as the forecaster. And at the time, I was running MetaStock, I was the president, and then Thomson Reuters said, hey, look, we're going to sell MetaStock. And so I bought it back in 2013. And what I did is I went directly to Ken and I said, Ken, we need you back. We're going to start creating new functionality, new things. Man, I should have changed that because now it's hot. There we go. And so that's what we did. And at the time, Ken came to me and said, hey, look, I've been creating this piece of software for the last few years, and I really think I'm onto something. So he demoed it for me, and I said, that's amazing. That's exactly what we need in MetaStock. So what was really cool, the best sales job I ever did, he came back to MetaStock, and he created the forecaster. We're going to spend the majority of our time together in the software. We're just going to go through a few slides and kind of talk about those. So what does the MetaStock forecaster do? It's technical analysis that emphasizes, the past. Technical analysis with the forecaster emphasizes the future. So if you were to do back testing, what you're looking at is historical data, right? You're taking a set of stocks, a set of trading systems, and you're finding out if they made you any money in your trades, right? Well, what we're trying to do is see where it's going in the future. And so what he did is he said, look, I'm going to find all this historical data, all these historical patterns. And this historical data and patterns is going to forecast the future based off of all this history. Now, is the forecaster always right? No, it's not. But the forecaster is an amazing tool that really looks at statistics and analytics and blends it into clouds that go to the future. Well, our next slide shows you exactly what I should have shown you in the beginning, and just tell you that, hey, look, MetaStock, there's no guarantee, right, of any of this, and we want to make sure that each of you understand that, and that's why we put this disclaimer up here, is that we're not trying to show you any investment decisions. We're just showing you how to use that software. And so that's why in this demonstration, it's designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. So that's really what we're at. I'll leave that up there for a second, so obviously you can see it, but obviously there's no guarantees when you trade the market that you win. So MetaStock has been the winner of the best analytics software for 31 years. And this is done every year. They ask their readers to pick what the best software out there is. So what does the MetaStock forecast do? Again, it analyzes price action after these past events occurred. So if you're looking at a moving average or a MACD, it's showing you when that's triggered. And it's looking at those patterns and then seeing where it goes after that signal. And then what the forecaster does, it takes all these historical events and it forecasts it into the future. It answers the question, where are prices most likely to be in the future after an event occurs? So let's kind of look at this. There's some things you can do in the forecaster that you can't do in any other software in the world. You can actually draw your own patterns. So I've presented MetaStock hundreds and hundreds of times. I've been all over the world presenting MetaStock. And a lot of times I'll get the same question. Someone raises their hand. Yes, sir, what do you want? Well, what I would like to know is, does yours look at a head and shoulder pattern? Or is there triple top patterns? Yes, we do that. And not only that, you can actually take your mouse and draw your own pattern. You can copy and highlight patterns directly from the chart. The forecaster software is so intuitive, it will create the formula language for you and create that event. It will also rank recognized events, and there's also new included event recognizers that we have in the software. So here's just kind of what it looks like, but we'll dive into the software and I'll show you that kind of how it works, okay? Well, this right here is just, we're looking at, let's see, eBay or Rio Tinto. And this is a moving average 50 cross down. And these little yellow triangles are when the event marker happened for the moving average 50 cross down. And it will show you right here, draws the probability map once you click it. And this one, it shows it a little bit into the future, 30 days. And what it'll do, it'll show you where it's going. Now, right here is the past performance. Now, AI, right, what it will do is once it has new information, it will create differences based on that new information. Well, the same thing happens here in the past performance. Every day there's a new bar, even though this is a static image. So whenever you click on this yellow triangle, this is the pattern and the cloud that will display on your chart, okay? And so even though you're getting these new bars in, a lot of traders would like to know what the cloud looks like with all the new data moving forward past the event marker. So if we click on the past performance, this is what happens and this is what it looks like. Every single time we get a new bar of data in, this can evolve and change. So here's a map with Adobe systems using their systems, and this is a 90-day cloud built into the future. And it shows you it moving forward. So now what we're going to do is we're going to actually do some forecasting, okay? Let's jump into the software. So for example, I have the E-mini chart up. If I right click on the E-mini and click forecaster, it will automatically generate this inside the forecaster. I can also come up here to this icon and I can launch the forecaster directly from this icon. Or I can come up here to the Power Console where I can do a chart, quote center, exploration, backtest, forecaster, or option scope. And if I click on the forecaster, I can pull up an instrument and it will pull it inside of the forecaster. But let's just do this. Let's right click, go to forecaster, click on that, and now we will be inside the forecaster. So E-mini, we're looking at a 60-minute chart, okay? Now this is what it looks like inside of the forecaster. Now over here are all of our recognizers. Okay. Up here we have a recognizer library, and this will also show you all of our different recognizers that we have. So as we have this recognizer library and we have the recognizers here, you can see all the different events that come along onto the chart, okay? With the E-mini here, you can see on a 60-minute chart, we can sort all these event recognizers by what, 9 different distinctions. The first one is highest profit potential, then highest profit potential long only, highest profit potential short only. We have the most accurate current forecast. We have the most pronounced current breakout, most distinct forecast cloud, most recent event, and the most events. What we're going to look at is the most accurate current forecast. We're looking at the LCI bullish breakout. And what happens over here are a bunch of statistics. So we can come in here and really break it down and really geek out saying, hey, look, the event occurs 28 times between July 1st, 2025 and Wednesday, September 17th, 2025. On average, the event occurs every 35 price bars. The recent frequency of the events appear to be increasing. And then it goes in here, hey, statistically, 14 bars after the event occurs and a probability of 95%, the closing price appears to be about 0.3% higher with a standard deviation of 0.0038. The statistical margin of error is approximately 18%. So now what we can do is come on here and say, we want to look at 30 bar clouds, and we could come up here and say, okay, let's go ahead and just click on one of these. You need at least 5 event markers to occur so you can draw a cloud, because all of the statistics it's based on are how many times the event occurs on the chart. So the more times an event occurs, you have a greater odds of probability of that chart being a little bit more accurate, right? So here's one right there of you're looking at 30 bars. Here's another one. Wow, look at this one. So the darker, the brighter the color, the greater the chance of probability the price bars go through it. So if we have a yellow and red, there's really good odds that it goes through it. But then look, over the next 30 days, the darker the color, the less odds of probability. So with that, the blue in there, there's less, but now it's going back into the pink. So with that pink, when we had this right there, there was no, bars in front of this. So when we clicked on this, It said, hey, the next 30 days, we have this chance. And then look at that. The bars went right through where there were greater odds. Let's look at a 90 bar cloud. Okay. So you can see how the chart price went inside of that cloud. And then we actually have a 180 bar, which is even double that. So you can see that it thinks it's going to continually have a chance to go up here into that 66.75 area. Okay. Now, why would people like to use the forecaster, right? Like if it's showing bullish down here and you were able to get in at 6,400 and it went larger, a lot of people like to do this that trade options. When you have these options trades and it shows this out into the future, sometimes you can buy a call or a put out of the money much cheaper if you have this long distance, idea where the market's going to go. And so options traders have really enjoyed using this. Now let's remember the chart or the graph, the cloud that we draw here, it doesn't show these bars in front of it if we got it on that day. But look, we have all these bars of data that have come in. So if we click on the forecast cloud, every single time we got a 60-minute bar, this cloud evolves. So it shows you, hey, in the next 30 days, there's a chance it might be up 0.2%. And that kind of shows you where the short term is going. Also, again, we can do this for the 90 bar, show you kind of a medium range. And then it can also show you 180 bars. Where are we going in the long term? And that is such a valuable tool. Let's look at Bitcoin. Bitcoin, we're going to look at the highest profit potential, and we're looking at a moving average cross down. Okay. As you can see, there's not a ton of event markers that have occurred over the last 5 years. So let's see kind of how it performed with just these bars right here. Here's a 30-day cloud. And oh, look how interesting. It kind of forks there and says, hey, you have an opportunity for it to go higher here, but it's not as great as the opportunity as we have down here. Let's look at a 90 bar. Okay. And then let's look at a 180 bar. Oh my goodness, look at that. I hadn't even pre-looked at those. Look at that. So again, this is what I mean by an options trader. So right here, we found Bitcoin trading at about 80,000. Look at that. It came up here and said it's going to reach potentially in about the 130,000 area. And if you would have known this, if it was in the 80,000 area, that there was a really great chance of probability for it to go up like that, that would give you a strong, chance to buy. And so you took this from about 80,000, all the way up here to about 120,000. So about a 50% gain here on Bitcoin. Now, the great thing, again, remember, if we use this right here and we click on this, but when this event marker occurred, there were no bars to show us that it was going to grow. So what we would do, remember, we'd go up here to the forecast cloud. And the forecast cloud would show us every time we got a new daily bar where the potential is going. And as you can see, that potential grew, and it grew. We got about 50% of our trade from the Bitcoin. So that's pretty strong evidence there of how good the MetaStock forecaster can be. Again, there's no guarantee here. So people will ask all the time, this works, what does it work on? I'm showing you it's working on futures. I'm showing you that it's working on Bitcoin. I'm showing you crude oil. We're looking at the euro, and then we're going to look at Meta. Okay. So the next one we're doing are the most events. And here's some indicators I created. One of them as Jeff Best, MetaStock employee ever. And look at all the event markers. This occurred 143 times in the last 5 years. Okay. So statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 0.05% lower with a standard deviation of 0.0530. The statistical margin of error is approximately 8%. Again, the more event, markers we have, the greater the statistical margin of error goes down. So what we can do in here is we can come in here and say, hey, let's look at these historically, and we'll see how they performed. Here's one, randomly selected, and it can show you that, look, the price is moving through that pink and purple, right? If you wanted to see what it looked in a 90 bar, let's look. Oh, come on now. Come on now. Who's lucky they tuned in? You are. Look how cool that cloud is. It's bright red, and it goes through it. And then, look, this cloud drops. But it's bright right there, right? So if you knew crude oil that was trading around 80 would be dropping down to 65 to 70 in the next 90 days, come on. As a trader, that is something you would love to know. Let's take a look at the 180 bar. And let's see where this goes. I literally just randomly selected these. And look at that. It was dark pink again out here. And the price movement did go through it. Now remember, when we clicked on this pattern, we didn't know where any of these bars were going into the future. That's why we come into the forecast cloud. The forecast cloud will get new data every day, and it will redraw the cloud to show you where that current market environment is. So as we come out here, we can say, okay, let's see where the current one is going. So that's 180 bars out, and then let's just see where the 30 is going. Okay. So it's showing us where it thinks its crude oil is going to go into the future, and it really thinks it's going to kind of maintain, right? Might drop down to 62. Again, in a 90 bar, it thinks it's going to drop down to around 60, 180 bar. Let's see where this thinks it's going to go. Looks like it's right in there, about 60. So that's kind of where the forecast is based on this indicator that we created. The next one, the euro. So if we have people interested in trading the euro, right? This is a distinct forecast cloud. And this one is based on the trend surge down. And we can come in here and look at historical ones. It mirrored the cloud pretty well on a 30 bar. Let's see where a 90 bar is going. Look at that. Man, went right through it. Let's take a look at the 180 bar. Yeah, look at that. So it was pretty sure up to that point. And then the blue followed it. But the blue, remember, is only about a 40% probability, but it did follow it through there. So let's come here to the end and let's see where these latest ones want to go. So our latest event marker was July 29th. And look at that, it followed it right through there. And there's a little bit of pink and purple there. So it thinks, hey, look, it might get to about 1.18 right in there. And again, if we go to our forecast cloud, every day we're getting new data, right? And it says, hey, look, clear out here. You know, there's a probability of that being up maybe 1 or 2%. But it feels like, according to the trend surge down event markers, it looks like it's going to be kind of maintaining. Nothing too crazy out there. And the last one we're going to look at is Meta. We're going to come in here and let's take a look at, we can look at highest profit potential, but I want to find something that has, this one has a bit more. Here's the, let's see. Here's the 52 weekly high. And as you can see on Meta, wow, it has been on a tear lately. So let's come in here and we're going to look at the 30-day cloud. See here, it thought it would be a little lower, but it went above it. Let's try a 90 bar. Wow, look at that. Thought it would drop a little, but where the bright red is, there's more probability here than the pink. So it thinks it's going to come out to somewhere in the 700 range. Wow. So again, if you would like to trade options, you know, maybe there is a put there, right? That right now you're trading at about 800 and it feels like it's going to come down to anywhere from 675 to 725. Wow. And again, if we go to our forecast cloud, every day we get new bars in, this cloud recalculates based on every single new bar of data it gets in. It's constantly evolving with the current market. So cool. I love showing this piece of software. So now I'm going to show you something that is super, super cool. In the Recognizer library, if I click up here on this tab and I go to draw new pattern and click on it, I can come over here and say, let's draw a pattern. And we're going to call this trend bullish. Okay. And I can manipulate every one of these circles. I can come in here, I can invert it for, let's say we want to do a trend bearish. I can reverse the pattern. And then I could say, hey, I want the cloud focus to be on 30 bars, 90 bars, or 180 bars. Okay. And then I can come down here and I can save it. And then I can go onto my chart. These are alphabetical, so trend bullish. And I can scan. I can scan the MetaStock. How cool is that? No wonder why I did that, MetaStock. How many of these event markers come onto the chart? It happened 23 times, right, in these trends. And let's go ahead and look at it. And we can just kind of click on different ones as they go. And you can kind of get a feel of how that looks, how they work. But that was me drawing my own pattern with my mouse. There's no other software that I'm aware of that does that except for MetaStock. The forecaster tool that I'm showing you is such another great tool to have in your toolbox to really see, where the market is headed. I mean, look at this one. It followed the red perfect and the pink. We can see what a 90 bar looks like. Oh my goodness, look at that. Look at that. Well, will you look at that? Just look at it. That's amazing, right? It's showing these right in here, and the cloud and the price action from the chart. Obviously, they came together right there. So that's pretty cool to see there. If we go, this is really cool. I'm going to show you something that I think is unbelievable. So if you're a current trader, and all of us have different trade setups that we love, that we see the trade setup and we're like, okay, it's hit this criteria. I am going to buy this stock, right? Or an option or whatever. Well, let's say you see that directly on your chart here. All you have to do is click user defined pattern select. And I'll come in here and say, let's look at 5 bars that were uptrending. Okay. So we click yes. Let's name this MetaStock users are the best. Click save. There it is right there. We're going to rescan selected analyses on the meta chart. And what we did is we just created a pattern. Okay. So that pattern that we highlighted, it has to be within 75% match. That one's at 89. Here's 75, 78, 83, 87. And it shows you the confidence of these. So we can come in here and select one of them and it will draw out that pattern. Look at that. On a 90 bar, you saw me. I just highlighted 5 random bars, created a new indicator, a new event indicator, and it draws these clouds right on the chart. So I didn't know how this would perform. And as you can see, it performed really well. Look at that one, 90 bars. And it went through that purple the whole way out. So where is this going? We just got a new one today. Look at that. So 180 bars out into the future. this one says, hey, look, there's a chance that it keeps going up to 850. Such great things to look at. Okay, let's go back into MetaStock and we're going to go to our Explorer. So we can get to the Explorer. The Explorer is a tool in MetaStock that can scan the market based on the user's criteria. So I can either access it here from that icon, or I can come up here to the Power Console and I can select Forecaster, and it's going to say, hey, what do you want to scan? And I'm going to say, how about we scan the NASDAQ 100? Okay. So now I'm selecting the data that it's looking at. And now what I'm going to look at there we go. There we go. We want the NASDAQ 100. Oh, I'm in Forecaster. I'm like, why is, excuse me, guys. I needed to check the Explorer. That's my bad. So my top box up here will show me all my forecasters that I can look at. So for example, let's look at the MACD cross down, and let's look at this with the, let's see what we have selected here. Let's do NASDAQ 100. And what this will do is this will scan the whole NASDAQ 100 based on the MACD crossover to see if there has been anything that has been triggered right now. Because as we all know, the hardest thing to do is to find something to trade. And when we find something to trade, when do we get in? And then when do we get out, right? Those are the hard things to know, because all of us can say, hey, I would have sold here or I would have bought here. But it's a lot different when we're trading with real money, right? So as this scans through it, it'll bring back some selected stocks for us. And it says, look, Datadog had a signal of the MACD crossover. So let's go ahead and open that up. And we just double click it and the chart pops up. MACD cross down. And we can look at this in the forecaster. Remember, every time you bring up a chart, it is scanning it against all 80 plus of those individual events that are on the chart. So here's DDOG. And it's going to go ahead and rank all of the recognizers in this library. So it will tell me what was the one that had, good odds of probability. Let's look for one that has more than, let's say, 15. Let's see if this one has a little bit more. Yep, this one has 25 times. So we can come in here and say, oh, okay, oh, wait. We want to look at the MACD cross down, duh. And let's see where that's going. Over the next 90 days, it shows pretty much, it'll be around where it is today. So, this is the amazing stuff about the forecaster. Let's go back into our, We showed you that you can do this in the Explorer and actually scan all of these different events. We're always putting in new forecaster events, new rankings. We went through on how you can draw your own patterns in the forecaster. Basically what you'll do again is you will select the recognizer library, draw a new pattern, and then use your mouse and create, you know, a head and shoulders pattern. If you don't like it there, you can be like, oh, I need to bring that down. This needs to come down. I can then invert it if I want it, have that same pattern, but affect it a different way. And then MetaStock Forecaster will then calculate all of the formula language behind the scenes and put that inside of your forecaster, that you can see all the new event markers on any security that you want. Like I said, draw your own pattern. There's a double top. Isn't that cool? So we've gotten kind of to the end, and MetaStock Forecaster can do so many great things. The forecaster can really project a cloud based on all these historical events that you get a pick from. It will then rank them based on 8 different rankings, anything from highest profit potential to most accurate current forecast cloud, most events, those types of ideas. So the great part of it is, how much does it cost? I've only shown you maybe 5% of what is inside of MetaStock. MetaStock has been around for 40 plus years. We've won the Reader's Choice Award for 31 years. So if you're a real-time trader, MetaStock 19 is what I have been using. You can use this, and it's $265 per month. This includes the real-time data, the market data and news, you know, and it excludes the exchanges. So you're getting an amazing, superior product that real traders do, professional traders use, you know. But the retail trader that we're selling this to, this gives you the edge against other traders. If you're a user that wants to use delayed market data, it only costs about $75 per month. And that will provide you with everything that I've shown you so far in the chart. Well, what we want to do to get you inside of it is we want to give you a 3-month trial. If you buy 1 month and get 2 free, would that be worth it to you? Absolutely. So for 3 months on delayed data, you can get MetaStock 19, the data region of your choice. Our support team is superior to anyone out there. What you can do is call in. They'll even take over your computer if they need to help you get everything installed and ready to go. Now, I showed you just things about the forecaster. If you want to learn things about back testing, scanning the market, the RMO, Kelly Clement, our current president of MetaStock, is the one that created this amazing tutorial. We normally sell it for 99 bucks, but we'll just give it to you for free. Or if you want real time, it's only $265 for 3 months. And that will give you all of these amazing tools that we have. Now, you can call in. We have sales guys standing by. Our phone number is 1-800-882-3040. That's 1-800-882-3040. You can also reach us by metastock.com/sales-chat, and that will let you chat live with one of our sales reps. Or you can go to a landing page and order this yourself at metastock.com/conf-promo. I'll leave these up while I talk just a little bit more about MetaStock. You know, 13 years ago, when I had the opportunity to buy MetaStock 100%, I was all in. it never even questioned in my mind. I was meeting with a gentleman that was my new boss. He just came over for Deutsche Bank. I'd never met him. I was in his office. And within 5 minutes of talking to him, he said, "We are going to sell you." And like that, the smartest probably thing I've ever done in my life, I looked at him and I said, "Can I buy it?" And he said, "Sure." It took us about a year to close the transaction. And I have owned MetaStock now for 12 years. And it was been the best decision financially and business-wise I've ever made. And I'll tell you why. Because one, the people that work here are the best you're going to find. They're the smartest, the best programmers, the best support team, the best sales team. Our support team, if you call in, you will get a survey about your satisfaction of your interaction with the support rep. In the 25 years I've been here, I've never seen it below 90%, and it's usually 95% or better. The people that are here are what make a difference. The other thing that makes a difference, we have an incredible product. You don't go 31 years in a row with technical analysis of stocks and commodities magazine without having a supreme product. Institutions, banks, professional traders use us, but also our core user is the retail user, right? And that retail user, we're all over the world. We're in over 80 countries throughout the world where we are actively selling and have resellers and dealers across the world. I would really highly recommend trying MetaStock out. If you're a current MetaStock user and you saw what I presented, you really need to upgrade to MetaStock 19. That's exactly what I demoed today. That's what Kelly Clement demoed yesterday. You need this in there so that you can have the opportunity to give yourself an edge. The reason you came today wasn't just to hear me speak, right? Or hear other speakers. You want an edge to make more money. That's what this whole thing is about. And MetaStock, the toolbox that we have, gives you that opportunity and that chance. So with that being said, give us a call, 1-800-882-3040. Let us know, that you want to try this out. We'll get you set up or upgraded. And now let's just turn it over to questions, Jeff, and go from there.
All right. Hey, thanks, Scott. One of the questions that we get a lot is, what kind of markets do you support?
Oh, that's a great one. So market support, we have global markets, right? So if you were wondering about different equity markets globally, we have everything from North, South America, Middle East, Asia, Africa, Asia Pacific, North and South America. But also, if you remember, I showed you inside the software that I was looking at everything from futures. We have currencies, we have crypto, we have commodities, we have stocks. You can look at options. Those are the different markets definitely that we look at. We have fixed income as well.
Very cool. And with the forecaster, can you use that on intraday data?
Yes, and so I did show it both inter and intraday. We were looking at, if you remember, the E-mini in a 60-minute chart, and we were also looking at the others on a daily chart.
Perfect. That's the end of the questions. And how long is the 3-month trial for? Good for?
Oh, that's a good question. I think it's 90 days. No, I'm just teasing. It's 3 months, of course. Buy 1 month, get 2 free. Jeff Gibby is the most. He's been here longer than I've been here, and I've been here 25 years. He runs all of our sales. He runs all of our international sales, all of our partners. And he's a big reason why we have such success. And Greg Lewis, who's also talking to you guys, is our marketing manager, who does an incredible job making sure that we are marketing to the right places. So my hat's off to two of them. But the reason why I bring them both up, again, a big thank you and thanks to them, because without them, these don't happen. This idea was Jeff Gibby, and Jeff Gibby brought this to life. And to bring 40 speakers together for free is an enormous amount of work that both him and Greg do. So thank you to both of you. Great job, Jeff and Greg.
I'm applauding myself. And just to kind of answer that question, we're going to extend the offers for a whole week. So any of the offers that we're doing here, like the 90-day trial, any of the add-on offers, all of that kind of stuff is good until, I believe it's the 25th. It's the Friday after next. So, Scott, thank you very much, man.
Thank you, guys. Kick me out.
All right, get out of here. Okay, I'm gonna do that. You can go ahead and kind of move this over here. All right. Also, kind of just want to remind you, like we've talked about the forecaster, we've talked about, system testing. I've talked ad nauseum about scanning and kind of the tools that are available in there. It's just kind of the tip of the iceberg in terms of the systems that are included in MetaStock. There's a couple hundred really that you can go in and test and evaluate and apply. And unlike a lot of the software that hasn't been around and been winning 32 years in a row, don't just have the development cycle that MetaStock has. I truly believe MetaStock is a product that you're not going to grow out of. And so, don't forget about all the extra stuff that's included. I have a picture here of the Ichimoku system that I'm not doing a class on this one this week, but it'll allow you to apply Ichimoku to your chart and understand what the cloud's doing, where support and resistance are based on the cloud. It'll allow you to test it. There's a new gap identification system that Kelly put into the software to help you identify gaps and understand what they're doing and what they work with. And we included ETS. There's literally hundreds. We included JBXC this last time. Hundreds of systems that are included, and we understand that it's a toolbox. It's also something that you're not going to invest a lot of time into and outgrow, because there's just so much you can do with it. But since it is a toolbox, we want to make sure you understand how to use it well. We're going to include the Unleash the Power of MetaStock video series that are going to help you kind of get up to speed and running. We're going to have you sit down with one of our support reps and kind of have them do a white glove installation where they show you around the software, answer any questions you've got. That's an appointment that can last up to 2 hours. We're going to give you unlimited access to our support desk. So if you ever have any questions, if you ever want to get something kind of figured out, just give us a call, chat online with us. We'll be more than happy to help you. And as Scott just said, they do a really, really good job of helping you out. And when was the last time you were 100% satisfied with a support call? It's not uncommon with us. It happens all the time. So all of this, $75 for the DC version, $210 for the real-time version. If you buy a month, we'll give you the second and third month for free. You can run it until December 17th. If it's helpful for you, you can keep it. It's only $25 a month. What are you spending $25 a month on for this extended trial? In any case, give it a go. 800-882-3040, metastock.com/saleschat or metastock.com/conf-promo. So we're coming right up towards the kind of the time right now. I do want to personally invite you to join our community at thetradersforum.com. Tradersforum.com is something we've been working on for a little bit. We've got over 1,200 members as of yesterday. We haven't been really putting this together for too long, but I've already learned a lot of things that have improved my trading dramatically. You can come up here, you can join for free. You can chat with other traders, learn about the markets. There's tons of resources that are available for you. Thetradersforum.com. Join it. I look forward to seeing you. We do all kinds of cool events too. We'll talk about different technical analysis indicators. Last week, like I said, we talked about CanSlim, Bill O'Neill's methodology for identifying stocks. We talked about Ichimoku, all kinds of lessons, anything from stochastics to MACD and beyond. Thetradersforum.com. All right. And we've talked ad nauseum, but Greg, it is time to do prize time.
That's my favorite time.
Yeah, right.
Prize time is always my favorite time.
I think lunchtime is mine, but prize time is a close second. Okay. All right, I'm ready. This may be the last time we give away this book, Greg.
Is it around the horn?
Yeah, this is around the horn. We were talking about how I only have 3 copies left. We gave 1 copy away yesterday. There's this copy, and then there's the copy that is my copy, which I'm not giving away. So
has Adrian signed your copy?
No. I should next time I see him have him give me a signature.
Absolutely. I'm sure it's a collector's edition now.
So in any case, this is Around the Horn by Dr. Adrian Mance, a guide to his visual patterns and kind of what he looks for and all that kind of stuff. He talked yesterday, did a really, really good job. This book is not in print right now, and I think he's doing a second edition. So it was a $95 value. This is the last copy we will probably give away at the Traders Conference, unless somebody doesn't claim it, and then I'll give it away next time. So, Greg, let's go ahead and give it.
All right.
Let's go ahead and that does happen. If I send you an email and I say, hey, you want a book? Send me your address. Just give me your address. I'm not going to do anything funny with it, unless you're Greg.
Okay.
All right, Greg. I just need a number from 1 to 4,913.
Okay, according to the Google random number generator, that number is 2044, 2044. While looking that up, I want to remind people that Jeanette Sims is coming right up. She's online, raring to go, so don't miss that. Just hang around for just another minute.
Okay, David A, Hotmail account, USA. There you go. You won the prize. I'm going to put you on the list. If I email you next week and say, what's your address, send it to me. Otherwise, we'll just give away this book again next time. Greg, thank you.
Congratulations. Congratulations, David A.
All right. Cool. Our next speaker is Jeanette Sims. Jeanette is a long-term friend of mine. I've known her for, I think the very first trade show I went to, which would have, I'm not going to date it, I would have been a minute ago. The very first trade show I went to, or the second I met Jeanette. Jeanette's always been awesome. I want to say, though, that this is the first time she's going to speak at one of our events. So I'm very, very interested to see how she does. I know it's going to be awesome. I read through kind of what she was going to talk about, and I'm excited. So Jeanette, let's go ahead and get you started. I see you.
Can you hear me?
I can hear you. Let me make you the screen. Let me give you the screen share too.
All righty, let's see what I got here. Just looking for the PowerPoint. There it is.
I did just get your email, Jeanette, that says, do people turn on their cameras? And what I found is only the really good-looking people turn on their cameras, like Greg and you and me.
And you, I see you.
All right, I can see you. I can see your slides. I can hear you. I'm going to turn the time over to you. Thank you.
Okay, thank you. All right, so 55 minutes, they said. All right, everybody. Quick question. Can y'all hear me and see me and see my screen, see my slides? My people always fuss that you can see the top of my tab, but it's what works for me. All right, so I'm gonna do a quick reorg over here of where my stuff is. Okay. All right, let's go. Okay, all right, so today, I think they gave me 55 minutes, so we're gonna cut right to it. I'm gonna be talking about how I use time-based patterns to find trend setups. And so there's your risk disclaimer. And of course, the lawyers make us say that. It's always gonna be past performance is not indicative of future results. And so everything I say here is for educational purposes only. Don't trade with your milk money or your kids' college tuition. That's what I always say. So today I'm going to hand you 3 time-based setups designed to find high probability trades. And the goal is to replace the stressful all-day guesswork that you have with some calm data-driven processes. And so that's going to be our big thing today. All right, I'm going to shrink this up just a little bit. Alrighty, sorry, just a second. Okay. All right, so that's me. I'm Jeanette Sims. I've been in the game for a hot minute. Started to learn to trade back in April 2001. I had the great privilege to sit next to a very smart man who taught me everything I know. My first trade was actually in the S&P futures when it was, I think back then we had to write our orders down on a ticket and then call the broker and get them to call us back and give us our fill. So I was raised on futures. I'm a tape reader. I've got 2 kids, 2 huskies. I think it's important that you know I have 2 huskies because one of them is a baby. He's a year old, and he might just bust in here and jump in my lap sometime during the presentation, even though I've got 3 people paying attention to him. He always seems to find his way in here to me. All right, so I left corporate in 2011, and I founded my company, which is Trade Thirsty, TradeThirsty.com, and that's where we give out free educational content, bring in presenters, just like what my friend Jeff Gibby is doing here today. We try to bring what we believe is the best of the best to teach you what's going on in the markets. Okay, all right, so before we get started,
Jeanette?
we gotta stop. Yep.
I'm sorry to interrupt. You've got a window covering up your window that we're looking at. I'm not sure if that's intentional. Now I just see where it says "Let's talk now."
All right, hang on.
It was like a side window was partially covering up your main window. It looked like your notes window.
It is not.
Yep, trying to help me remember what I'm supposed to say. Well, now I don't know how to, let me see if I can shrink this up.
I'm gonna let Jeff take over because he's the expert on this, not me.
I got it. Can you still see it okay?
No, yeah, it's fine, and your notes window is no longer visible, Jeanette.
Yeah, all right. Well, just so y'all know, Jeanette Sims, not a professional presenter, and all good people are prepared, right?
I think by definition,
good thing I didn't prepare.
Jeanette,
mention that you have a big crush on Jeff Gibby. Don't let the people know. Don't say it. Don't say it out loud. That note hadn't showed up yet, I guess. I'm kidding. I'm kidding. You know, just bear with me now. I got to reset this over here so I can see it. All right, so we're going to talk about the big elephant in the room, and I know this one, that we're not talking about Bama football either and how it is not doing what it's supposed to do this year for your old friend Jeanette, because I'm a big Bama fan. We say roll tide down here in my part of the country, and we're not talking about that at all. We're going to talk about the Fed, right? So if the Fed decides to pop and drop while I'm here talking, you guys let me know. And so that's like no pressure, right? No pressure to put me on right around the time that the Fed is Fed's going to talk. Gibby, I appreciate you, dude. Appreciate you so much. All right, so first of all, this is like a big claim to make, right? But it feels like it's like the most hated bull market of all time. AI has sentiment around 72% of investors are neutral to bearish for the next 6 months. And so, look, I'm going to say me included, right? Because every day I wake up and say, how can this thing keep going higher? Like, why is this thing continuing to go higher? But then I remind myself, it's not my job to question the tape. It's not my job to try to figure out what's gonna happen in the market. It's my job to just look at opportunity and then figure out what to do with it. And that can be a tough thing for us as traders, right? But it's just what's going on right now is just crazy in the market. So we're going to talk about 5 habits first, and then I'm going to go through 3 time-based setups that I use. And these are things you really have to have as a trader, period. All right, so I'm going to get into them now. Habit number 1. Most traders believe that if they had one magic indicator, just one little thing, that would make them successful. And I think a lot of us believe that, right? We just need one secret. If I just had one magic indicator, then I'd be able to make money. And what this leads you to is basically a black hole that most traders never escape. They jump in with one mentor, and then they get a bunch of complex theories, and then they go try something they watched on YouTube, and then they end up with half a dozen misunderstood strategies and really become the master of none. And so by refusing to be the master of one strategy, they are basically maximizing their decision overload. I mean, I'm 100%, like I've done it, been there, done that. You know, should I use volume profile? Should I use MACD? And you get stuck in that state of constant strategic confusion. And a lot of times that happens before the market even opens up. This is one of my favorite quotes, right? I fear not the man who has practiced 1,000 kicks once, but the man who's practiced one kick 1,000 times. And this is how trading works. Like, this is how forming good habits work. It's finding the best kick and then doing it over and over and over until you own it. All right, so that's number one. Number two, plan your trades, trade your plan. How many times have y'all heard that? I mean, I think the truth is that a lot of traders allow their thoughts and their emotions to get in the way of generating wealth. And it's happened to me. I mean, it's happened to me more times than I can count. That's why I'm putting it on here. Most successful traders out there always follow their trading plan, regardless of emotions, regardless of new information. And so you'd rather, this puts you on defense, right, rather than offense. So like in football, no matter, I'm always going to talk about football, but by the way, I love football. This is, I say I'm a summer girl and summer's my season, but I really love college football and I love NFL and a lot of other sports too. But so like in football, no matter how good you are on your defense, we all got to score touchdowns to win the game, right? So offense runs calculated plays every time, but if one player went off and did his own thing, then you'd never score. Like we never put any points up. And so if you trade without a plan, then it forces you, if you trade without a plan, forces people to make a critical decision, right? It's like entry, exit, stop loss. And you end up doing that in the heat of the moment. And trust me, you do not want to be in the heat of the moment when it comes to trading the markets. You have to put your plan in place. This is why, like, anytime, good profit can be erased in a heartbeat. Hard-earned profit can be erased in a heartbeat if you don't have that plan in place. And I was like, this sounds boring, right? You're probably like, you get this one all the time. But the simple truth is that you got to stop improvising. Great traders follow a blueprint, not a mood. Before you click buy, know your entry, know your stop, know your target. Every single time, I'm talking every single time, not here, there, and everywhere. You got to know where you're wrong. All right, so I'm gonna give y'all a second to write these 6 things down because I'm not gonna go into super detail on all of them. But I hear traders, just so you know, like I've trained tens of thousands of traders. I've been running trade rooms, running websites, helping a lot of people in the industry grow their businesses. And so I am right there in it with you, not just as a trader, but also learning and understanding what it takes to help you be successful. And I hear people say all the time that they don't use stops. And I look, I get that, okay? For an advanced trader who's watching every tick and ready to jump ship when it's time, that's one thing. But if you're testing waters on a new strategy, or you're just getting started in the game, you better put a stop in and live with it. You better pick a place where you're wrong, or you won't just blow up one account. You'll blow up several accounts. And if you've been around more than a hot minute, then you understand what I mean when I say blow up your account, right? It's you just get to where all of a sudden wake up one day and all the money's gone. You got to start over. You got to write checks to the broker. You got to go tell your wife, your mom, whoever that uh-oh, I'm out of money. I got to start over. And so I put up on here like these 6 things. Hopefully you've taken a second to write them down. Pick the market, whatever market that is that becomes your thing, right? Figure out what strategy are you gonna scalp? Are you trying to, if you're trying to trade options, what type of, are you buying calls, are you buying puts? Which way do you think the market's gonna go? Get your entry, pick your profit target, and put in your stop. And from there, it's money management, right? Which is also like a whole other psychology course on its own. But the one thing I can say is, like, get out your notebook. This is my trading notebook, and there's a reason it's green, because I want to make money. So write it down and follow it, and that's all we can do as traders to try to get that that consistency. And so Let's talk about trading routine, okay? You don't have to be glued to the screen. Some people are like 2, 4, 6, even 8 hours looking for opportunities. And like, you know, feel like, oh, if I miss a day, I'm gonna miss one big move. That is not the way to look at it. I mean, you can, in one of the trades I'm gonna talk about later, I've identified that there's a day of the week not to make the trade. Just historically, that day of the week doesn't work. It's a head fake 9 out of 10 times. It's not worth taking the trade. I know the statistics, so I ice it on Friday, and I don't worry about it. But you know, you might need to go on vacation or need to take a knee, take a day off, go take care of your personal life, right? You don't have to stare at and study it all day long. If you think like that, every tick, 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 it's going to lead to burnout. Been there, done that. I used to trade the early market, the midday market, the night market, and looking for opportunity, trying to master my craft. And all that did was create lack of sleep for me, which I don't know what that does, right? So if you show up tired, distracted, and unprepared, you're not even going to be ready for the opening bell. Like I said, when I used to trade the night market, it was, I'm talking like insane that I thought I could get up and go to work and trade the day market and be present. It was virtually impossible. So I'm gonna say this out loud, and I want you to say it to yourself. Markets love patterns, and so should I. Morning prep, midday check-ins, end of day reviews. Keep it tight, keep it repeatable. And the market taught me to pattern watch. I don't know, you know, you guys can put in the questions box what there's certain things you're looking at in the market. Like what are the indicators that you're using every single day? What are the things that you believe are going to help you make money? They are the things that are they're your go-tos. They're your regulars. They're the things that you believe are going to keep you in that consistent mode. And so people are made up of patterns. And so I'm just going to tell you a quick story. It was sort of actually one of my aha moments about people and patterns. When I was younger, because I'm still young, right? When I was younger, I had a new boyfriend, and he insisted on picking me up from work. And some nights I would work late. I worked till like 8 o'clock. And that was great, right? He wanted to come pick me up. He wanted to keep me safe. But around the 6-month mark, he didn't show up. Like just flat out didn't show up. He didn't answer when I called. And like this is before cell phones. That's why I put this picture up, because this literally is me, right? Standing in the break room, you know, on the handheld over in the corner, scrolling, trying to get him on the phone. And so I caught a ride. I was mad. I left work. And then the next day he played dumb about it, said he turned the ringer off and he was watching TV and forgot. But look, I knew immediately, right? Something had changed. Overnight, something was different. And you know you've had that moment before, right? With people and with the market. It's made up of patterns, and people are patterns. And so that guy broke a pattern. And sure enough, 2 months later, I found out that he was cheating on me. And so the market makes patterns and it breaks patterns. It breaks patterns. So you have to learn to recognize both. That's so critical that you learn to recognize both. When you're in a pattern, when you're in a trend, and when the market goes, uh-oh, hiccup, you know, a lot of things can cause that. But so I want to transition here and talk about like your pattern. Like how do you start your day in the market? Do you guys have a playbook for that? Do you have like your checklist of what you're going to do every day? I always like to ask the question, like, what's the first thing you do when you wake up? What's the first thing you do when you get out of bed? And it's interesting to me what people say they do, right? They're like, well, I turn on my phone, I turn on the TV, I turn on the news. I brush my teeth. I go straight to the bathroom and brush my teeth. And I once had a guy call me out about that. He was like, well, you know, I'm going to drink my coffee first because then I'm going to have to brush my teeth anyways. I'm like, okay, that's fine. That's your way, right? But my way is brush my teeth first. And it's like life. And look, I see the comments coming in now. Yeah, okay, right. Everybody's got a different thing, right? And it's exactly what I just said. Look at my phone, look at my phone, look at my phone. Y'all stop looking at your phone. Stop looking at your phone. I guess that's my bottom line here. But if that is, look, if you're a creature of habit and that's your pattern, stay with your pattern and recognize that that is your pattern. That is what's going to keep you in your habits. Okay, all right. George, so I'm gonna look over here, Shane, Marianne, Phil. All right, a lot of you guys are saying you have a pattern, you have a playbook. If you don't have a playbook, you really need to sit down and think about what that looks like for you. So my routine in the market looks like this. It's go and get my numbers. We'll talk about what those numbers are in a minute. Look at what the overnight market did. I see if there's any big scheduled news like today, the Fed. I look at my personal calendar and make sure there's nothing that's going to get in the way of what I'm trying to accomplish in the market. I go and look at positions I'm in, and then look for opportunities. And then it always comes back to this, right? Plan my trade, trade my plan. If I sit here and say, oh, today I'm going to go get into this stock for whatever reason, and then it's 2 in the afternoon, and I never went and did the thing, right? I never went and actually turned on that machine and made the trade. There's no looking back at that point, because by 2 o'clock, if I thought that was the day to get in, if it made its move, then I'm going to be in FOMO, right? So plan your trade, trade your plan, follow the plan. And if you're not serious about treating it just like this, like it's a business, you can come to all the freebie crap you want to. Like, I call it crap, right? This is not crap, this event that my friend Jeff Gibby and his people are putting on over at MetaStock. It is important to go and look around and see what other people are doing and how they are successful. My point here is don't spend all your time out there just continuing to absorb all the free content you can get. You're going to end up with such a cloud of what to do next because you haven't really tested anything. If you really want to put your feet in the water, you got to align yourself with somebody that resonates with you, or your personal goals and outlook on what you want to achieve in the stock market. Align yourself. If it doesn't work out, go pick another one. But putting them all on top of each other, that's not going to get you there, right? All right, so I'm going to break down my routine here for just a second. Make sure we're still got you over here, Jeff. I guess Jeff, if something goes wrong, you need to just call me because I can't look over there on that stuff too. Should have gone to my bigger screen, eh? Okay, so create a morning prep, right? And I do it with a template. Let's turn this on. Okay, all right. Mine is like my numbers of the day, big news announcements, like today in the Fed. Any key information that I have that I got to keep in mind about positions, like earnings or whatever. If you do that, it'll build discipline for you. It'll build mental clarity, and it gets you dialed into the market. And I've been doing this since the very beginning. So now I'm going to give you my playbook. All right. So I started trading in markets in April of 2001. And so I worked for a day trading firm at the time, and I had all of this opportunity in front of me. I spent 10 years there sitting 20 feet away from a pure day trader, from a tape reader. I had a clean chart. I had no indicators. And this is back when we had to call in, like I said, the orders to the floor, write them down on a ticket. Anybody in here ever did that? Anybody in here had to go and call it into the floor? Wait for your ticket. Anybody go that far back? It's really crazy when I think back to what that required. All right. Haynes, Nichols, Ashley. All right, some people in here go that far back. That's crazy. That's great. Kudos to you, right? It's a long haul. All right, so let me go through these numbers real quick. And you can take a picture of this slide when I get it totally filled in. So just follow along with me. The opening price is going to be something we're really going to dive into when we start looking at trades here in a minute. But we're looking at the open of the year, the open of the month, the open of the week, the open of the day. And I will look at that on the E-mini S&P, the mini NASDAQ, Dow, and then whatever markets that I'm going to trade. That's a high level way to look at it. I'm looking to see if any of those have had higher highs or higher lows, lower lows, sorry, higher highs, lower lows, based on the prices that I've written down, right? Are they all in sync? Do I have divergence? What is the big picture? And so then I go and say, all right, what happened with Europe? What happened with Asia? This is for like a day market, right? Looking at my day market and trying to figure out if I'm going to trade during the day. Not necessarily to adjust other positions, but to try to figure out what I want to do today. I look and find the big scheduled news. I check my personal calendar, like I said. One good resource that that I use is Forex Factory for news, and they break it all down for you, tell you what's important, they give you expectations, previous info, it's color coded. I'll admit I've never traded Forex in my life, but it's a killer site for news if you're serious about really checking in, getting dialed into what's happening during the day. All right, and so then we're going to go to opportunity, right? Whatever tools you've got, whatever scans you're looking for, your setups, use those, right? Then I go, and if I have to go adjust current positions, I'll do that. All that has to happen before I go put money in the day. I already have to kind of know, all right, this is what the data is telling me from the past 24 hours. I might need to lighten the load over here, or I might want to add to a position, or you get what I'm talking about. Here to get is again, I know it sounds boring. Plan the trade, trade the plan. Profit target, entry, stop. And I'll say this, every day, to me, every trade starts as a day trade. And people go, I don't want a day trade, that doesn't make sense to me. But if you were to get into a stock, which I'm going to give you at the end of this, I'm going to give you 3 stocks I'm looking at right now that some I'm already in and one I'm about to get in, but I'm going to give you the stock names and the whys. But every day starts as a day trade. Like if I bought 1,000 shares of Tesla and it went up $50 that day, chances are I'm going to take some profits and lock in my stop. Well, guess what? That was a day trade. If I took some money off the table, that was a day trade. That's why you just got to understand what's happening and not just, it's where buy and hold is dead. We can't do that anymore. You got to pay attention to what's happening in the market every single day. All right, over trading, y'all know it, right? It's like revenge trading. It's driven by belief that more activity is more profit. You got to be selective. And I always say this, like, be a sniper, not a machine gun. Probably too soon to say that. Probably should get that off my slide. Just be selective, right? Putting more trades on is not going to make you more money. It's just going to make your broker more money. Be selective. There's constant chatter in like trade rooms, internet, headlines, all that's going to create FOMO for you, and it makes you take low quality setups. Literally, not to boyfriend it again, but my current long-term boyfriend, he admitted to me a couple days ago that he would just go jump into stocks because he heard it, quote unquote, being talked about. He's a big news guy, and he don't have a bunch of friends that trade the stock market. So that means he was taking being talked about from the internet or from TV. And a lot of times when they're talking about it on the internet or the TV, it's already moving. They're not giving you predictions. They're not putting it out there like some of us put their nuts on the line. They're literally talking about stuff that's already happening. And so that's why he had no firm belief in putting on new positions, because he didn't know where to look. And he was losing money left and right because he was making his trades based on what he was hearing on the chatter. And that led to overtrading for him, right? Which is what will happen to you. It's when your mind's so fried from the guesswork that you just put logic to the wind, clicking buttons out of frustration, which is like somebody will say, I blew up 2 months of work in one afternoon. It took you a long time to generate that cash. Think about if you took 2 months of salary and just walked into the casino and you said, I feel like it's black, and you put it all on black and you lose it. You'd lose 2 months of your hard-earned pay on a guess, and you throw logic to the wind, and that no one would do that, right? So if you wouldn't do that with your hard-earned money from your paycheck, why would you do it in the stock market? There it is again. Okay. So here's the way you do it, right? If you're going to day trade, a lot of this is going to be tailored to day trading, right? Enter 1 to 3 high quality setups per session, and walk away once you finish the plan and it's executed. Then just win or lose, go away. Overtrading dilutes your edge, burns your mental capital, burns your real cash and your mental capital. So one thing I would say to do is set a max trade count or time window. Like one thing that I religiously would do is three trades in a row, and I put it on here. I'll absolutely stop if I have 3 losing trades in a row today. And if you know me or you've been around me for the long haul, that is exactly, I'm talking like 2005, 2006, 2007, all the way up to probably 2010. I was running a trade room, and I would put that out there. Like in a day, if I had lost 3 trades in a row in my room, I'd be like, all right, y'all, I'm tapping out. I know y'all paid to be here all day long, but there's nothing, something's wrong today with my strategy. So I'm out, I'm done. I will not trade past 11 a.m. It's a pretty good strategy if you're day trading, because most of the volume comes in the mornings. It's easier to spot trends. I will not take more than 3 trades each day. Whatever your rules are, man, just, pick some rules, put them in place. Okay, all right. So we're gonna go through habit number 5, and then we're gonna switch gears and go and talk about a couple of time-tested setups in the market that are literally based on the clock. So you guys give me a JJ in the old questions box. I always want to say chat box, but it's questions box. Give me a JJ. I'm gonna take a sip of water real quick. Tell me that you're here with me. You got this. You're getting ready. You got your notebook out. You're about to get crazy with the notes on what I'm about to say. Yes, I really did take a sip. All right, giddy up. They're rolling in now. I appreciate all you people that are with me, that are listening and being interactive. That always helps you feel like you're out here on an island sometimes when you're presenting. But you guys that are there with me, I appreciate you. All right, so final habit we're going to cover: take the loss, move on, let the winners run. I put within reason, right? My favorite one: hope is not a strategy. When the trade fails, get out. Don't practice anything on hope, that's for sure. Take the hit, wait for the next opportunity. Biggest mistake you can avoid. And please, for the love of the 8-pound, 6-ounce little baby Jesus, do not move your stop when it's about to get hit. Been there, done that. If you have your stop, say you chose a percentage-based stop or a dollar amount of risk, especially if you're basing it on key market levels like key support or resistance that you've identified, however you identified it, that's the real risk of the trade. If the market comes and gets you, and it will sometimes, take a knee, take the loss. This is how you end up blowing up accounts. This is how you end up taking that 2 months of work and losing it all in one day, because you let your ego step in and take over, and it just doesn't work like that. My biggest win and biggest loss, well, I can't say that now, but all happened in one trade, and it was in the 2000s. I was trading gold futures, and my mentor said we couldn't put a stop in. He said, look, it's too volatile. If we put a stop in, we're going to get stopped out. Here's the real stop. If you want to put it there, then we're going to get taken out. So you just got to let this thing run. And he gave me all these reasons why. And I was like, all right, I'm in, dude. So, it's probably at that point I was in my 20s. So there was like one of the biggest trades of my life. And actually I was in my early 30s at that point, right? Put this money in, that sucker started running. We were getting paid every day. I couldn't believe it. I would come in, it'd be like, we'd be up 10,000, 13,000, 15. Like, this is the kind of money where I've got, a 2-year-old, and I'm in shock at how much money we're making, because I'd never seen that kind of money in my life. It's in such a fast pace. And then we came in one day and it had corrected. And I said, okay, well, it's not still going up. What do we do? He said, we do nothing. We can't put the stop in. The real stop will get taken out. It's too volatile. So we said that day. He said it the next day. By the third day, all the gains were gone, and we were headed into lost territory. And that was it, right? So manage the winning trades, right? You can't exit early out of fear, but lock in some gains progressively. And I did not in that trade. Like, I just went in and sat on it. And you know, it was a big aha moment for me on how the market can give and she can take. Don't exit too early because you feel good or because you hit your daily goal, right? That's a big mistake to avoid. I would think about it like this, you know, if your rules are in place and you've made what your target was for the day, then just hold the last one. Once you get out and you followed your rules, if you get out, just go, just leave the building. But if you want to stick with it and see if the market continues to trend outside of the time that you set or the number of trades that you set, I'm not against that, right? I mean, I've done it before. I just think you've got to be very cognizant of, you know, getting out early or making sure that you are paying attention to what's happening in the market and that you're following your rules, and you'll be fine. All right, so I use this leg out strategy, and you can do it this way, or you can do 2/3 and 1/3. You can do whatever you want. The point is you're trying to finance the trade. I got long Ethereum, probably 2018, and I legged out a lot at first, and because it just was running in our favor, and now I'm just in a long-term hold with it. I will add to the position when it corrects, but I legged out so many times that trade has been financed. If it were to go to zero tomorrow, I'm not going to lose money on that trade overall because I took so much profit off the table in the beginning. And so I learned early to also trade the Dow futures, and the first part of the trade was like finance that part of the trade, lock in a profit. Third part was the trailing part, right? That's the part where you let it run. So let's look at it, for example, and I'm not talking about options or ETFs right here, right? I'm talking strictly about the futures, the mini contract in the Dow. And so it's very simple, right? So it's simple math. And in this one, I just used a mock example, 10 contracts, just to keep the numbers simple. And I highly recommend if you're going to test futures for the first time, that you just go with the micros, because they're cheaper to trade than the mini contract now, and it's a good way to go in there and get your feet wet and understand how the market moves. Price is still the same, you're just trading the micro. It's less risk. Obviously, it's less reward, but it's less risk. Okay. So the math's pretty simple. And I'm not going to run through it because it's the goal is, in this particular example, if you bought 10, you want to sell 1/3, trail the stop. And here it is broken down, right? So you can look at the math, and the goal here is to just lock in the profits and let it run. Lock in the profits, let it run. Hard stop orders, I already said this, not mental ones. When you're testing a new strategy or just getting started in the market, you most definitely got to put that hard stop in. Middle stops will not cut it. If you're new to trading, that's what we call it. A middle stop is, it means that we're going to get out when we think we're wrong, but we really won't, you know, we won't really get out then, ever. I don't know anybody that puts in a middle stop and then actually executes at that exact time, because you got to be on it all the time, right? I mean, what if the dog pukes on your foot? True story. If you get up and leave and the trade, even for a fraction of a minute, you get your butt wiped. You can't predict your surroundings around you, especially for day trading. Losers average, losers, my good friend Paul, he's so smart. Don't add to positions because they're losing. Limit the risk, but don't add to the problem by piling on more just to average your entry price. Now that's different than adding more because you're in a long-term buy and hold, ain't leaving till the fat lady sings. I'm not talking about that. I don't consider that a loser. I'm saying when you're down and you just start adding to the position because you feel like when it finally goes up, you're gonna have a home run. That makes no sense for nobody. All right, so if you can follow those 5 core habits, you're not gonna have a problem getting consistent in the market. You're just not, but you gotta have them. So let's go over some time-based setups, and I think I have 15 minutes left, so we're gonna go. All right, so heads up, there's a pop quiz at the end of this section. First person to answer correctly is gonna get swag from me at Trade Thirsty. So put a LFG in the questions box if you're ready and you got your pen and your paper out. LFG for let's freaking go, of course. Let's freaking go. All right, so let's take a look at time-based trade one, using the opens to spot major trend shifts. Okay, so in this first example, I'm going to use the SPY. And if you have not used a concept like this, I suggest you really dial in right now, okay? So the opening price of the SPY this year was $589.39. And that opening price is the ultimate benchmark on an up or down year in the market. And you should do this for every market that you trade. If you're in a position for the year, or really if you're in a position, you know, for the last several years, if you see that opening price dropping on the opening of the year, chances are you're in a bad trade. Now, so to be clear, these numbers are not today. This is just an example of how the open works. So today I think the SPY opened up around 660. So, so clarity, right? Let's just say hypothetically, even though the first number is correct, the SPY opened up at 589.39 this year. And if the current month was 616 and the current week was 628 and the present day was 631, what do you see? Higher, 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 right? I mean, as a day trader, of course, I'm going to consider a 30-minute price action, 5-minute for trend confirmation. But the opening price of a 30-minute, 5-minute, 1-minute chart, whatever you're looking at, a yearly chart, the first traded price of that time frame is the benchmark. So this is where the story shifted this year. And if you had taken that concept, you'd have seen it coming. The yearly open for the SPY was 589.39. So if you look at this chart, you can see that the major shift was about to happen when we had an open below 589.39, and that happened on March 4th. It opened up at 579, and it all tracks to lower prices, right? We found the bottom, we rebounded, but you can see that crunch zone where the market got back to its yearly open, and once again, it had to get back above that to see higher prices. It had to get back above that 589.39 to really get that push. It crunched kind of all into that normal spot, and then we started seeing it run. Like I said, it's at 660 right now, so the proof's in the numbers. Here's a couple of insights. You can take a picture of this. I don't need to read this. Here's a note that, right? The spider is going to be slower than the Qs in big rallies. That's the most important thing you need to take out of that. The spider is going to be slower than the Qs when we have big rallies. So let's put that to the test, right? Let's go look at the Qs. On January 2nd, opening price, same concept, y'all, opening price, 514.30, ultimate benchmark. I got a big white arrow up there pointing at it, right? Once again, same as I said before, this is not present day. Actually, I think today opened around the 590 area, which means higher, 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 right? But if you map it from this, you see we're still in that bull zone if you were to write all those numbers down in order. Current year, current month, current week, present day. I urge you to go do this test in whatever you're in. Do it every day. Get in that rhythm. But the low of the year was in April at 402.39, and that's a whole lot of room to the downside, right? If you look at the yearly open of 514 all the way down to 402, once that shift got made, then you gotta treat it. You just gotta treat it like it's a day trade, right? Until it makes its flip. And remember in the SPY, I said the opening price on March 4th was below the open of the year. And that was like the big sign that it had turned negative. Well, the Qs triggered lower open on February 28th. They were actually a few days ahead of the SPY. So it's important to track those major indexes as well as the markets as you're trying to track them and know when a trend shift is right in front of you. So when I say the tape is just the price action, right? QQQ was ahead of the SPY by 4 days. It 100% started forecasting that sharp sell-off. And I did the same thing here for the Qs that I did for the SPY for you. High upside, but higher volatility, right? It's higher volatility. There's a couple of stocks I'm going to talk to you about after closer to the end of the presentation, if you stay with me. And they're all NASDAQ based. Okay, so here's a pop quiz. First person to answer this correctly is going to get that swag I talked about. Based on this method I just talked about, open, high, low, and close as far as price action, which did I say was the most important? I gotta say this disclaimer though, I'm only gonna ship in the US, so don't be dropping me an address in Thailand because I'm not shipping there. All right, it looks like Sheila is the winner. Sheila is my mother's name, Sheila. Fantastic. All right, Sheila, put your email address in the questions box for me, and I'll make sure that you get some swag here from me at Trade Thirsty. The open is the answer. They're piling in now. All right, I appreciate you guys for playing and paying attention. All right, so here's number 2. I call it the lunch rush rally. Here's what it looks like. All right, so before we go into this trade, let me clarify. Peak volume hours happen between like 8:30 and 10:30 Central Time. And of course, that translates 9:30, 11:30 Eastern. I'm going to be talking in Central. So trading during these times of day helps you avoid chop. But this strategy is all about figuring out the big picture for the afternoon session. Time is central. Everything I say is going to be central. And in this particular setup, it's 12:30 to 1 o'clock Central. I call it the lunch rush rally. And the market has a tendency to rise between 12:30 and 1, and that translates into higher moves into the close roughly 63% of the time. And so out of the first 150 trading days of this year, the SPY has closed higher between 12:30 and 1, roughly 52% of the time. So 158 days in this particular example, we had 78 days that we could factor in. And so what if you knew that the market had a 63% chance of rallying into the close? So it's already positive 50% of those days. The next hour shows a 63% chance of it continuing higher. And while this doesn't guarantee a follow through, obviously past performance not indicative, future results. Once this, in this example, the SPY rises in that window, there's a strong chance, north of 60%, that the rally is going to extend toward the late afternoon. And so how can you use this information? Well, you could hold positions from the morning with a 63% chance that they're going to continue higher into the close, or you can put on a new position at 1 o'clock Central with a 63% shot at catching an up move. And so it's all percentage based, and any trades that you're making out there, you really need to be looking at things like this. You need to be looking at everything that you can do to put the odds in your favor. All right, so time-based trade number 3. I'm just going to give you a quick portion of this, and it's a NASDAQ open breakout. And before I get to the end of the presentation, I'm going to let you know, I'm going to share with you an opportunity to learn more about this NASDAQ trade I'm about to cover in a masterclass I'm teaching later on this month. So this NASDAQ open breakout, I'm going to give you the basics. Now this trade can be, I would say this is not for the faint of heart. This trade is a fast one. It's for experienced people. If you're just going to test it in the waters, I would say test it. I'm not a big fan of paper trading. I know that, and I'm certain that you're not going to have the same feeling in your gut when you lose money paper trading than you are with your real money. Truth in that. But when you're testing a new strategy, I got no problem with anybody putting it to the test with, with a demo for get 30 days under your belt to make sure you understand the rules before you go put real money in the market. So you're going to track the specific data off the market open, and you're going to define the risk based on the range. You're going to confirm you're not on top of major numbers, call them key numbers. That's the yearly open, the weekly open, the high of the year. I keep talking about highs, right? It could be the low of the year. It could be the low of the week. It could be when earnings happened, some major move got made and that created a big support or resistance number. That's all I'm talking about when I talk about key numbers. Identifying rules-based numbers in the market that are going to create resistance on the way up and support on the way down. Preset your profit targets and your stop, and then at the end of it all, we gotta be patient, right? We gotta be patient. Plan the trade, trade the plan. So these are just the basics, right? I'm gonna give you an opportunity in a minute to jump in with me and get down and dirty on this exact trade. But you can take the high and the low of the first 10 minutes off the open in the NASDAQ futures. And like I said, you could actually use the cues for this, or you could use you don't have to use the actual mini contract, you can use the macro. The cues have been pretty consistent in this exact trade, so just depends on if you have the kahunas to do it. So you watch for a breakout higher and lower over the next 15 minutes of that bracket that you set. It's a breakout trade basically. Anybody here make breakout trades? Breakout trades are they're one of my favorite overall. It's one of the first trades I ever learned was to trade off a 30-minute bracket off the open, and that was the first trade I got really consistent at, and that trade still works today. This one, that one's works better in the S&P futures, the SPY or the micros. But in this one, it's very simple, right? Let's just go back. You get the range. Make sure you're not on top of big numbers. Preset your targets and your stops, and then watch for the breakout. And so imagine a trade that happens in roughly 15 minutes each day. A trade that has an average of 4 out of 5 win rate. It produces anywhere from, I don't know, a couple $100 per contract. A trade that has a very, very specific set of rules with a predetermined risk before you enter it. When I say predetermined risk, it's just the other end of the bar. And if that's too much risk for you, then don't take the trade. So now I'm going to tell you how to do it. You don't have to imagine a trade setup like that. I just gave you 100% the basics of it. That's how simple it is. Are there caveats? Are there other things you have to know and understand about how the futures work all day long? But if you want to get serious about futures, then what I'm about to tell you is for you. And so we've talked about a lot of stuff today. I hope it was helpful in your journey. I personally have a black book full of trade strategies that I've learned and tested over the years from working with some of the best traders in the world. And this trade I'm about to offer you is the one that I learned 15 years ago. It was in the NASDAQ. It's the one I just went over the basics of. It's a simple strategy, trading off the open, and it's in my new training I'm going to release for you for the first time to the community here at MetaStock. All right, so I'm just going to go through it real quick. I think I have like 2 minutes before he turns me off. Here's what happens in this class that I've created. It's the Futures 101. Like I'm going to take you through everything you need to understand about how the futures work. I'm going to take you through time and price and how you use it in your trading investing, like on steroids, stuff that a lot of people, I don't see a lot of people talking about it. It's things that make sense to the market and the way that works. I've got some simple AI techniques that I use. People are afraid of the AI. They're saying they don't need it. That's bullshit. You need it. I'm going to show you how to use some very simple things that can change the way you get your data, can change the way that you track your performance. You're going to get some pre-game materials to prep for the class. And I taught this class last month, so I've already got one on demand. You could go watch immediately after you purchase. The next 2 classes are going to be about a month from now, so that gives you plenty of time to go watch the on-demand stuff. And there's 2 live sessions, October 17th and the 24th. Those are also going to be recorded. It's a one-time fee. You can go to tradethirsty.com/NQ. And I'm going to go through real quick for you a couple of the bonuses, and then I'm going to give you these trades before they turn me off. You're going to get this how to trade off the morning. It's a whole checklist for you. I've got a trade tracker template. I'm going to show you how it works and how you can use it or how you can build your own. I'm going to show you the exact chart setup with the order types that I use. It's tradethirsty.com/NQ. It's $395. Here are the 3 trades, all right? I'm a Tesla bull, 100% a Tesla bull. I have been for about 5 years. If you watch any of my videos, you'll know that. Tesla is, I've just predicted Tesla going to 600 this year. So I predicted it when it was around 360. I predicted 400, 420, 480, 530, 580, 600. So Tesla, that's my first pick. Second pick, OKLO. This has to do with nuclear. You'll have to go read about it because I don't have time to talk about it. But this trade, I started talking about it when it was around the $72 area. Thank you to my friends over at MetaStock for popping this chart for me at the last minute. You guys are amazing. This is a MetaStock chart, how clean it is. OKLO, this thing, this could be a 10X. I'm going to say it right now for the first time. This is going to be my 10X pick, OKLO. And then AMD. NVIDIA is over. I could give you a lot of reasons why. AMD is going to happen next. Learn it, master it. If you can't afford to trade it, learn how to trade options on it. AMD, number 3. All right. Oh my gosh, I'm 1 minute behind, but I think I did it. And there are, Kumar, hope you got those, your three picks. There it is, the overview, tradethirsty.com/NQ. I had so much fun teaching this course. It went from 1 session, turned into 2, and then another bonus session. I'm sure the second go round is going to be even bigger and better because we're just really getting into adding content to it as I get the questions of what people need to know more about. So you can go and be with me on round 2 in October. If you can't make it there, the recordings are included. You can get it on demand right now, of course, plus all the bonuses. And of course, you can join me live. All right, Jeff Gibby, how'd I do?
Amazing, fantastic. One question we had from Kumar, and I wanted to I'm just going to put them on the chat. It was Tesla, OKLO, and
AMD.
AMD. That's the one I was.
Look, Tesla 600 is the number, right? And if you go to my site, which is tradethirsty.com, of course, I hope you join me on the NASDAQ course first, because that's when you really get the nitty gritty. But if you go to my site and just look at our free videos, you'll see I put that 600 out on the 13th and made this first leg prediction, and we've hit those numbers already. So, and then of course, in this class, I'll actually, even though it's all futures based, I'll go through AMD and OKLO in this class. Let me write that down so I don't forget.
All right.
Those who are with me can understand my reasons. AMD and masterclass. All right, Mr. Gibby.
Thank you so much, Jeanette.
This has been fun. Thank you for inviting me. My first time on my cherry at MetaStock.
Yeah, and I would say after today, you literally did it for a living, so now you're a professional speaker.
Okay, so now I can say the next time I share my notes, you can be like, Jeanette, your notes are shared. At least it wasn't me, blessing out one of my kids and saying things that You don't want people to publicly see. I don't care if they see my notes.
Yeah, it's not a big deal. I would show my notes on purpose. I'm like, here, you can see my notes. And Greg was like, he got on there and was like, do you know you're sharing my notes? I'm like, are you listening? Anyway, good to have you, Jeanette. Thank you so much.
Yeah. Okay. All right. Thank you. I'll stop sharing my screen and I'll make sure I don't close your room down for you. How about that?
Okay. Sounds good.
Yeah.
Thanks.
Thank you.
Okay. You go ahead and, oh yeah, let's go ahead and transition over. Make presenter. Kind of looking at one of these stocks that Jeanette just gave us. So any case, let me go ahead. Where are my slides? Oh, here we are. Okay. All right, moving on. Okay, we did talk about the Traders Forum, the tradersforum.com if you want to join the community. Number 1203. In any case, I'd recommend it. Great resource. Do want to say thank you to our other sponsor, Stocks and Commodities Magazine. They've been supporting the event and been doing a great job since 1982. Well, they've been supporting our events for probably about 15 years, but they've been publishing articles on technical analysis since 1982. You can find out more about them at traders.com. We are, of course, MetaStock. We've been rated the best software price category. We've been rated that for 32 years in a row. We've talked a lot about really good add-ons that are available as part of the conference, and we're offering an extended trial on MetaStock. $75 will get you a delayed chart with intraday, the ability to scan and find opportunities right now. You can take advantage of it at metastock.com/conf promo. If you have any questions, we would love to talk to you. 800-882-3040 or metastock.com/sales chat. Mr. Lewis, would you like to help me give out a prize?
Yes, sir. Yes, I would.
I think I've got here, let's see. All right, let's pull into the virtual prize bag. Next time it's going to be a real prize bag.
All right.
Let's see. Do you remember yesterday we had Martha Stokes come in and she did a little bit of.
Of course, I remember Martha Stokes. One of my favorites.
We're going to give her one of her courses, the Methodology Essentials course. And we're going to give it away to a lucky winner. I have asked her a couple times, what's the best course to go with if you want to learn from Martha? And she says it's this course. So let's go ahead and give one away. And what I need from you is any number between 1 and 4,913.
Okay. Oh, did I? Nope, there it is. Okay, according to the Google random number generator, that would be 184, 184, in favor of those who registered early.
Michael M. with a Gmail account in the USA. So, awesome. Okay, let me make a note of that real quick. I tried not to lose any. Okay, perfect. Thank you, Mr. Lewis.
You're welcome, sir. I'm here if you need me.
All right. Our next guest is Rahul Arora. Rahul is somebody we've been doing a lot of business with over the last several years. Very, very great technician. We just developed an add-on for him, and he's going to talk quite a bit about how it works, how to kind of find and identify trades. Rahul is he does a really good job. Appreciate all the work that he's done. Rahul, let's get you started.
Hi, Jeff. Can you hear me?
I can. I even heard the little tap tap.
You did?
Yeah. There you go. Oh, full suit. I don't know if you got a note of the dress code today.
Okay, so here's what we do with our members.
What's this?
Every time there's a Fed meeting, and I think there's going to be a 25 basis point cut, I wear a suit.
Ooh, okay. Well, there you go. I didn't get
and I haven't been able to wear it on a Wednesday market chat for our members for a few months now, so here we are.
There you go. Yeah, it's been a minute, hasn't it?
Yeah. Anyway, how are you guys doing?
I'm doing good.
I'm doing good, and I have to also comment that you look a-okay, #1 sharp dude in that suit.
Thank you very much, Greg. I I'm aspiring to the fact where Greg says about me when you mention me tomorrow, Jeff, when Greg says he's one of my favorites.
Oh, okay.
Just like he did about Martha.
He always does that.
I say that about very few people, and you are well to aspire to that.
Stop it. Stop it. And now this has become a tradition too, Jeff. Every time I do a MetaStock presentation, I always start with a Diet Coke.
I start with the coffee, but I've just been doing that for a while. All right.
Well done. Let me know when you can see my screen. You should see the velocity splash screen.
Yeah. Looks good.
You do see it?
Yeah.
Okay, I'm just going to change over to the MetaStock chart. Let me know when you can see that.
I can see that too.
All right, so let's start.
Yeah, we just talked about NVIDIA. Okay.
So you let me know when you're ready.
Go. I'm out of the way. It's your turn.
How much time are you running a bit late? Because I can compress mine to get you back on schedule.
We're not really running that late. Do what you need to do.
Okay.
If anything, we're 4 minutes late, but there's only one speaker next, so like no stress.
I'll hand everything over to you at say 10 minutes to the hour. Does that work for you?
That's fine.
Okay, and then you can explain
You
to
can even
people.
go longer than that if you need to. Don't worry about it.
Okay. Welcome everybody. Thank you, Jeff. Thank you, Greg. It's always a pleasure to be here with all of you. These sessions are some of my favorites because I really get to interact with everybody and I get to kind of get feedback on what we're doing and what we've been doing for the last 10 years, 12 years. My partner, Vince, and I. Vince will be on Friday, and he's going to talk to you a lot about technical analysis, money management, a lot of great things like that, mindset as well. My presentation's a little bit more technical in terms of we're going to be looking at charts for most of the hour. But I want to start with the headline that Vince and I have been obsessed over the last 12 years in how we can make retail traders better traders. We want to help retail traders get to that next level. A lot of you are close and you've gone through that life cycle of a trader where you start out, you lose a lot of money, then you lose a little bit of money, then you break even, and then you start to make money. What we're trying to do is really just compress that life cycle to a point where it's manageable for you. You don't blow up your account, and you have a consistent way of looking for trades in the market and then trading them according to your risk tolerance and your comfort level. Before we do any of that, just a friendly reminder, I know Jeff reminds everyone at the beginning of each of these sessions that what we're doing here is not financial advice. We're not giving financial advice. We're looking at the stock market from the lens of technical analysis and some of the other lenses as well, but this is what we're doing. This is not what you should be doing. Our job is to teach. Our job is not to give advice. Okay. My name is, there you go, Rahul Arora, creator of the velocity system. So just a bit of background on me. And as I said, I'm going to keep this part of the presentation fairly short because I want to get to the charts. I graduated from university in 1998 and decided that it would be a great idea at the time to become a CPA. So I joined one of the big four accounting firms, and luckily I was put in the audit stream where I was able to learn a lot about a lot of different companies. And I've learned a lot about how management does certain things to make financial statements look a certain way. Excuse me. Now, if you recall, going back to 1998, we were just about to start the dot-com boom. So my colleagues and I, we didn't have a whole lot of work to do back in those days. We're early. Nobody trusted us with anything, not surprisingly. So what we did was basically watch the markets all day. If you recall, those were the days where eBay, Cisco, JDS Uniphase, Research in Motion, these were all high-flying stocks. What else was Agilent, Lucent, and every day you'd get up and the market stocks are up 10%, 11%. It had never happened before, at least not in my lifetime. So I said, well, easy money, especially with these things called options. Well, little did I know that the market makers were just a little smarter than I was at the time. They're still a little smarter than I am now, but the gap is closing. The gap is closing. So there I was. I took my $10,000 that I had and turned it into about $1,500 fairly quickly. And I said, there's got to be a better way to do this. So kind of went through that whole CPA stream, got my license, and then decided that I wanted to do something else, and I wanted to do something with the markets. So around 2011, 2012, met Vince just on an off meeting, and we connected, and we decided that we were going to try to sell our knowledge or help investors or help retail traders become better traders by sharing what we had learned. Again, talking about the compression of that journey that the trader goes through. So I've been trading independently since 2000, and first few years were really tough when you don't know a lot about options, when you don't know about technical analysis. And if you recall, 2000 was right around the time that the whole Enron fiasco was happening. And we started to have this general distrust in the market, and the markets then melted down in 2001. And it took a long, long, long time for those markets to recover. So the learning experience, and I've heard this in other fields as well, if you can make it through those kind of times, those kind of lean times, if you can struggle and even break even during those kind of lean times, when the markets turn in your favor, and they did for a bit from 2003 to 2008 before the great financial crisis. And then from 2010 onward, once we went to the zero interest rate policy, and the tech boom, the second tech boom started, and now we're in that third tech boom of artificial intelligence. If you can make things work during the lean times, then when the good times come, you're going to do really well. And I'm going to show you exactly how well we've done just this year trading this particular system that we're going to be talking about today. So let me bring up, this is our spreadsheet that we use to track our trades with our members. Just going to take a drink, excuse me. And the first thing you'll notice on these trades is there's a lot of green under the P&L section. In fact, I have to scroll below June 30th to see the first red. And even that first red that you see is after we took profits on a trade. So the previous speaker, Jeanette, who I'm very, very grateful to, because Jeanette actually got us started in the business, and we owe her a lot. And she did such a wonderful job on the presentation. So she was talking about taking profits along the way so you don't give all your money back. There's nothing worse than seeing a trade that goes in your favor, but you don't do anything about it, and it closes below your stop loss level, which is below your entry. Okay, we're going to talk about how all these indicators, how all of these signals form in just a moment. But let's go back to the spreadsheet. So starting in Feb of this year, Corsair was our first trade using this particular system. So we released the system to the public. I'm going to say Jeff and I were working on it March, April, so it would have been around May or so. But during that time, we have been testing it. And one of the benefits that we've had with the rise of AI is that we're able to back test these things in a very efficient manner. And we can manipulate a lot of numbers, change a few factors here and there, and get a really good idea for which lever we need to pull, which button we need to push to make the system a little bit better. What we're really trying to do is we're trying to come up with an edge that we can exploit on a regular basis. It doesn't have to be a big edge. It just has to be small enough, or big enough, pardon me, that it gives us a meaningful level of profit on a consistent basis. You'll go on Reddit and you'll see these people that bought Open Door at $1.50 or 50 cents and averaged down, drinking the hopium that someday it would get back to $10, 20, whatever the number is that they had in their minds, and they're doing extremely well. I've seen a lot of millionaires created from people just buying OPEN. But I can't rely on that. I can't rely on just one company maybe making it out of the weeds and growing again. There's a lot of companies that were promising, especially during the SPAC phenomena from a few years ago, that have never recovered and likely never will recover. So we're looking for something where we can have a meaningful edge that we can exploit over and over and over again. So if we look at some of our trades from this year, starting in Feb, Corsair, and you can see most of these trades are using a very conservative spread strategy on the options. We do have a mix though. We have, for example, and we just took profits on one of these trades today. Where is it here? Mag 7. This is traded on the London Stock Exchange. And if you look at the date, does anyone know the importance of the days right around April 9th? I can't see all the comments, but I'm going to assume some of you are saying, oh, that was right around Liberation Day. Yes, it was right around Liberation Day when we started accumulating it, and it was the QQQ5. So these two are 5x leveraged ETFs. So it's basically like buying a call option that doesn't have an expiry date. Can they go to zero? Yes, they can go to zero on the off chance that the NASDAQ drops by 20% in one day. These are daily rebalance. So unless the NASDAQ drops and the Mag 7 drop by 20% in one day, your comments will still have some value. So the goal here, the goal here was to start buying when we were hitting the bottom. I didn't know if that was going to be the bottom, but the goal here was to start accumulating, and if the price went down further, to average down. If you look at what would have happened if you had bought QQQ versus TQQQ. Now TQQQ started trading right around, I want to say early 2010. If you had bought $100 of TQQQ every day, or $10, let's say you bought a small amount of TQQQ every day. That amount today averaged from every day starting in 2010. Again, this is all done now so much more easily using things like ChatGPT. Those TQQQ shares, let's just call them the triple leveraged Qs, they would have a return of about 30x, 30 times what you invested. So if over the last 15 years, even if you had invested $1,000 a year, that's $15,000 over 15 years, that $15,000 would be worth just around $450,000 now. Whereas if you had put the same money in the Qs, the non-leveraged funds, your return would be significant, but nothing closer. I think your return would be somewhere around 75,000 or so. So we've also noticed that in the most recent run up here. So from the April 10th and April 9th entries here, if I go to our chart. So this is, let me bring up the Qs. So what you're seeing on the chart is, you were seeing the 20-day simple moving average. It's not important. We don't need it. This is a very, very simple chart. You can see I have no indicators on there because you're not going to need those indicators. You're going to need basically trend lines and just reading what the chart is telling you. That's it. So if I look at the low, the absolute low in this series here, which comes in around 402, and where we are currently, which is about 581, it's a gain of about 42% or so. Okay, and might be a little bit more as we're getting closer to 600 now. What do you think your gain would have been had you bought the QQQ5, which is the 5x leverage, and held that to today? You would think, oh, it'd be 5 times that, but it's not. It's actually quite a bit more than that. It's about 8 times that. And it's because of the compounding effect of this strong momentum to the upside. So what happens with a lot of these leveraged products is they have something called volatility decay, which means that every time the price fluctuates, and in this area here, it goes up, goes down, goes up, goes down, because of the way the rebalancing happens, you actually need more of a gain on the leverage product to catch up to the gain on the non-leverage product. But when you get a move that happens like this, and it's fairly, this is a very, very strong move, 40% in the course of 6 months, just about 5 months. When you get a strong move like that, and I think there is another strong move coming where the next stop of the NASDAQ is more likely to be 600 than 580. When you get a move like that, your leverage plays, just like with options, with call options, your leverage plays will always, always outperform, and outperform by a bigger margin than what the leverage is. So it's similar to what you get on gamma expansion on call options. But that is just a part of what we're doing here. So again, going back here to our performance for the year, QQQ5, Mag 7, HIMS, this was a velocity entry, and that's the system I'm going to show you shortly. Again, this is calendar spread, so you can see it's not just always vanilla call and call debit spreads, put debit spreads. We don't do a lot of credit spreads, I got to be honest. As much as I love capturing that theta along the way, it just seems like we've had better luck with some of these other strategies that are more gamma and delta enhanced. We've also been, we've been experimenting with reverse calendar spreads as well, and we can share that. If you'd like, we can share these offline as well. Just send us an email and we can send you a list of all those too. We did a buy right here on GameStop. That turned into a profitable trade. This one here on Peloton, excuse me, a bit more complicated. We ended up breaking even on that one. And on Google, where's the Google trade? SoFi, you can tell we've had a couple of good trades on SoFi. There's 23%, QQQ5, SoFi here, 131%. I mean, these are not insignificant gains. That is what I'm trying to emphasize here. And how did we get here? So let me take you back a little bit here. Going back to my experience starting in the year 2000, I didn't even know what I didn't know. And that is, I think that is where most traders start out. They start out with a little bit more confidence and a little less knowledge than they actually need. If you go on some of these forums on Reddit, etc., and some of the subreddits like options or short squeeze, etc., you will see people asking questions like, I just bought 10 call options of this. I'm not even sure what I'm doing. And my question to them is, why did you even enter that trade if you don't know what you're doing? So for us, this is not gambling. This is serious business. Yeah, we like to have a fun along the way, but we're trying to sharpen the axe every single day so that when an opportunity comes, we want to capture it right away. And there was a wonderful opportunity that came on IBIT in, I believe it was August of last year, where it was a risk-free, 10% annual return. It's just the way that the options were priced that day. It was the first or second day that options were available on IBIT, and the in-the-money calls were priced so richly that if you sold the shares, sold the in-the-money calls, bought a put, you could guarantee yourself a 10% annual return risk-free for the next 2 years. So those kind of things don't happen often. And of course, when there's an opportunity like that, it does close up very quickly, because bonds at the time were paying around 4%, 4.5% maybe. So to get double that on basically a bond. And we did that live during one of our, it was a Wednesday training session that we had. We noticed the options and off we go. A lot of our members took advantage of that. So the problem with a lot of traders and trading is a lot of people will follow what they're seeing now on social media, and back when I started trading on TV, you'll hear somebody talking about something, the hot tip, and you'll get into it. What likely is happening in that case is the people that are talking about it and the people that are giving you the hot tip are likely the ones selling you their shares and you're providing exit liquidity. So that happens still a lot on X. You follow some of these people that are options gurus. Basically, they're using you for exit liquidity. Using lagging indicators. So we've talked about this, and again, we want to look at something that is a little bit more forward-looking rather than looking in the past. Now, fundamentals, great. For longer-term traders, fundamentals are fantastic. Even for swing traders, I think the fundamentals have some merit, and we are adding those into our analysis. But if I were to quantify my analysis, I would say 50 to 60% is technical, 20 to 25%, 25 to 30% is fundamentals and the general mood of the market. And the last 10% is maybe looking at unusual options activities or looking at areas where the options might be mispriced, or looking at support and resistance areas where we are likely to overcome one of those. So that's where I am, 60 to 65% 60 to 65% technical analysis, fundamental analysis, and unusual options activity, and support and resistance for the rest. What is it that makes these institutions a little bit different? You're not going to be able to compete with them because they've got much more computing power than you. They've got many more PhDs and rocket scientists working there than you could have. But what if we could see what they're doing and kind of predict or try to predict what they're going to do next? And that is where price action comes in, and that is really what sits at the heart of this system, is that we're trying to predict moves, but at the same time, we are rarely in a trade where we don't have our risk defined from the start. And looking at things like accounting scandals, looking at things that are unpredictable, for me, it's become very difficult to own shares outright. Now, the QQQ5, Mag 7, a little bit different because one, they were cheap and cheerful. Two, the goal was to add to them. We didn't expect, or I didn't expect the market to just take off the way it did. And if I do want to own the shares just straight out, I will actually use options to do it. So I will either use a deep in the money call, or I'll use something like a zebra strategy where the theta decay is mostly neutralized. And we talk about all these things in our market chats, and you can see a lot of these things show up in the option strategies that we have here. So coming back, pardon me, let's close that off. So coming back here, let's talk about this chart and what you're seeing on this chart and how you can start taking advantage of the exact system that we've used to get all these gains here, okay? So this is a chart of the Qs. Like I said, there's nothing on it. There are no indicators. You're seeing a few different things. One are the colors on these bars. I've got candlesticks, you can change them to bars, whatever is more comfortable for you. And you're seeing labels. So this one says long plus. You will see just plain long, you will see short plus, and you will see just plain short. And these are exit flags here. Okay, there's the exit short. So the most recent trade, now this is on a daily time frame. When you get this system, we actually offer two different indicators. One is an intraday indicator that allows you to trade on a shorter time frame, and the indicators and the programming that we've used on that one is a little bit more sensitive to intraday changes. as opposed to this one, which takes into account a higher view of things. So what do we do when we get something like this? So there is right around here, this is our Liberation Day drawdown, okay, and we were short on the Liberation Day drawdown well before Liberation Day. So this is March 11th. And what you'll find even more interesting is if you look at a chart of the Russell, you'll see that our short actually showed up about 2 weeks earlier on the Russell than it did on the NASDAQ. So if I zoom into this area here, you can see our short shows up on the 25th of February, okay? Now, are all shorts and all longs created the same? They're not. What I want to do as a conservative trader, and I'm going to give you the rules here. These are the 3 rules. It's very simple. 1, 2, and 3. You look or you scan for long and short setups. Jeff's going to tell you all about the scanning feature and how to do that. We're going to look at support and resistance. That's 2. Now this is, you only have to move to 2 if you're a more conservative trader. 3, decide on the strategy that is comfortable for you. Okay, as I said, options are comfortable for me, but you may not feel that you're confident enough and have enough options knowledge, and the options arena is filled with sharks and all kinds of other perils. So if you don't feel comfortable, the easiest thing to do is buy the common shares. Or if you feel somewhat comfortable with options, just get an in the money call option. You have a defined risk. If something really catastrophic happens, the market doesn't open tomorrow, we go to war, we do this, we do that, you can sleep well. So going back now, so those are the 3 rules. Rule number 1, look for the signal. So here's the short. How do we assess support and resistance? And as I said, you're not going to need any indicators. The only thing you'll need are trend lines. So we take our trend line, we go to the most recent pivot low to the left of the trade that we're considering. Okay, so I'm looking at the most recent well-defined pivot low. Okay, so there's one there, there's one there, there's one there, there, and there. Now, I could use these ones here, but this looks like it's more a series. I'm sorry, I'm just looking over. Greg was saying, Rahul, the questions panel is where you'll see all the comments. Greg, thank you. Let me see if I can pull this one out here. Just bear with me a second. Greg, thank you. Oh, this is so much better. I forgot to ask. I forgot to mention, please, if you have symbols that you would like me to look at, please put them in. And this is one of the things that Vince and I pride ourselves on, is that we do these sessions live. We're not doing screenshots. We're not looking at historic stuff. We're doing this live. This is live market data that we're doing this with, because we're so confident in the system, in our systems and how they work. So let's get back to this. We get this entry here. We draw a trend line from the most recent previous well-defined pivot low. To get even more conservative, you would like to see that pivot low the same color as the direction of the trade that you're taking. So for example, you want a short trade, ideally we would like to see this as a red pivot low, but in this case, there's enough confidence that we have in the trade here just because of the way the price action is showing. We've got the confirmation on the signal that we can take this trade here. If you're a little bit more risk inclined, you don't have to wait for this to be taken out, for this low to be taken out. You can start with a half position or full position when you get that signal. What is likely to happen in a choppy market, and we haven't had a choppy market in quite some time, In a choppy market, you will get stopped out more often than if you had waited for confirmation. So my belief is this: why take a risk on a trade when I can wait for the trade to show me which way it wants to go? Okay, so personal preference. Your preference might be completely different. You may say, I don't care, I like this, I'm taking the trade right here. And you would have done fine. You would have done fine in both cases here. So you get into this trade here. Now for ETFs, my personal risk tolerance is 5% from where I got in. So if the entry on the close of this day was 215.41, I don't want it to go any higher than 205 and for me to still be sitting in the trade. Okay, for ETFs, my risk tolerance, 5%. For stocks, my risk tolerance is 10%, just because of the beta on individual names versus ETFs. My risk tolerance is a little bit higher. I want to give the stock or the ETF or the Forex pair or the cryptocurrency, whatever it is that you're trading, I want to give it room to breathe and room to work out the kinks. Now, when we get something like this, that's great. That's a bonus. We take profits whenever we hit market maker pivots, for instance. You could take predefined levels, 5%, 10%, 15%. With commons, it's a little bit more challenging. When you have 100 shares of something and you hit a profit target and you take off 33 shares at 5% and this thing bounces back up and you've got to now close out 66 shares at a loss, you could have a break-even trade when you could have had a really good trade. And I think that's where having options and having options that are liquid give you a little bit more flexibility. You can roll out the options, you can sell against those options, and you can sell against shares as well. With the options, I just find, one, the risk is defined from the beginning, which I really like. Now, if any of you know accountants or engineers in your personal lives, you know that we are some of the most conservative people and we kind of think about everything that can go wrong. We're afraid of our own shadows. That's how risk averse we are. So for me, I like to have the defined risk from the beginning. So on a call debit spread, I know that this is my risk. I know that this is my upside, but it's not really my upside, because when it starts to move, and I'll go back and I'll show you an example of this with SLV. Look at where we started SLV in April of this year. It was a January 2026 30-40 call debit spread. The price of the stock at that time was right around 29 and change. Okay. We then did an adjustment. We took profits on that 30-40 and rolled it to the 32-42. Same expiry, but now we've got profits in our pocket and we're still in the trade. Okay. We did another roll. We did another profit take here, the remaining half from June 5. We then rolled it again to a 35-45 call debit spread. So along the way, we've taken profit a few times and we're still in the trade, and SLV at last check was trading around 38 or so. So that's a high conviction play. And if we look at the chart of SLV, which we will momentarily, you can see why we're still in that trade. So let's go back to IWM for a moment. This is the short that comes in 2 weeks before the short on the NASDAQ. What I've found is that on the way down, the small caps will indicate the move a little earlier than the big caps. So small caps lead, big caps follow. However, on the way up, the big caps gave us the entry much earlier than the entry on the small caps. Now, the small caps generally tend to react favorably to interest rate cuts, et cetera, et cetera. Most of those small caps are not even profitable. I would say about 50% of them are profitable. So on the way up, that's exactly what we noticed, that the Qs and SPY, pardon me, the Qs and the SPY gave us the entry on a long well before we got the entry on the IWM. Why is that important? The reason it's important is once we get the entry on the Qs, we can then start looking for the entry on IWM. Okay, so you get in here at 213 and change, and if I go back to our spreadsheet here in the velocity column, you can see there is, and this is followed, this is shared with our group. All of this stuff is documented in our Microsoft Teams channel. There's the trade adjustment today on Mag 7. There's a new trade ID on TIPT, and these are all listed on the spreadsheet. So we're not going back and marking these things up again. This is all happening in real time and all documented here. So there's IWM. We marked it at 214.83. That's when we got in. And there were a couple of options that, a couple of trades that we could consider. It was just the commons was one. A 200, 230 July call debit spread, and the trade option 3 was a Jan 2026 235 call. We can look at prices. I'm sure they're a lot higher than where we are now. AMD, same thing, right around the same time. AMD just took off, so that was a great trade for us. So going back here, you get in at 213 and you hit a low of 173 within about 30-ish trading days. Could you have made money along this trend here, along this trend here? Look how quickly it goes down. Even if you had just one put contract on an out of the money option, say you had the 200 put, it got down to 174. Imagine how much money you would be making just on that one single $200 strike put contract. Now, we're not trying to catch this move here. Okay? We're trying to assess that when everything lines up and we get the long signal, we just want to make sure that we have higher highs and we have higher lows along the way. Okay? That is what we're looking for, an upward channel. So we get this upward channel, but you can see we get failure here, nothing here, and we get this move here. Now, let's go back to the principle that we were talking about. We want to see a break of a clearly defined previous pivot high, ideally in the direction or the same color as the trade, the direction that we are looking to trade in. So if this was green, this would be ideal, but because we have this, what I would call almost a double top here, I'm going to draw this trend line. As I mentioned, no indicators, just trend lines, okay? There's our trend line there. There's our long. You can see it comes back and tests our patience for a bit, and then we go, let me take right off. Now, where would you know that this is the place to take profit, this is the place to take profit? No, but Jeff and his team have programmed this so that you will see resistance 1, resistance 2, resistance 3 along the way, or you can simply use market maker pivots as well, or you can use predefined, and again, write these down. Mental stops, just like mental price targets to the upside, are not as effective as targets that you write down and put on a post-it note on your computer or put in a journal that you have. And if you're not journaling, why aren't you journaling? Because when I'm going back and looking at these trades, I think to myself, okay, well, why did I take that option position instead of the other one? And I'll look through my notes and I'll say, oh, that's right. It was because those options, the short calls that I sold, were higher implied volatility. So I was collecting theta along the way. Somewhere along the way, it flipped on this date. This is why I got out of the trade. Okay. All right, let me see what questions we have here. Of course, our friend Michael from Ottawa is here. Michael, it's always great to see you. Jeff, I've got a lot more to talk about, but I do want to get to some of these questions. I'm going to do them, and then I'll come back to this here. But I will be out of here in about 9 minutes or so.
You're in charge. It's all good.
Okay. All right. Let's start with a question. So Kumar was asking about day trades. Jeff will tell you more about that and how this particular system comes with 2 different indicators. We thought if we're going to do 1, why not do 2? Because 2 is way better than 1. Kumar was also asking about Datadog, AMD, Oklo, and GLD. Let's start with GLD, because the last entry on GLD on this system, you have to go way, way, way back. And I think it might be 2023. So there's that 20-day simple moving average that we have on there. Nothing special. You don't have to have it on there. And we're back in May. And here we are. There is our entry. And let's zoom in and look at this entry a little bit more closely. Okay, so there's our entry there at 177. So about half of where we are right now back in 2023. So same assessment that we do. Okay, in this case, the assessment is a little bit easier because we actually have a clearly defined pivot high in the same direction of the trade, and it's the same color. So we get this small fail trade here. And if you're paying attention, you'll see that when the trades don't work, we're trying to minimize the loss, especially with options. This in and out here from 180 to 175, 180 to 178, etc. These are acceptable levels of loss, especially if you're trading with options, because when we get this trade here, so there's our entry on the close of that bar there at 180.87. My stop loss goes 5% below that 180.87, which would be about $9, so down to 171 or so. So right around here, let's draw in our stop loss here. Okay. So there's my stop loss. There's the entry. We go up, we come back, we never get close to testing our stop loss level, and off we go. So going to a question that Kumar was asking. Kumar, I personally don't have the personality to day trade. I just find it too stressful. I've tried it, and just because of where I am in life, when they're with kids, responsibility, older parent, I just can't be tied to my computer. And a well-seasoned trader made this point to me, and it kind of just clicked with me, is that if I day trade GLD from here to here, and I get in, say at 183, and I'm out at 183.50, and I make 50 cents, yes. If I annualize that in terms of how long it took me to stay in the trade and to get out, it's wild. The percentages are wild. But I'm less interested in catching just that 50 cents, and I'm much more interested in catching this entire move from 183 to, and I love when I have to do this, when I have to scroll this many times to get to the current price of 338. That's the move I want to catch. So on the day trading side, if that's something that you enjoy and you have to have a personality for it. If that's something that you enjoy doing and you can keep up with the stress and the decision making that's got to be so quick, if that works for you, hats off to you. I commend you on that. It just doesn't work for me. But we wanted to design something that would fit your personality. So if day trading works, we have a system that you can day trade with. But as I said, I want to catch the big move. I'm not in it for 2 points or 50 cents or 3 points here and there over the course of a few hours or a day. I want the 100 points. I want the 130 points, because if I had an even deep in the money leap on GLD back in 2023, I would have over 200, 300, 400% profit. Let's say I matched it with some out of the money calls as well. Now, the run has been incredible, incredible. Gold I've always kept as more of a hedge than a spec play, but when you get breakouts like this, and you can draw your trend line there, let's do it live. You draw your trend line in that area here. We're going to try to catch as many of the highs as we can with that trend line. When you get this breakout here, these things are hard to ignore. So you can see gold for the longest time, and oil was doing this too. Oil was just boxed into a channel, and it probably still is boxed into a channel for the last little bit. But at some point, it's going to break out, and we're going to wait for the proper signal. All right, other symbols. Let's see, Datadog. Okay, DDOG, not as smooth as the one we just looked at, which was gold, but Datadog, high volatility, high beta stock here. There's the entry back on, I want to say that's June, I'm looking a little closer, yeah, June 4th. And the entry comes right around a close of 119. We actually had this on our list. One of the members in our group brought up Datadog. It was Russ that brought it up. I just didn't like it. I liked everything. I just didn't like the options pricing on it. Because of the high volatility on these stocks, the option spreads can get somewhat wide, and we stayed out of the trade for that reason. But nothing wrong with that trade. Here's your entry. You put your stop loss at 10%. Can I tolerate it down to 110? Yes, I can tolerate it down to 110. And you can see we never actually get close to it. Now, this I think is an earnings move here. My general thoughts on earnings are that I don't want to be in earnings unless I've already taken profits along the way, and I don't mind giving back the gains that I have in case earnings go against me. So I typically like to be out of earnings before the announcement. So here's our entry here, and I know I've got to get out by here. So I'm buying, in this case, very likely just a simple call, nothing fancy, just a simple call, because I know that even if the price doesn't do a whole lot along the way, I know that just because of the fact that we're coming up to earnings is going to have an increase in the implied volatility and the premiums and the call option that I'm holding. So I'll say that again, just because of the way we're coming up to earnings, I know that I'm going to have a bit of a tailwind with the increased implied volatility in anticipation of the earnings announcement. So here's our entry back at 121, and you would have gotten out at say 135 or so, and it looks like it's about 12 to 15 trading days or so. So that is what we're looking at when we meet on Monday, Wednesdays, and Fridays with our group. These are the details that we get. These are the weeds that we get into, and there are a lot of smart people in the group that have been trading for a long time, and they're all willing to share their experience and their expertise. And I feel like I learn just as much from them as we feel we teach. Kumar says it's a good stock because it goes to 140, comes back to 110, goes out. So Kumar's figured it out. He's figured out there's a bit of a channel that happens here. And when it gets to the lower end of the channel, he buys. When it gets to the upper end of the channel, he sells. Juan was asking, what moving average do you use on your chart? Juan, I just put the 20-day simple moving average on. You don't have to. It just gives me a bit of a reference, especially on a daily chart. But again, you use whatever you'd like to. If you want to have the chart exactly this way, it's the 20-day simple moving average. Before I hand it over to Jeff to explain more details about this, Jeff and his team, I cannot say enough about what a wonderful job they've done in programming this. They've managed to color all the bars the color of the trade as long as you're in that trade. They've managed to put resistance levels. They've managed to capture trend changes exactly the way we had envisioned. And we're constantly working on this. So if there's a change that is happening because the market is suggesting that movements are happening in a certain way, we will adjust this and then you will get a new version of it. Jeff?
All right, where's Jeff. My mute button? Where's my mute button? Can't find it.
That's okay. Do you need more? Do you need more time to get ready? Oh, I can go for another hour if you need.
No, you're certainly welcome to. But do you want? I think what would be a good thing to do is actually talk a little bit about how to get this the system.
Okay, I'm here. I'll hang out here for questions. Go ahead.
All right, sounds good. Here, let me go ahead and kind of transition over here just for a second. All right, you should be able to see the SPY right now. I've been kind of paying attention to what happened after the Fed rate announcements. Let's go ahead and kind of just jump over here to talk a little bit about velocity, kind of what's involved, what's included, all that kind of good stuff. Brand new add-on, been well received. Of course, with any add-on we release, it's going to be able to scan, and you'll be able to scan either for the daily or the intraday alerts. Regardless of the version of MetaStock you're using, you'll be able to scan right now, find opportunities that exist in the market right now. It's good for long and short detection. Also does have a complete built-in expert advisor commentary that'll give you real-time alerts, signals. It'll tell you exactly kind of what to do, where your stop losses are going to be. It'll plot those targets on the chart for you. Makes it really, really easy to kind of go in. First of all, find the opportunities, which ones have an opportunity in the market, and then execute the trades exactly for those ones that you like the best. So I love how well it works with MetaStock and how kind of well designed it is to help you identify that trade, figure out what to do with that trade, figure out how to execute that trade exactly right there on the spot. So you do get the stop loss lines. You get both a daily and an intraday version of this, and visual signals to keep you on your game. As part of the package, we are going to include, for new Trading Winds customers, we are going to include 1 year of the Trading Winds membership. That includes the daily trade ideas, 3 weekly live sessions, on-demand technical analysis training, and option trade ideas. 1 free per customer. Great value. This thing is, if you go up to tradingwinds.com and subscribe to it, it's, I believe, $97 per month. It's just included in the price point. So it's $1,200 of value just included. And I know a lot of us get the trade recommendations here at MetaStock. I know a lot of MetaStock users that are showing up every week to kind of see those sessions live and ask questions. And it's such a great opportunity to kind of be involved with it. So normally the retail cost on the Velocity add-on is $19.97. The membership for the Trading Wind service would be $1,164. We did sit down and record a little bit of a boot camp. If you need it, we will include a free trial to MetaStock. That trial to MetaStock is normally $265 value. We're just going to throw it in for free. So the total cost retail would be $3,427. Today, though, we're going to give it to you for $997 as part of a conference promo. We're going to back it with a 30-day money-back guarantee. You can buy it at metastock.com/velocity. You can give us a call at, I got a little thing in my 800-882-3040. And you can also go to metastock.com/saleschat. So, Rahul, I want to say thank you for all the work you put into this. And
Jeff, I want to say thank you to you and William and the rest of the team. You guys are so great. I had trouble because I got the new PC, which, by the way, has been a hit because I didn't get knocked off.
Yeah, no, I noticed that like everything was running really, really smooth. So
yeah, the support was great. Jeff, I got to tell you, every time I call the support line, not only do they always solve my problem, they're friendly, they're efficient. They don't really care that I know you, and they still help me.
Well, they actually help you better if you don't know me. Just
I don't know
for
about
what it's worth.
Thank you so much. Thank you so much for having me on. I so appreciate our partnership.
Awesome. Me too. Thank you, Rahul.
Be well.
MetaStock.com/velocity, everybody. 800-882-3040. Give it a go. 30-day money back guaranteed. Give it a go. If it doesn't work for you, which is, you're going to like it. But if you don't, there's a very low risk, high reward type of a scenario. You get the membership for the trading service, which is worth it right there. The boot camp, all that stuff. So metastock.com/velocity, 800-882-3040, or metastock.com/saleschat. All right. Thank you. I'm going to go ahead and do this real quick. And let's go ahead and talk a little bit about, well, we'll do stocks and commodities this time. I want to thank Stocks and Commodities Magazine for supporting the event that we've been running this week, as well as all the events that we've run for the last 10 or 12, 15 years. I don't know. They do a really good job. We appreciate all of the guys over there and the gals over there that have kind of helped us over the years. You can find out more about Stocks and Commodities Magazine at www.traders.com. Mr. Lewis, I think it's prize time.
I think it is.
You also, I guess Jeanette rubbed off on me a little bit.
Yeah.
You also know.
Well, you can't. I'll tell you what. I grew up in Nevada, where no one says y'all, and I moved here to Texas, and still no one says y'all because I live so close to the Mexican border. I think it's mostly not Texas, but you can't help saying y'all when you live in the South.
Or when you hear it a little bit, yeah.
Yeah, I could never get away with saying y'all until about 2 years ago. Now I just throw it out willy-nilly.
I'm gonna okay.
Oh, but
so
y'all all. That's a good one. Y'all all.
Okay. We do have. I was getting my spreadsheet ready. I was going to look at it, but I realized just now we're going into our final speaker of the day. Do you know what that means?
That means it's time to do a great MetaStock giveaway.
Cool.
Yeah. By the way, when I say MetaStock, I'm talking about that award-winning charting and analysis platform designed to give traders an edge in the market with powerful tools like real-time scanning, backtesting, forecasting, and hundreds of custom model indicators. MetaStock helps you find the right trades, test your strategies, and act with confidence. Whether you're a day trader, swing trader, or long-term investor, MetaStock uses the data, tools, and insights to trade smarter and maximize your results.
You practiced that, didn't you?
Yeah, it just came to me.
Okay. You forgot to add, it's been rated #1 32 years in a row.
It's been rated #1 32 years in a row.
All right. I'm not proud of that at all. Anyway, let's go ahead and this is we're going to give away 3 months of MetaStock, 3 months of Learn MetaStock as well, and we're also going to give 3 months of the Zenith news service. It is really probably one of the best news services and news platforms to give you fundamental and news and just all that kind of stuff that is a little bit more
available to the private trader for sure.
Oh yeah. So let's do this, Greg. I'm going to scroll through these comments. We're going to reward somebody for asking a question today or making a comment. And just tell me when you're ready for me to start scrolling through these comments.
Okay, ready, go.
Okay.
Stop.
Okay, let's see. It is Chuma O. When Jeanette was talking, he actually correctly identified that the open was the most important.
I recall that.
Let me copy that, and I just sent that over to the thing. I'm going to go ahead and chat it over to me real quick. And Greg, thank you for the assist.
You're so welcome. I would like to remind people this is the last presentation of the day, and don't fail to, I'm sure you'll say this after Dan's presentation. I don't know what I'm talking about. Just to remind you, come back tomorrow. We'll be here tomorrow morning.
Well, yeah, we have another great lineup, if you would have believed that. All right, thank you, Greg.
Excuse me, I'll just back away now.
Yeah, no, I appreciate it. All right, Dan Passarelli is going to take it home for us tonight. Dan Passarelli has a methodology that he's going to talk about that's kind of a momentum resumption system. So I'm not going to kind of let the cat out of the bag too much. I really do like kind of the methodology that he's going to kind of discuss and go through with us today. Dan, are you ready to go?
Yes, sirree.
All right, good. Let's see. We're going to make you the presenter real quick.
Thanks, y'all.
Dan, where are you from?
I am not from the South.
Okay, I just didn't know exactly where you were from. So
I was being a poser right there. I'm from the suburbs of Chicago.
okay, cool.
Yeah.
And I'm guessing y'all wasn't part of your dialect every day either.
No, it was not. But, you know, I'll throw it out there every now and then. You never know.
Let's see. I cannot. Oh, there we go. Okay. It's like, I can't see your screen. It just popped in. Okay. I'm going to go ahead and get out of the way. It's your turn. Take us home.
All right. Hey, friends. How are you today? Are you feeling good? I am Dan Passarelli, and I'm really glad to be here, right now, at this very moment. And I'm really honored to have this opportunity to speak with you about this key way that I've simplified trading for myself and for our student traders. It's the easiest, most straightforward system that Market Taker has ever created. Now, before we get started, I need to point out options are not for everyone. Read characteristics and risks of standardized options before trading. Get a copy of that by emailing investor services at theocc.com. Don't trade with money you're not prepared to lose. This is my promise to you. I'm going to share with you how to spot high profit momentum trade opportunities using stocks, ETFs, options, futures, or even Forex, so that your trading is completely simplified using this tested trading system that we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I'll share how you can take the next step so that you can start getting immediate results. What do you say? Is that a fair deal? Hit that questions box for me and give me a big old yes if you're liking what you hear. Does that all sound pretty good? And don't be afraid to participate here, please. Hit that questions box for me and give me a yes if you're liking what you are hearing. Jason says yes. Excellent. Andy says yes. Jennifer says yes. These people are just popping right in here. How about that? Good. Got a couple more. Excellent. In order for you to get the most out of this, I ask that throughout this training and afterwards, make this about you. Turn off your cell phone and close Facebook and all that, and let yourself get immersed in what I'm about to share. Let it in. And be sure to stay until the end of the training. The most important things I'll talk about come later. And if you have a question, I'm going to hold them all till the end, so write it down, and I will get to them, I promise you. This gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading. I worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well, and get to be on TV a lot, which is kind of fun. I got my start down on the trading floor of the Chicago Board Options Exchange. I traded there for a lot of years. Like, these pictures literally span like 30 years of being involved with the trading floor. There I traded some huge stocks like Ford Motor Company options, AT&T options, Carnival Cruise Line options. And I traded options in some of the little ones that no one's ever heard of. And there's a little secret here. The little stocks that no one's ever heard of, that's where you make the big money, when you know about opportunities that no one else does. Now, I want to jump into a discovery I made. Does anybody know what this formula is No, good, because we're not going to talk about it ever again during this presentation. We don't need to, and here's why. I have an extensive background in trading, but the fact is, I wasn't born some sort of mathematical genius. I wasn't. When I was a kid, you know, I was a bit of a troublemaker now and then. Maybe I still am. I got good grades. I didn't really have to study usually, but this is a story about a time when I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids in the class would play poker. That's all we did, all class. And man, I'm going to tell you something, I made a lot of money in that class. But the problem is, with math, it builds. If you miss something this week, you're lost next week, and you're hopeless the week after that. So needless to say, I didn't learn a whole lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn that much. Now fast forward to my freshman year of college, and I had to take an algebra refresher. Oh, that is so embarrassing, right? I always prided myself on being, you know, smart. Algebra is not that tough, but I had to take a refresher. Now, one thing you may not know about me is that I was the first Passarelli to graduate college. And I almost wasn't. This is where the story gets a little interesting. Now, I am a competitive kind of guy, mind you. So sophomore year of college, my cousin Michael, who was 1 year younger than me, he was in my calculus class. Calculus! I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin would be a credit ahead of me. And maybe, just maybe, he would end up graduating before me. There was absolutely no chance I was going to let this happen. So I put on my A game. I was ready to work as hard as I could to win, which you're a trader, right? You're kind of like that a little bit, maybe. It tends to attract some competitive folks, right? But there was one other factor that came into play that was a saving grace, and that was that I had a good teacher, one that I could relate to. He made it easy for me to learn, and I did. I ended up acing calculus, and I had the honor of being the first in my extended family to graduate college. Thank you very much. Now, like I said, I'm not a mathematical genius by nature, but I've spent a lot of time in option trading, 30 years. And I do whatever it takes to create a great trading system for myself and for you, for that matter. So I studied the math of some things like the relative strength index to see how they tick, other stuff. And I realized there's some hidden keys within these equations that can predict when momentum will continue. So now I am going to share that hack with you. The concept of RSI is it measures up strength versus down strength. And the idea is too much up strength can lead to an overbought scenario, which can lead to a reversal back down lower. So the hack is there's certain patterns that can prevent momentum from burning out and can actually lead to continuation. And the one that I created that does this is the red knockout. It's a momentum strategy that can lead to outsized profits. There's a simple four-part chart pattern, really easy to identify. In fact, by the time we're done here, you're going to know exactly how to spot it. And the profit targets are easily set as well. This is the easiest system you're ever going to know. You can use it with whatever you trade. Options, stocks, ETFs, indexes, futures, even Forex. So let me start by listing the steps in the red knockout, and then we'll zoom in and go through some examples. This is important. Write this down. Step 1 is the setup candles. That's 3 or more green upday candles that make up what we call the green run. Step 2 is the red knockout or the RKO candle. That's a red candle with a smaller body than the 3 preceding green candles. Step 3 is the trigger candle. That is a green candle that takes out the red candle's high on higher volume. Step 4 is the confirmation candle. That is a candle that opens above the high of the RKO candle and signals trade entry. Let's break this down step by step and go through exactly how it works. All right, first is 3 green upday setup candles. So we've got 1, 2, 3, all green. These I don't have filled in. I think just to show you what it looks like later, I've got it filled in, maybe even on a dark background, just to give you a little idea what it might look like on your screen. Okay, that's easy, right? Everybody gets this. This is super easy. Now the next step, if the pattern is continuing to play out, we're going to get the RKO candle. And that is a red candle that is immediately following the green run with a smaller body than each of the 3 previous green candles. Okay, so that is what it looks like right there. If it continues to play out, the next candle in the bunch is going to be the trigger candle. That is a green candle again that takes out the high of the RKO candle. When I say takes out, what do I mean? I mean, it just trades above at some point during the day, the high of the RKO. Could open lower, could open higher, and it doesn't matter. And then if this completes its setup, we're going to get the confirmation candle. That is a candle that opens above the high of the RKO. That signals trade entry. Now, this is American Express. If we have a red knockout setup, what is the first step we look at? And these are not current. These are just some examples that I grabbed so that I can show you what this looks like. Because my goal here today is for you to literally be able to spot these and have the wherewithal to trade these. Good plan, yeah? If we have a red knockout setup starting up, what is the first step we look for? Do you remember? The setup candles. The setup candles are what? 3 or more green update candles. Do you see that on the chart anywhere? Anywhere? How about right there is the first one, and there is the second one. So we've got this one, and then this one's higher, and the third is still higher. We might call this the green run. Now, by the way, these are green candles, but they're also upday candles. There's a difference. Do you know the difference? An upday candle means it closed above yesterday's close. A green candle means it's up from today's open. Those are 2 subtly different things. Are you getting this? Okay. What is step 2? Do you remember what that is? Okay. Well, yeah, that is the red knockout candle of the RKO. If a red knockout candle shows up on the chart, it's very easy to identify. See that? And it means the setup might be materializing. It's a small bodied candle, could open higher or lower. It doesn't matter. Look, this one opened lower than yesterday's close. That's fine. It could have opened higher. The key is that it's down from the open. That is why it's red. Okay. Now, step 3 is the setup candle. That is shown by that yellow arrow. That triggers that the trade is indeed setting up and you're getting ready to time your entry. So we call this the trigger candle, and it's sort of like, you know, like when a marksman is all ready to fire on the target, he gets his finger on the trigger, ready to take that shot. And then, but he doesn't take it yet. He waits for confirmation. So then finally, step 4 is the confirmation candle with the green arrow. Green means go, fire away, right? So let's slow it down a little bit. Let's go over why this works, right? If you're going to really get this and you're going to be able to make this use, I want you to understand why it works. So first, there are the 3 setup candles. So these 3, the green run sets up a mini trend, okay? Like, look, 3 green update candles in a row, big deal. What does that mean? It doesn't mean anything yet. It means that there's this mini trend, okay? The red candle, the RKO, why is that important? Because if it's just green update, green update, green update, green update, it's just going to burn itself out. And the RSI is going to signal a reversal and people are going to trade that and the stock's going to go down. You need that mini pullback to prevent it from burning itself out and to let people who didn't get in yet, give them a chance to get in, which then when they do, that drives price back higher. And that's why, like, it's triggered. It's like, okay, game on. Like, it was up, 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 and then, oh, there's this little tiny insignificant bit of a pullback. And, oh, I guess they're buying it again. So then we just want to wait to make sure that that trend is playing out. And when it does, it's 1, 2, 3, go. And then you're in it and you can ride it out. So let's run through a few other historical examples to see how this might play out in real life so that when you see it in real life, you're going to be able to trade it. This is Erie Indemnity. First of all, is there an RKO setup on the chart here? Anywhere? Do you see it? Anywhere? Anywhere? Where could it be? How about right there's the first one, and right there's the 1, 2, 3, 4, 5th one. This is a 5 candle setup. We've got that mini uptrend starting. Then we got this mini pullback. Now that one, it actually opened higher. It's actually up. It's an up candle. It's up from yesterday's close, but it's down on the day. And I love it when there are those little doji candles. Then we've got the trigger candle, the rally's continuing, and then we finally have a confirmation that gives us the sense of safety. But here's the question. Where do we get out of the trade? Well, I'm going to go over that in a second. We will get out, in this case, where that green line is right there. Now I'm going to show you, there's literally very simple math that goes into it. How about here in CAT? Is there an RKO setup anywhere? Do you see it? Look closely. That's right. There's the first one. There's the third one. Mini pullback. It actually opens higher, but it gives people just a little bit of a breather. And then we're back on and then opens above the high of the red candle. And we can just take it back up. This enables traders who didn't get in the day before to get in to create enough demand for follow through. We call it the red knockout because the red candle just gets knocked out of the pattern. It doesn't matter. And so we look for continuation. Now, as far as entry, we always prefer to time the entry close to the open. More often than not, you're going to see that confirmation candle follow through higher during the day. Sometimes it pulls back, and that's okay. If it opens above the high of the red candle and it pulls back, you're down a little bit that day, that's okay. You still stay in it until it hits your stop loss, which we'll talk about in a minute too if we have time. But you usually get a head start on it if you enter it towards the beginning of the day. This is APEI stock. And if we look here and here, you have 3 setup green run. It's followed by your classic RKO. Why is it classic? The smaller body than the green ones, mini pullback. It's engulfed by the previous green candle, which is actually a nice little benefit. There's a few extra little bonus things that you can look for. And in fact, you know what? I'm going to tell you what they are. Do you mind if I throw you some extra information that's not in the presentation? Does that sound like a pretty good plan? Give me a yes if you want me to give you a little bit of bonus, you know, things that make this actually work a little better. Yeah? All right. Andy, yes. Jennifer, yes. Jason, yes. David, yes. Ernesto, yes. Okay. So if we get, Greg, yes. If we get a candle that is engulfed by the previous candle, and then we break out the next day, that's another pattern on top of this pattern. If our pattern at any point crosses through one of the 3 major moving averages, which is the 21-day, 50-day, or 200-day, or I should say period, because this works on any time frame, that makes it work better as well. What else? There's a couple more things. If I think of them, I'll tell you. Now, what I like about this one, by the way, is that this is only an $11 stock. I forgot about the rest of my arrows here. This is only an $11 stock. Folks who don't trade options, you can just buy the shares. Though the options on this one, when I took the screenshot, were liquid enough also. If you want to use the leverage of options and you know how to trade options, this is an excellent addition to that. The RKO indicator works on all time frames. This is versatile if you're a day trader, a swing trader, a short-term trader. This even works for long-term investors. Now, when I worked on improving what criteria to use for the setup candles, red knockout, trigger, confirmation, I spent a lot of time on it. And it was a really great and humbling experience. And it reminded me of my old boss, Steve Fawcett. You see 2 people here, right? The first one, of course, is who's the one guy that's pretty recognizable here? Anybody recognize anybody in this picture here? Anybody? That is Sir Richard Branson. Not just Richard Branson, no. Sir Richard Branson. Now, the other is Steve Fawcett. For those of you who don't know who the late Steve Fawcett was, he was not only a famous trader, but also a famous adventurer, and he held many world records. He attempted to set one flying around the world in a hot air balloon with Sir Richard Branson. Now, I remember one day, Steve took all of his traders out to dinner, and there were about 45 of us. And after dinner, he asked us, he said to us, why do you trade? And it's not about the money or whatever. The real reason, why do you trade? As floor traders, standing in the pits all day long, my feet hurt, my back hurt. There are people yelling in my ear, getting their spit on me when they yell. Why do I stand there and do that and trade? And he asked, what is your real reason? Is it to have more freedom to take some time off and play golf, or to secure your retirement, or to put your kids or grandkids through college? That stuck with me. So I want to ask you, hit that questions box for me. What is your reason for trading? What can this do for you? Hit that questions box. I am taking a poll here, and I'm going to read the results. I'll just say your first name. You know, I'm not going to tell the world your deepest, darkest dreams. Hit that questions box right now, please. Do everybody in this room a favor. I want some participation here. What is your reason for trading? What are you hoping to get out of this? What do you got? What do you got for me? Hit that questions box for me. David, college loans. Cool. Maybe, I don't know if those are yours or your kids or what, but that's excellent. College became really expensive. This is a way to help pay it back potentially, right? Jason, pass on to my kids. That's a good reason too. You can pass it on to me if you want. That's fine. But if you want to give it to your kids, that's cool. Andy, retirement. Yeah, man. Look, the more you make now and invest it and compound it, that makes a massive exponential difference. Jennifer, give to my church. Okay, great. Look, those of you who are part of organizations that do good in the world, I mean, what better motivation is there for that? Charity, right? Oh, well, I like what Juan says here. It is a great challenge. It is. I used to have this risk manager named Matt, and I was talking to him. He was like one of the owners of this trading firm, and he's like, you know what I like about options, Dan? And I was like, no, what, man? He's like, they're kind of like mental masturbation. It's like, what are you talking about? I didn't say that. I was like, oh, because he's my boss, I was like, oh yeah, okay. And I was like, oh, this guy's kind of weird, but I mean, it kind of is, right? I mean, it's like working the brain. Let's forget that analogy again, but it is a great challenge. Keeps you on your toes, like they used to say you should do a crossword every day. Well, you do option trading every day. That's going to keep your brain working. So anyway, Steve here was a great mentor. Without him in my life coaching me, I could not have become the trader I am today. But there's one thing that Steve was known for saying. I'm still learning. When I met Steve, he was a gazillionaire, super successful trader. But he was always tweaking his process, always learning, always moving forward, always making his trading better for himself and his traders. And I'm thankful for that because I was one of his traders. He kept improving. So I also started the process of improving my exit point. And here's how it works. What we're looking for, think of the red knockout as like the center of the teeter-totter, okay? We got the green run, and then we got the middle there, and then we got the other part of it. We're looking for that green run range to repeat itself after the RKO. So we're going to take the low of the first green setup candle and subtract that from the high of the last green setup candle. We're going to take that sum and multiply it times a haircut, so a percentage. Because we're looking for that whole green run to play out and maybe a little bit more. But even if just like 80% of it plays out, I could take my profits faster, make it more likely to lock in a profit. So we haircut it a little bit. And then we add that value to the high of the RKO candle. Make sense? It's very, very simple risk management. We do that calculation, and I'll show you how this is all. It's easier if it's just calculated for you. I'll tell you about that in a second. So we put that in for the GTC limit order. And then we're going to put in a GTC stop loss. And we're going to do that OCO. One cancels the other. So if I get filled in my stop loss, it cancels the profit taking. If I fill in my profit taking, it cancels the stop loss. Work the system works. And if you're not familiar with some of these terms or exactly how to do some of these things, later I'll share how you can learn to easily do all this and make your exit super simple, the whole shebang. Like I said, I want you to leave here today with all the tools that you need to be massively successful with this. And I bet you do too, right? Would you like me to share what I've discovered? Well, I already did share what I discovered. I forgot that I usually tell you about this at that point. All right, I'm giving you free stuff already, man. Holy moly. Now, in summary, there are a few important takeaways. Momentum trades can yield outsized profits. And this is a time-tested system. So we have the setup candles, red knockout, trigger candle, confirmation candle, and the price target. It's all totally baked right in. But we have a problem. So do you know that there are 6,366 stocks to trade? Did you know that? And if it takes you, say, 45 seconds to spot the RKO on a chart, and you go through all 6,366 stocks, it would take you about 80 hours a day to go through all those opportunities out there. And that's only looking at one time frame. Remember, this works on every time frame. You don't like missing opportunities, do you? There's got to be a better way, right? And I bet you know that. Otherwise, you wouldn't be here right now if there wasn't a better way. So, are you ready for it? The RKO system is here. Over the past 4 years, I've created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the chart along with the price target. We wanted to make it so simple that it is impossible to mess up. So you now have a new opportunity to easily scan for top momentum trades that you would not be able to find without this screener. With over 6,000 stocks out there, it's almost impossible to just happen across one of these great setups. But with this really easy to use 3-step scanner, it makes it possible to find all of them because I've made the investment for you. See, I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before I created the RKO system, I came across one of these setups maybe every 6 months. You know, I'd look at 50 charts a day, but it wasn't on those. I would miss so many opportunities. But finally, I spent a lot of time. I invested both the time and the money to develop this simple, easy to use scanner that you can harness in just 3 steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on the trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. Meet Nick Homburg from Alexandria, Kentucky. I want you to start getting the results that you deserve. Now, our head coach, John, who's a brilliant guy, he's an ex-Goldman guy. John and I shared with Nick what we were thinking. Nick was the first human to ever see the red knockout. In fact, he was extremely incremental in helping us. So Nick said, using scanners, particularly the RKO Daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It only takes a few minutes and it helps me find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the red knockout scanner. So every day, you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of over 6,000 stocks for this setup and makes it possible to find the trades that you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters, and the cross scans to optimize the strategy, and of course, the targets and trade management. So what that means is today, first, you're going to get the red knockout system. You're going to get it, the scanner. And then you're also going to get the RKO Accelerator video course to get you up and running fast. Now, I can put these tools into your hands. I can tell you how to use them. But I know for me, I learn faster when somebody shows me exactly how to do it. So the best thing I can do for you is give you hands-on training. Every Friday for the next year, that's one full year, you're going to attend our online live group coaching class and watch John Kamisik set up RKO and other trades right there while you watch. John's formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund. He is the expert on the red knockout. In fact, he helped me develop it. He's just the kind of person you want to listen to. But I wanted to make sure you hit the ground running and get hands-on training so that you can get immediate results. What Dennis Meitzel from East Peoria, Illinois said is, thanks, great class, exactly what I was looking for. This is about the group coaching class that you're getting as a bonus on Fridays. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. I mean, how would it feel to have top picks selected by John Kamisik, an ex-Goldman guy, every day? So what that means is first you're going to get the red knockout system, the scanner. You're going to get up and running fast with the accelerator videos, and then you're going to get hands-on training every Friday morning. Do you mind if I over-deliver? What I really want is for you to make as much money as possible trading the RKO. And I bet you do too. So every day, we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list. It's a $1,297 value. Plus, at the bottom here in gold, John's going to add a bonus trade from his daily group coaching class every day. So you can diversify your trading, get all the top trades of the day by simply clicking one link to access your curated watch list. So you're going to get the red knockout, you're going to get the accelerator videos, you're going to get hands-on training in the group coaching class, and you're going to get the RKO watch list so you know what the best trades of them are. And finally, this completes everything you need to make the RKO simple to trade. With the RKO indicator, we put the arrows right on your chart to show you the trigger candle, the confirmation candle, and even the exit price target. So all the information is laid out for you. This could not be easier. So you're going to get the red knockout, the accelerator video course, the weekly group coaching, the watch list, and we're going to put it all right there on your MetaStock chart. Plus, you're going to get updates every time we optimize the strategy to make it better for a full year. That is a $7,541 value. Look, RKO works on the following platforms: MetaStock, Thinkorswim, NinjaTrader, TradeStation, TradingView. There's a couple more too. Oh, now you may have noticed red knockout trades, well, they're all for when the market's rising, right? And for that reason, they tend to work better in bull markets. But market doesn't always go up, and not all stocks always go up. In fact, some can have some pretty bearish moves. So I've created the green knockout to double your chances of success. So today, you'll get both the red knockout and the green knockout. So you're going to have the tools that you need to trade any market up or down. So you get the red knockout, the accelerator videos, the watch list, the group coaching, the indicator, and you're going to get all that for the green knockout too, with updates every time we optimize a strategy for a full year. And we're just going to make them in the MetaStock platform or all those other platforms. And you don't even have to do anything. You don't even have to ask. You don't even know. You're just going to get it. Buy now. You can see why this is a steal, even at $10,041. If all this did for you was identify trades that had a profit of 182.1% or 83.7%, even 25.1%, the question you need to ask yourself is, would it be worth it? Yeah, but you're not going to pay $10,041 today. Because you made the investment of being here live on this training and for being one of my action takers, look, you're the elite. You're better than millions of other traders out there. I want you to have the results that you deserve. Get started today for a one-time, small, easy investment of only $990 by going to metastock.com/RGKO. That's for red and green knockout. You get both with this. metastock.com/RGKO. 1, 2, 3, go. That's that. Okay. metastock.com/RGKO. But to get all these bonuses, including the green knockout and everything that comes with the red knockout for the green knockout, so that you can maximize your success in any market condition, up or down, you have to be one of the first 25 members today on this webinar. And you have to take massive action by going to metastock.com/RGKO. Just to recap one more time, when you open your browser and go to metastock.com/RGKO, when you sign up today, you're going to get access to the red knockout scanner. It's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get instant access to the RKO Accelerator video course to get you up and running right away. You're also going to get access to the weekly group coaching, where we go live in the market together. And you can see exactly how me and my team use the scanner to generate profits in the market. You'll also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way you have the best opportunity to generate profits from the scanner by following those exact trades. Further, when you open up your browser and type in MetaStock/RGKO and lock in your traders package, you will also get access to the RKO indicator. This way, while we're coaching you in the live market each week, giving you access to my top watch list, you'll also have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use trading indicator. And like I said, as we run more tests, do more tweaks, as the RKO continues to evolve and we get it performing even better, you're going to get automatic updates for a full year, both to the scanner and to the RKO indicator. Now, lastly, when you join right now, you get the green knockout and all this stuff, the accelerators for the green knockout, and the RKO indicator, the RKO scanner. You can get all those things, but you have to take action right now and be one of the first 25 members today. Go to metastock.com/RGKO, or you can call 1-800-882-3040. That's 800-882-3040. And you can talk to someone on the MetaStock team who are experts in the red knockout and the green knockout. They can tell you what it's all about. Once again, that's 800-882-3040. Now, I'm going to answer questions. If you have a question about anything we talked about here today, if you have a question about getting enrolled in the red knockout or the green knockout or whatever, I want you to put your question in that questions box. And I see there's one from Michael from earlier. I'm going to answer that in a second. In the meantime, I'm going to ask these frequently asked questions. What if I can't install it properly? We literally send you step-by-step instructions on how to use it. Is it time consuming? No, I know you have a busy schedule. I've designed RKO and GKO so you can literally trade the system in about 60 seconds per trade. What if I can't figure it out? Well, you get a video tutorial plus hands-on training live every Friday morning. What time is that weekly group coaching? So it's live every Friday morning from 9 to 10 Central, which is 10 to 11 Eastern, and 7 to 8 Pacific. And if you can't make it during that time, the class is recorded if that's not convenient, or if you just want to go back and review the recordings, because there's great stuff in that class. Now, one other question that I tend to get a lot is, Dan, this is exactly what I'm looking for. I've got a small account. I want to grow this into a bigger account. I see I can do that with this, especially if I use the leverage of options. But I have a hard time coming up with the $997. Is there a way to finance this? And that answer is yes. You can use PayPal and PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in the red knockout and green knockout today when you choose and check out using PayPal and just choose PayPal credit. Just go to metastock.com/RGKO and click the PayPal button to get started now. So again, as a quick little recap here, when you join, when you go to metastock.com/RGKO or call the guys at 800-882-3040, 800-882-3040, You're going to get the red knockout scanner. You're going to get the accelerator video course for the red knockout, weekly group coaching, RKO watch list, the RKO indicator and it calculates out the price target. You put in your own haircut, but it defaults to 80%. But you can change it. If you're more conservative, you can make it 70. If you want to let it run more, usually you can make it 100 if you want. And then you're also going to get the extra bonus of the green knockout. Yeah. And then the accelerator videos for the green knockout too. This is just $997, which we do for this conference. And we don't do this conference that often. We do this conference, what is this, quarterly or something like that? So to take advantage of this, here's what you can do. You can go to metastock.com/RGKO or call 800-882-3040. That's 800-882-3040. Or if you just want to chat online, go to metastock.com/sales chat and talk to the sales team. They can help you and answer all those questions too. Barry, long time no talk, my friend. How are you? I remember. Barry says, I have the red and green knockout. What does the yellow and green arrows mean? So the yellow arrow is the trigger candle. The green arrow is the confirmation candle. So let me just pull it up here. The yellow arrow means, okay, it's triggered, get ready. If the next candle is the confirmation candle, then you're going to get the green arrow. And that green means go. It's time to trade it. All right, easy enough. All right, well, it's time, Barry. Do it. Put in the effort, right? Michael asked earlier, by the time of entry, the price of options could be getting expensive versus closer to the initial pivot low. Yes, this is momentum trading, not value investing. I also do value investing. That is another thing that I do every single day in my IRA. And I do that a very different way than this. This is not buy low, sell high. This is buy high, sell higher, or short low, buy back even lower. This is trading, not investing. So very good observation. You are paying attention, my friend. I like it. I don't just like it. I freaking love it. I love that you're paying that much attention. What other questions can I answer so that I can help you to make the decision to join us and become our next RKO user? Do we have any follow-up questions that I can answer for you? Andy says, about how many trades per day? Very good question. So on like pretty good up days, you're probably going to get a lot more RKOs than GKOs. And it could be anywhere from 3 to 7. And then you're going to cherry pick just the ones that are best. I tell you in the accelerator videos, the cross scans that make them even better, and you cherry pick just the best ones. On down days, you're going to get more GKOs than RKOs. And on sideways days, you're going to get some of both. So I would say on any given day, could be as few as 2, could be as many as 10, if you check both RKO and GKO. Very, very good question. Can I break into payments? Absolutely. Go to metastock.com/RGKO and click on the PayPal button, and then PayPal finance it. I think they still have 0% financing, if I'm not mistaken. So yeah, definitely go and check that out. All right, I probably have time for one more question. One more question. Do we have a final question here? Let me pull up your choices here. Just, you ready to move forward? MetaStock.com/RGKO. Want to talk to somebody on the phone about it? 800-882-3040. You just want to chat? MetaStock.com/sales chat. All right. I think we're good then. Hey, welcome all the new folks who just joined and got signed up for RKO and GKO. Nice job. I saw that there was a couple I'm going to peruse later and see who that was. Great job. Great job.
All right. Thank you, Dan.
All right. Thanks, Jeff.
MetaStock.com/RGKO, 800-882-3040. And Dan, I think you look really good with the green background. It's a good
Thanks,
color
man.
for you. All right.
I like that.
Thank you.
Thank
Let's
you.
go ahead. Let me do this. We'll go ahead and kind of do this. I will go ahead and change the presenter over to me. And just to reiterate what's included with that offer, Barry says he hasn't started using it now yet. Use it, Barry. Give it a go. Normal price on all of that stuff. I don't have the total here. Get it today, $9.97. Give you a free trial MetaStock, a money back guarantee, all of the training courses, the monthly coaching, all of that stuff's included. Give it a try. MetaStock.com/RGKO. Give us a call if you have any questions, if you want to take advantage of any of the offers today. 800-882-3040 or MetaStock.com/RGKO. As we kind of close up today, we do have another really good roundup both tomorrow and Friday. So glad you guys are with us. Tomorrow we're kicking off with a number of really good speakers. In fact, I was looking at the list tomorrow. We've got Zahir starting us off in the morning. We've got Norm Hallett, Jody Samuels, Kevin Nelson, Eric Gebhard, Peter Dalal, and Silas Peters. So another really, really good lineup of speakers tomorrow. We look forward to seeing you there. As we're wrapping up today, any of the specials that we talked about this week, you can get a metastock.com/conf promo. I have a slide for that in just a minute. Do want to say thank you to Stocks and Commodities, as well as the Traders Forum for being sponsors of the event. Traders Forum, if you haven't joined, you should join. www.thetradersforum.com. All of the offers that we talked about can be available here at www.metastock.com/conf promo. Again, MetaStock's been rated the best software program in its price category, and it's got that rating for 32 years in a row. We've talked about scanning and identifying, and every time somebody says they're just using like a trading view or something, I'm like, how do you trade without the ability to scan the markets and really identify those opportunities? Give MetaStock a try. If you buy a month, we'll give you the second or third month for free. Metastock.com/conf promo. Metastock.com/sales chat. 800-882-3040. You're not gonna, if you are disappointed, if you don't like it for whatever reason, you can cancel. There's no commitment. But so many people have loved MetaStock for so long. I've been using it for decades. A lot of our customers have. Good software should pay for itself when you're using it to trade. Metastock.com/conf promo. Thanks for being here, everybody. I look forward to seeing you tomorrow, and have a good evening. You're welcome, Greg.